Oh, oh. Good morning. Had no idea. I was morning, guys. Pre-market movers. Ronaldo. Good morning. Audrey. ER. Just chilling. Erin. Good morning. Good morning. Good morning, William. Good morning, Jason. Good morning, Julia. Bill. Gone to work. Mona. Good morning, Jason. Amber. Good morning. Bonjour. It's good afternoon, William. Good afternoon, William. Good afternoon. Wait, what? It's morning already? Yeah, it's morning already. It's morning already, guys. Um, good morning. Happy Hump Day, Wednesday. Wednesday. Let me see here. Let's see. Get some music going. Good morning, Dan. Good morning, people. Good morning, Aubrey. Let's get some music going. Make sure we're ready. Um, Glad I brought that. Glad you brought the dip phase. Let's go. Merlin phase. Okay, good. Yeah, it's recovering, right? Merlin is back on the list. Most active. The second active. Well, Merlin is right. Second active. Stonk this morning. Let's see here. Where's the music? The music. Good morning, Sid. Hot slots. Let's go. Good morning. Good morning, Sunny. Good morning, Jose. Good morning. Good morning. Waiting for the gamma squeeze Audrin for Mullen. Okay. Good morning. You know what's dipping that's annoying? I JW Nordstrom. Why is that Nordstrom dipping? Stop dipping. We need to sell it at the open. Right? That thing needs to stop dipping. Top of the morning, Robert. Obang, good morning. Good morning. Let's go. Let's give it a minute or so and then we can take a look at some of these names. So Nordstrom, JWN. So we played this one with for earnings. So that's nice. That it's done well, right? One of the top gainers there. INDO we're gonna be watching today. Um, we like it, right? Really volatile stock. SOFI, right? Earnings. SOFI had earnings. A bunch of you guys are holding calls on this, so that's really exciting, right? So SOFI looks good there, and then and then there's more names to look at, right? No diffs allowed, phase. No diffs allowed. Come on now. Nikhil, good morning. Jason Powell to testify in less than an hour. Really happens in less than an hour? Wow. Okay. For some reason, I didn't even want to look at it because I thought it was at the regular times after lunch. Yeah. AMC needs to pump. Yeah. 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 You got in at 18:33, right, for earnings. Yeah. Um, Yeah, that thing needs to hold $18. What is it at right now? Okay, it's holding 18, right? 18. The S&P looked good here this morning. That's all we're asking for, right? Hold 430 S&P here, right? Hold that level. Hey, Mono. S&P holds that level. That's a good sign, right? Needs to hold. Coffee made and you're ready. Come on, let's make these gains back. Good morning, education. Good morning. Good morning. Star, 2 star. Remember what you said about INDO? I don't remember. I don't remember anything. Um, please reach 19 so you can get rid of it. Okay. Well, yeah, we'll see what AMC does at the open. Hopefully, it holds $18. Right? There's just a whole lot of negative sentiment this morning around it, especially on Twitter, social media. Right? Just a whole lot on social media. People are just frustrated. Right? People are just annoyed on social media. So hopefully EMC can turn around here and hold that $18 level and pump it, right? So S&P is looking good. EMC's right. People taking some profits here, especially as Robinhood opens. People selling, right? So we'll see. 7 times yesterday, it held gains and is over $3. Could be solid. Then we really could be. Held above. Okay, wow, that's amazing, amazing. Good morning, Professor. Good morning. Hey, Amber, Trevor. Good morning. Good morning. It's gonna leg up. Okay, sounds good. I don't remember. Yeah. Anyways, let's see. Spy 440 would be nice, Robert. I mean, if Spy pushes to 440, EMC should do well. Most of these names should do really well. right? So hopefully, guys. Don't forget to hit the like if you haven't already. Hit that subscribe if you're new. Share the link as well if you want to. If you want to share the link, let's go. Good morning, guys. Happy Wednesday. Jason, what's the link for power speaking today? Do you know? Like, what site is it? I don't think you can unless you send it to me in Discord. But like, what site is it? Chance of being right, a 50% chance of being right, 50-50. Take your pick. Good morning, FM. SOFI this morning to $20 plus. Hero. Just has options. They do options watch list. That's a new thing for Robinhood. Wow. Okay, that's cool. See, Robinhood is busy working. We're saying when Robinhood lists Shiba. When lists Shiba, Robinhood is busy working on stock market stuff. Saying options and this and that. You broke the like button this morning, Dan. Thank you very much for breaking it. Like. Let's go face. Good morning, Rem. Hope today lost money in Mullen. Yeah, Mullen is trying to recover, right? Sitting above $1 now. Yeah, I hope you guys all make gains today, right? Hopefully. Emma, good morning. Time to get your losses back. Yes, absolutely. Musty, 8:30 a.m. Okay, 8:30 a.m. That's for you though. That's your time zone, right? Musty. Interesting. I'll take a look. Power testimony released. Yeah, I mean we don't again if it's in an hour, right? We can just watch the market and see what the reaction is. If the market is doing some crazy things, and then we can say, okay, well, we need to go watch that, right? And then go from there. Mona, are you seeing this rubbish on Nordstrom here? Why is he dipping? Stop dipping! Stop dipping! Get back above. Get back in the money. Damn. What's going on here? Why are we just dipping? Just dipping. 24.50 here. Get back above 25. Nope, it's not doing it, is it? um, yeah, you're that the village time, Musty. Might get bought out. The battery, no. Audrey, yeah, absolutely. No, you're right. Stop it, right, Virgo? Stop it. Like, what are we doing here? You know, stop with the dips. So we be at 27. You can't even type stop, Virgo. I know. That's funny. Again, so top pre-market movers, guys. I'm gonna refresh this one more time here to make sure nothing's changed. Nordstrom is losing some of that, losing a lot of that profit, which is annoying. So these guys had earnings. They beat earnings nicely, right? Beat earnings. So that's why they're one of the top pre-market gainers this morning. It says, no, there's no news for INDO, right? INDO is just a technical bounce, right? Just an energy play that people like. 10 a.m. Eastern. Thank you, Musty. What's the link for that, Musty? Can you send it to me in Discord, please? Thank you. Hugh, good morning. Gains crew. Are we ready to make this happen today? We're ready, Hugh. Ready. So INDO, right, gapping up this morning as well. I take a look at this name here, but it just doesn't have any volume, so I'm going to ignore that for now. SOFI had earnings, right? They beat earnings, so they're gapping up as well. Again, just be aware that gap ups are for selling. I wouldn't be FOMOing into any of these names at the open, right? Please and thank you. Like, I just wouldn't be FOMOing. So again, be careful, right? And then over here on the most active names, we have names like GHSI, right? 17.7 million in volume, but it's a penny stock, so that's expected, right? Cortez, good morning. My chef man, good morning. Yeah, penny stock. So we can watch this. It's 8 cents, right? With a whole lot of volume, so it's not huge, right? Mullen is back above $1, which is good as well there. So we can watch and see if that thing holds above $1. MOHO, guys. 11 million in volume, one of the top pre-market gainers here today. Small company, 10 million in market cap. Cool. Yeah, let's see if that thing clears 50 cents. We can watch it as the day goes on. Anything else on here? IMPP maybe? Okay, cool. Yeah. Hi, Zali. Bonjour, Yoon. Bonjour, comment ça va? Lovely. Good morning to you as well. Morning. 20 minutes, guys. So plenty of time. If you have any questions, please make sure you do ask, right? So S&P is AMC is sitting at $18 now, 1809, right? The S&P looks good. S&P is pushing into the open here, which is we just need to hold this 430 level. That's what we're looking at, right? Hold. Buenos dias, Chavo. Trick, you can't buy any more. You can't buy any more, Trick. What happened? Like you've been banned from Robinhood with the Discord link, Musty. Okay, perfect. Thank you. Thank you very much. Oh, perfect, Musty. Thank you. Nah. Yeah, so we can watch that. We can watch that when 10 a.m. Eastern. So 30 minutes after the market opens. Okay, cool. So 50 minutes here. La, 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 la. 11 spy, let's see. La, 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 la. Just quickly browsing here, guys. There you go. Yeah, so we can play that when the market opens. Dustin, good morning. Good morning. Why is come on now, Trump? What are you doing? Spice pumping, pumping. People are just taking profits, guys. Right? Imagine buying that thing below, Mono. Like imagine buying below 20, and that thing pumps to 27, 26, right? People are just taking profits, and that's no surprise, right? People will take profits. Like these gap ups, again, gap ups offer selling, right? So people just take profits. Let me do. So, let me know if you see anything on your list, right? Pre-market here that stands out, something you want to watch today. Let me know. Let me know if there's a name you want to watch today, other than the regular ones we're looking at, right? The Nordstrom, the SOFI, AMC's, right? Regular names. Let me know if you see anything else that stands out to you. This morning, why isn't AMC pumping, Nikhil? It's not pumping because of the negative sentiment, right? Negative. So looking at Twitter last night, people were just frustrated with AMC, right? It's just people are just annoyed on social media. It seems like, and that's fair. But again, let's see what happens when the market opens. If we can hold 18 here and turn around, that would be a really good sign, right? Would be a really good sign. They won't allow buys, only selling. Yeah, interesting. It's most of those ETFs you're getting liquidated trick, right? So some of them are getting liquidated, so you lose your money, right? So they're maybe protecting you in a way, but don't think you want that, right? Uh, uh it's over 12 20. Let's go, Dan. Come on, 12 20. 12:20. So let me take a look at some of these names that we are supposed to be watching today. So again, AMC, right? We talked about AMC quite a bit. We know the levels like I don't know. But yeah, so again, $18 here needs to hold the S&P. We needed to hold about 1430 as well, right? So power speaks again in less than 50 minutes here. So yeah, we can watch that. If it's causing some excitement or whatnot, or if the market is just super slow, we can watch it. Uh, is from because the you didn't hear we're still holding Russian stongs. People are buying the dips, Musty. That's what they're doing. They're buying the dips on some of these banks with the hope that these things would be sitting at 0.00000, right? And they could buy them and pump it, right? So that's what they're looking for, Musty. Um, you have you have 100 calls to AMC, Aaron. Yeah. INDO, Raymond, yeah. So we looked at INDO. Again, INDO is one of the top gainers here. So we're gonna be watching INDO today, right? Yeah, yeah. Tricks just wants in, just buying the dips. Um, yeah, we'll see, right? So let's move on and take a look at some of these gainers again here. So far, I need the AMC chart here. So SoFi reported earnings as well here. SoFi, and these guys beat it. They did well, right? So they're off 16% here this morning almost. In terms of levels to watch, $13 is a huge level. You can see that we've struggled around 13 here this morning already quite a bit, right? So 13 is going to be a level to watch. Ooh, what's that? Okay, that's SoFi. That's SoFi. As soon as I said that, SoFi was like, 13 who? Let's get it, right? So SoFi is about $13 here. When phase the ETF soon come. No, just kidding. Is getting to rev 2x and 2x NXTP. Okay. Good morning, Gucci Diamond. Good morning, good morning. Nice to see you again. Nice to see you as well. Come on, Shiva. What's Shiva at anyway? So Bitcoin had a nice. So Bitcoin is at 43.6, right? And Shiba is still holding 26 for now. So we need Shiba to get back above the 30s, and then that excitement returns, right? So risky ETF, yeah, of course. Only YOLOs, face. Only YOLOs. Um, and, yeah, that's the risk, right? That's the risk. That's the risk. Um, Plugging away KVL. Okay, sounds good. Maybe I'll give it some more of a steady play. But okay, sounds good. Here, yeah, we can take a look. A couple of days now. Okay, yeah. So that's SoFi, guys. What else are we looking at here? I'm not gonna look at Nordstrom because we just need that thing to not sell off, right? That thing gapped up nicely. We would like for it to. We talked about this yesterday, right? The hope was that we could hold above $25. We're not really doing that, right? We're sitting around below 24.50. So I think needs to push back above 25. I was hoping for 26, 27 open, but 25 was yeah. So we'll see. Can SoFi reach $15 today? Ken? Of course it can, right? Had some really good earnings, but I wouldn't be looking for that right away though. Right? People would be looking to take profits at the open, right? Again, that's a nice gap up for a lot of people from around $10 to 13. People want to take profits at the open here. Looks good, right? It looks good into the open here. It's holding $13, which is nice. So can it get to 15? It can, right? But I wouldn't be basing my hopes on it getting to $15, right? Maybe in a few weeks, there you go, right, Ken? So I wouldn't be basing my hope on it getting to $15. I'd be focusing on where did I buy? Where's my stop loss, right? What are my plans with that position, right? So again, things you can control. You can control that stock getting to $15, right? But I can control my stop loss. I can control other things, right? So, um, exchange. You did? Wow! You bought that much? You bought $1,500, 150K in rubles. They won't let me buy any more. Trick? Wow! You're a believer. You're a believer in the ruble, aren't you? In the rubbish ruble. Wow! 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 Amazing. I thought you guys would just $100 here, $100 there. 100. Wow, 150K in rubles. How did you even buy that? Because um because I looked at the actual currency and I couldn't find it on mine. So that's amazing that Robinhood let you do that. Good, get out of this and prosper trick. Here you go. Right? I mean, risk, risk, risk. Right? Risk reward. You just have to see what you're willing to take. So let me take a look at INDO. So INDO is doing well this morning. We talked about these. That's only 3 pesos. You went to the airport. You went to the airport. Oh wow. Oh okay. Charge points. Let me take a look at that earnings calendar, guys. Nah. Yesterday a gamble like everything else. Yeah, exactly right, Dan. So yeah. Exactly. Message from my broker. No trade is focused on Russian products. Okay, cool. I want to take a look at the earnings calendar here, guys, and see so we can have that up here as we go along, and maybe we can place. We can do some of these again today. Let me see here. So earnings calendar here. So we talked about these names. PaySafe. I need to take a look at PaySafe and Dollar Tree and see what they're doing this morning. But yeah, so ChargePoint reports later today. Is that the only thing? Maybe AI here, right? But ChargePoint is the one we're really familiar with, right? AMC is pumping now. It is. Good morning, Peter. AMC is actually pumping now. Okay, good, 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 good. Again, so as long as AMC holds above $18, guys, everything else can be ignored, right? So, well, all the negativity, right? So hopefully that they can hold above 18. That's all we're looking for, right? Okta, no, no, no. Victoria's Secret, this Splunk, American Eagle. Okay, cool, cool, cool. No, it's not pumping. Oh, Bonnie, thank you. No, it's not pumping. C-Tick all day today. C-Tick for you money. Okay, sounds good. I'll take a look. Right. So again, INDO's gapping up nicely this morning. Hit that 1350 level of resistance. We know these levels, right? So 1350, 1250 every dollar, right? So we broke above this level. We struggled at that level 1250 yesterday, right? Tested it pre-market here. Broke above, tested and held. Pushed all the way to the next level of resistance, and here we are retracing a bit. So again, that looks good, right? INDO looks good here, 18%. We'll see if we can hold these gains at the open and then go from there. Right. So again, INDO looks good here. Let me take a look at CTIC. CTIC was the top pre-market gainer yesterday. It's selling up this morning, right? Gap up yesterday, sell off today, right? In terms of support here, we seem to be finding a nice little base here around 290, 280 pre-market, and this goes all the way to after hours and during the market trading yesterday, right? So 280, 290, right? So that would be a level to maybe watch as well and see if we can get back about $3 here, right? Let me take a look at Mullen here. Is Mullen still holding a dollar? Yes, it is, right? So it needs to get back above $1.20 though, right? That's your next level of resistance, $1.20 there. And of course, hold a dollar, please. Please, please, please. Hold a dollar, get back above $1.20, and then start trending back higher. John, good morning. Um, it really is, isn't it? Right, Dan? It's annoying. I think we're being a little bit greedy, right? Because again, below $20 to $24, not too bad, right? Not exactly the worst. But we would like more, 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 more. Uh, Resistance or not of just a touch resistance. Yeah, right. So that thing needs to clear that level. Ooh, that's a nice candle. Come on. Oh no, it really isn't. Well, it's trying for Nordstrom there. With hikes coming, could be wise to start scaling into banks. Yeah, again, must the only concern is that the banks had a retracement because the interest rate with especially with everything that's happening right now. Um, you did 25.50. Wow, you let's go. Right, the only concern about banks right now is the fact that the market is reading into these banks and giving them a sell off because interest rates are not expected to be as high as one, not the 50 basis points we talked about, but more like 25, right? So those banks have been struggling lately, right? So, but again, with these dips might come an opportunity, right? So interest rates, banks, right? We've talked, well, okay, get back about 25, pump it. How much time do we have? 7 minutes. Well, pumping into the open. Come on, you're not greedy. It's just business. It's just business, honestly, right? Nordstrom, keep it going. Pump it into the open here. Get back above 25. Get it in the money. Like what is this rubbish here? Get back in the money. There you go. Anyway, so again, that's Mullen, guys. What else are we looking at here? So let me take a look at ISPO here because what do we add pre-market? Yeah. Usually don't get a whole lot of information till the market opens anyway, so I'm gonna ignore that for now. What else can we take a look at here? Anything on? So let me take a look at CHPT chart point. So these guys have earnings today. Um, they're up 2% here, 2.5% here pre-market. Wow. Charge point was at $14. Wow, wow, wow. I'll take a look here. Right, if we can get this thing to sell off today, this might be another play, right? If we can get it to sell off. I mean, but yesterday was a nice little retracement. Interesting here. $14. Yeah, we came back down to that $14 level, right? Support at 14. Yeah, that was yesterday. We weren't really paying attention to this anyways. But 14 and holding here. Interesting. CY. Okay, there we go. CYRN. CYRN, guys. Oh, yeah. This thing's been have a look at ISPO. It just doesn't have volume yet, RAM, so we don't have any information. That thing needs to stay above $50. Had pre-market. Yeah, they had earnings. And the kill for PaySafe. So CYRN here is looking good this morning. Good morning, Chris. Right, so these guys have earnings when December 2nd. So apparently these guys have earnings today, right? I might need to go over to the company's website to confirm, or unless these earnings came out already and they beat. Um, Interesting, really interesting here. So I'll take a look, but they seem to be doing well. So again, CYRN is going to be a name we watch. We like it anyways because of the volatility there. So yeah, we can watch it as the day goes on, right? So CYRN here. Let me take a look at. 1 second, guys. Uh, there you go. There we go. There we go. In terms of levels, we played this name last week, and you guys have been playing this ever since, right? In terms of levels to watch, we know there's a huge level here around $7, $7.10, right? So $7. Yeah, I'm just gonna leave that line at $7. Um, we know there's some resistance here at $7. We failed at this level a few times already, so that level is gonna need to break, right? Once, twice. Again, if you last week, right? Quite a bit. $7 and then sold off all the way down here to 450, right? So gonna need that thing to clear $7 and hold above. It is right now in pre-market, but it's gonna need to hold once the market opens, and then we can go from there, right? So my dip in the opening, yeah, consistently this week. I know Hugh has been right. Yeah, six of profits as well, Virgo. There you go. So you guys have been playing with this. Yeah, we can watch this. Absolutely. We like you're watching IRNT. Okay, sounds good. Sounds good. So 4 minutes. IRNT. Ooh, 6% as well. Lovely. Okay, nice. So break above five, come back, test five and hold, and 515 here. So I know we watched this $5 level all day yesterday just to watch just to see if it would break above. Never quite did it, right? So today it finally is right pre-market. So we're gonna have to come back and test this $5 level at some point today and see if we hold that as well, and then go from there, right? Um, now again, guys, don't forget to hit the like if you haven't. Good morning, good morning, welcome back. Good morning. As Nostrum loses all those gains again, hit the like, guys. Hit that subscribe, all the fun stuff. All right, what do we add now? Nostrum, just behave, behave here. Rubbish. Um, there you go. So that's IRNT there. Let's go back. Yo, PC. Yo, yo, yo. I Inception mining. Oh. uh, it's a small penny stock. Unless I'm looking at the wrong thing here. So small, very small. Ooh, Nordstrom, come on, get back above 25. Get in the money. Yes, there was rough pump. Yeah. Well, well. There's so much to look at, Emory. I know there always is, and this is why we go through all these names, and then like the first 30 minutes, we start to hone down a list of three names to watch for the rest of the day, right? Just a few. And then of course as the day goes on, more names are going to show up, right? So 2 minutes here, guys. I'm going to need to sign in here, so I'm going to put up again. So we talked about AMC already, we talked about SPY. AMC is at $80, right? So that thing's going to need to hold 18. So the S&P is pumping into the open here, guys, right? Holding 430 into the opens, but I'm going to need to sign in here, just to get ready for Nordstrom. So again, my hope would be that you're ready to sell it, right? That is my hope as well, right? I want to take profits on this thing. I mean, it's 28%, right? So I want to take some profits if only if we look right. Oh no, pieces ready to sell it, guys. So, yo, I'm ready to sell. Anyways, let me get some music going here, guys, and then I need to sign in and see what those calls look like. If we're popping into the open, I'm gonna give it a minute or so, right? Yes, yeah, please, Mono, right? I'm gonna give it a second or so just to get those calls to settle, and then I'll make my decision. INDO, Aaron. Okay, well, let's take a look at INDO. Where are my calls? Where are my calls? Where are my calls? There we go. It's funny to look at these calls. They're like, "Yep, your calls are red at the close." It's like, no, no. To check again. It's scaring me, but if we pump our weights, there you go, right? PC. Yeah, I just want to see what happens at the open, and then go from there. To $30, Dan. Market open? Yeah, the market is open, guys. Come on, pump it. So updating. Don't dip. Stop dipping. Stop dipping. Yeah, those things are still updating here. Still updating. Still updating. Still updating here. Still updating. Hmm. Interesting. I don't like where they're sitting at right now. I don't want to sell it for below $1. Come on. Unbelievable, guys. Come on, push above 25. There we go. There we go. There we go. There we go. Come on. It's so volatile, honestly. These stem calls sold for you sold for $1.08 or no? I'm on my own now. $1.08. Come on. I'm gonna have to decide here soon, 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 soon. Pump it. Mm. Oh, come on. Let's see here. Uptrend, yeah. Three halts already. Three halts. Okay, thank you, Dan. Thank you, thank you, thank you. I just want to see what these things look like here. Ooh, $16, $22. There we go. Mona says, wow, wow, wow. That's SOFI. Yeah, SOFI is dipping into the open here, guys, right? SOFI is dipping. Again, gap ups for selling for most of these things, right? So is AMC. AMC is below $18. So again, be careful, guys, right? Be careful, be careful. Please and thank you. 24, $1.30. You held one? Okay, there you go. Good job. It's tough in the morning to as well. Keep it. I see if we can get $1.50. Yeah, $1.40 still. These damn things open above $1, $2 already. Scalping it. You're in at 2024. Yeah, you are. Okay. MOHO is moving as well, Dan. Okay, thank you very much. Yeah, MOHO was one of the like the top gainers here in the morning, right? So not bad. I mean, those things are like just the price of like not my position, like just the price of the calls. I mean, it's up 700%, right? 700%. That's impressive, right? 700% there, and it's pumping it. It's sending it. Top of the morning, Unity. Good to see you, Unity. How are you? This play just made up for the last months of losses. Yeah, right. So, oh, almost at 150, $1.50 almost. Yep, there you go. It's $1.50, right? So, and no, just want to watch it for a little bit and see what the market does, right, and then make a decision there. Nah, nah, nah. Good morning, Smoochie. Let's go. So I'm gonna take my take it. Nah, nah, nah. Let's see here. Nah, nah, nah. There you go. There you go. Wow, it's gonna go, isn't it? Stop at 25.10. Oh, that thing is gonna go for $2. It's gonna go for $2, isn't it? Oh well. Mm-mm-mm-mm-mm. Not bad though. Not bad. Bio. Oh, Mono says. So yeah, again, let's see if we can hold 25. Sold mines at 20. Yeah, you got 244. Good job, PC. So go real sweaty. Good job. Congrats, guys. Good job on the gains there. That's amazing, right? So not bad at all. For a night's work, right? So not bad. Average was 30. Yeah, right. 37 cents, and you sold them for 244. That's amazing. So congrats. Congratulations. Good job. So far, just slowly dipping into the open here, right? Again, people take profits. That's just the thing, right? AMC is back above 18 as well, which is amazing, right? All done, yeah. For what, $1.55. Good job, congrats, Mono, congrats. Stop at 20. Okay, good. There you go. AMC is back above $18 here. Right. So again, AMC is going to be judged by what we close at today, right? At the very end of the day, right? What are we looking like, right? Are we holding 18, right? What are we doing? So, hi guys. Good job, good job. It's amazing. $18 there. What's the S&P doing here? Nothing yet, but it's holding above that level, right? That 430 level, and that's all we're looking at for now, right? Hold it, hold it. I bet you what the S&P is waiting for here is for Powell to speak in 24 minutes here and say, okay, well, what's going on, right? And yeah, nice. Yeah, your average was 38 cents, right? 38 cents to over $1. That's amazing. CRM as well. No, it's dipping. Okay. Yeah, CRM needs to stay green. I don't know if it is, but it needs to stay green and not do the dips. Oh yeah, that thing looks good. So la, so 25.50. Wow. La, la. Give away all time gains. Gave away all its gains. Yeah, it did. Wow, really? Uh, who knows? Christine gives respect to you. He does. Chris. Chris saying, who's Chris? Oh wow, it's bumping it. It's sending it. Oh no, we should have held. No, just kidding. Seed tickets 350. Now take a look. I'll take a look at some of these names, guys. I know it's slacking. We just had to sell some things. Just had to say bye bye to some things. Who's Chris Hain? Chris Hain. Keep it moving. Who's that? Lost everything on SoFi. How? How? You shouldn't though, right? It's up 10% here today. I mean, it's selling off, which is expected, right? Which is expected. But Kartik, you lost everything. That shouldn't be the case though, right? You bought those calls, and it's up 11% here this morning. Oh, 20, almost 26. This is like Macy's, exactly like Macy's. And again, this is why we. If you like the video, you get them gains, right? If you like the video, you get them gains. Yeah. La, la, la. $14 call. It dropped a lot. IV crush. Yeah, that's annoying. That's annoying. Kartik. On puts and calls, keeping. Oh, puts and calls, keeping it. Oh, okay, nice, 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 nice. Someone on YouTube does stock moves and plays. Okay, he's on YouTube's. Okay. Facts, VC, facts. Good morning, guys. Sherry, DCFC. Okay, I'll take a look. I think we need to get rid of JWN for now and just leave it on the side, and go watch some other things because we need to scalp this. We need to make more monies this morning, right? It's jumping. Okay. Oh no, it's going 26 almost. I'm gonna be distracted now. Ooh, there we go. So again, the S&P is Chris. The S&P is going right, trying to again holding above 430, and that's the key level. The AMC is back above 18. The S&P goes, AMC moves with it, right? So it's still down 20 cents. AMC is all right. It's still down 20 cents, but it's again it's holding for now, so not too bad, right? Let me take a look at some of these other names that we should be watching. Let me take a look here. So INDO here, 1850, right, is your next level of resistance again. So we talked about this 1250 level as support, right? We tested it in the morning, right? So again, test pre-market. When I said the morning, pre-market test, right, held that level, pushed to resistance. 1350 is that resistance level we talked about, right? 1350. So we filled at that level. That's going to be your next level to watch. Came back down to 1250 again as the market opens. People take profits, right? People take profit. We sell up to that 1250 level again and trying to pump, right? So again, 1250 support, 1350 resistance there for that thing, right? So there you go. La, la. Oh, well, that thing's just pumping. It's just pumping. All like SoFi is dipping here, right? Back to $12, which is annoying. Wow, Nordstrom says bye, bye, bye. Says see ya later. Pablo, warrants under the left from okay. Thanks, RG RGTI. I need to take a look at that. Pablo, I'll take a look at that today. See if we can get somewhat of a some excitement in that. So, let me take a look at CTIC. Pixie take here. Okay, that thing's just holding $3. Yeah, it is. Right. See that volume comes in. Stop at 25, 25.50. That's amazing, Hugh. Good job on the scalp there. It's finished. Calls drop 80%. Yeah, just that IV crush. It needed a lot more of a move to the upside there. And also the fact that they expire on Friday and today's Wednesday, right? And it's dropping here in the morning. It needs that thing to go in the right direction. Otherwise, it just gets crushed. I hope you like pumps. So yeah, I like pumps on stocks to the upside. There you go. Hitting uh, let's go. Keeping it moving. Let's go. Yeah. No, congrats, guys. Good job. So again, good job on some of the gains here. Hopefully we can keep making some more of the monies. You love, yeah, you do, Mono. Okay, sounds good. Um, it's the site run until next week, or if another company community. No, okay, sounds good. Yeah, no, that looks really good. Hugh, right? So looking for $26 there now on that play, right? 32%, right? Amazing. Stock go up, profits go up. Jasmine, stunk go up, profits go up. Absolutely. Anyways, let's see if SoFi can find some support here, guys. Right? Just above $12, right? If this thing can find a base and break above that moving average, maybe it's gonna turn around in pump, right? So it's had a nice sell off in this morning already. So it needs to turn around at some point here, right? Needs to clear that moving average. I'd be careful with uh, Nordstrom here seems to be getting. It seems like we're getting some lower highs, right? So you might get a dip here, but again, that thing looks amazing, right? That looks really good, really, really good, right? Open and said nope, no more dips. And here's again that red candle, well, almost red. So jump in again, Moho. Okay, let me take a look at Moho. Moho. So when I looked at this stuff this morning, there wasn't any news. Yeah, we've looked at this thing in the past though, right? It needs to clear this 52 cent level for some reason. 50 cents, 52, right? 52 actually. Wow, why is it so specific? Anyways, I'd be paying attention to 50 cents, right? If we can hold about 50 cents here, that's a good sign for potential continuation run. So stay above 50 cents here. Maybe so I just be again, give it some time to settle. It's going DCFC. Okay, let me take a look. Uh, all the craziness in the morning, guys. Before we settle, yeah, DCFC looks good here. Actually, not bad. I think Pablo mentioned that these guys had some news yesterday. Right? They had an offering, right? So ultimately, this thing needs to get back above $10 here. So it needs to get back above $10. I don't know if trying to form a double bottom. Up 11% mono. It did. Wow, Ellis. Okay, cool. IMPP taking flight. IMPP again. IMPP moves nicely with what is it called again? INDO, right? You notice every time INDO runs, IMPP runs as well, like energy names, right? So these things seem to move together. It's back above $2, and that's all we asked for. Oh yeah, actually, where's Kelly? Kelly's so Kelly was in a position that would be annoying because Kelly was in a position and had a stop loss at 45. Kelly held this thing all day yesterday, right? And was looking for this level to hold 150, 150, 150. It dipped to that stop loss at 145, kicked him out, and now it's above $2. So that would be really annoying because kicked him out right at the low of the day. Like right at the low of the day is where his stop loss was at. Hunted stop loss hunted, right? And then said bye bye, right? Look at that. That's annoying. So if we can come back and test $2 and hold that level, that would be good, right? Would be really good there. Halted. What's halted? R SX is halted. Oh, that's the Russian ETF there. I mean, it's yeah, it's a Russian ETF. Oh yeah, Nordstrom is a monster, guys. Absolute monster here. That thing just wants to go. Go, go, go. Yeah, no, we need SoFi to hold above $12 here. In start turning around the double bottom or something, right? It's gonna need to base out somewhere here. It's gonna need to hold that $12 that 12.10 level there and turn around. Stop loss at 12 20 25.75. Congratulations to you. Good job. Perfect. Easy days, right? Stop loss higher and higher and higher. Let's go AMC squeeze. Is AMC moving? What's AMC at? And it's holding 18, right? Which is good, and that's all we're asking for, right? Again, negative sentiment out there because of what the because of those earnings. But if we can hold $18 here, that's a good sign, right? Hold $18. That's AMC, right? Oh, AMC is back to green, guys. Look at that, right? Oh, back to green. S&P said pump it, right? S&P pumps, AMC pumps, right? That's it. Like it's that simple, right? Is having a good morning. It is, Pablo. PaySafe is. Yeah, we looked at PaySafe for potential calls, but we just again ignored it. And so PaySafe would have been a nice, if it's gapping up, would have been a nice play as well. Then, um, oh yeah, 2607. Wow. What are those calls at now? Wow. Going for $2. Good morning, Craig. On the support line, MGM. Okay. Oh yeah, AMC is trying. There you go. 7 cents. Right, so AMC is completely tied for now to the S&P, which is a good thing. That is not tied to the company, because if it was, that would be an issue, right? Would be an issue there. So yeah, there you go. Wow. Chris, can you say scam market? Wow, um, impressive. You've been wanting to buy forever, Mono. Okay, I'll take a look. Buy the dip, baby. Bonnie says buy the dip. Buy the dip. Dip to where? 1755. Okay, nice. Yeah, come on, AMC. Keep it pumping, right? But again, AMC is completely tied to the S&P. The S&P pumps, AMC is gonna go. S&P sells off, AMC is gonna struggle, right? So completely tied to this here. For now. Good morning, Queen. Good morning. Good morning. La- yeah, you just never do it. Yeah. Yeah. Yeah, SoFi is trying. See if this thing can form a double bottom, and that's all we're asking for here, right? Form a double bottom here somewhere, right? Do something like this and then recover, especially with the S&P trying to bounce here. Hopefully, this thing can hold, right? So yeah, all you're looking for there. Now, how high do you think it could go, James? I mean, it's a Russian ETF. There's so many things around that I have no idea what could happen, right? Like I have no idea at all. Um, like no clue. There you go, Spy. Spy is almost at 435. AMC pushing for 1850 here. What's today be the day where AMC says okay 1920, right? Puts a Norwegian cruise. Ooh. We'll take a look, Mono. Puts on Norwegian cruise. Do they have earnings, or they're just sitting at the double top? Are you training? No, I am not. Of bugs? No, I am not. I am not. Are you? You are. Uh, Yeah, yeah. SoFi crush, yeah, yeah. You needed to like be like a lot closer in the money, like a $12 call. Like $12 would have been would have been better for. But that's really annoying, right? Really annoying there for the for SoFi. Oh yeah, AMC is loving it, guys. AMC saying, come on, yeah. SoFi. Top of the morning, your AMC is Johnny. Good morning. Could be asking for a double. You could be asking for a double bottom. Don't like the company. Okay. It misses a lot, Mono. Okay, sounds good. Yeah. There are companies like that I don't like. Right. Um, um, Deepak, nice pop from opening dip. Okay, thank you, Pablo. Thank you. I'll try and once the market settles here, I'll try and set some get some more names going here. But yeah, I'm gonna add one more name to this list here. One more name to this list, not AMC, but I'm just gonna run through a few here. So what does INDL look like here? Okay, right. What should that 1250 level then? Right, 1250. RGTI Supernova. All right. So again, brand new. He's back. Volume is slowly coming in there, so we're gonna need this thing to hold above more volume to come in and then hold above that 12 that $10 level, right? So we're gonna need it to do that. Some of these other stacks here, ISPO. No way. ISPO is at 5550, guys. And 5550. You know what's just pumping? The famous Nordstrom, guys. Nordstrom says bye bye. What are those calls at now? Okay, almost at $2. Almost at $2, guys. Almost at $2 for those calls. So low mono ASTR. They're going to the abyss. That's what they're looking for. Um, Interesting here. No, again, ISPO looks good, right? So one of my favorite SPAC scalps. Um, I like playing the dips on this thing. So not the pump. So I'm not gonna buy this thing as it's pumping. I like playing those dips because you expect it to recover. Also, be careful because the volume is super low. Like it's really low volume, right? So be careful. Be very careful there. Yeah, SoFi is just dipping still, guys. Like SoFi just keeps dipping. While wow, Nordstrom, wow. We should have been diamond hands. What are those calls it now? Wow. Wow. Those things are $2 now, Mono. Like those calls are $2. Right? 18 cents yesterday, $2. That's $2 right now. That's impressive. That's really impressive. Let's go. Mono, I know, Mono. I know. SoFi, no fly. Why? People just taking their money and running. Peter, right? Gains or gains? Exactly, Hume. Exactly, right? But there's always going to be an element of we should have. Sorry, guys, the vacation was possible, but will be happening. Mono, right? This thing's on the rockets. Mine, yours are $3. Now you wish you kept a few, right? Uh, those things are $3 now. You paid 30 something cents for them, right? So yeah, that's a nice overnight pump. Very nice, very nice, guys. So yeah, looks good. Yeah, no, SoFi. Watch for that again. So $12 is the level we're looking at, but ultimately this 1175, right? 1175. That's your next level of support here, for SoFi. Not sure why SoFi is so weak. Um, it's really weak. Hmm. You sold too early, Dan. I know, right? That's why, like, you want to give these calls a few minutes at the open, right? Again, like I gave it a few minutes. Those calls went from 60 cents to $1.50, right? So that was nice, right? But you need to give them a few minutes. If we give it more time, it would have done a lot better, right? So, but it is what it is. It is what it is. Um, Kelly. Oh yeah, I was just talking about IMPP, right? How that thing ran to above $2, and that's exactly what you wanted, right? Could be a play here at $1. Yeah, amazing. Mhm. I'm sure we're gonna dip at some point here, but that's impressive. Like that's done really well, like really well. So, yeah, looks amazing, right? At least we didn't go red. Exactly, right? So let me take a look and see. Let's see here on BTC. 45. Okay. Let me see here. No. 20. Mm. Let me see. You scuffing screen scuffing. Of course, I just want to see here what I can do with some of this rubbish. Some of this rubbish, queen. Some of this rubbish. Mhm. Not really mad. Great profits. Exactly. No, you can be. We can be mad, right? So we made some nice gains on that. Some very nice gains. I mean, like those things are up 700%, right? So can't be mad at all. Can't be mad. No one bit, right? So no one bit. US margin. Tens. Hmm. There you go. A decent scout? No, congrats. Good job. You knew it? Yeah. Good job, Hugh. Congratulations, right? Yeah, so can we get a dip though? Can we get a dip somewhere nice, right? It's been pumping all morning long, right? So we need a dip somewhere, right? And it's just going still. Wow, wow, wow. Look at that, right? Nice little dip here and then recovery, right? So if we can get a dip to somewhere, 25, 50, something, something, right? That'd be nice. So we'll see. Again, it's following the S&P for now. S&P is dipping here though, so you might see this thing dip as well. But again, just give it time. Give it some time here. So, anyways, moving on. Is a good day, exactly right. PC 700% overnight is a good day. Like, I mean, 10% overnight. Top of the morning, Jaco. Come on, dang SoFi. What happened? Yeah, that thing just decided to sell off. Honestly, right? Just sold off. S&P is dipping here now. Not sure if there's a headline somewhere, because that's a nice red candle. AMC is still holding above $18. ISPO, okay, cool. That's a $2 dip there. So we'll see what happens out of that, right, and go from there. I'll tell you, if it's quiet, it's either sculling or glitching. There's no in between, no in betweens, no in betweens. Awesome play, yeah. No, that was amazing, right, Virgo? Amazing, amazing. So the S&P seems to be struggling for now. Not sure why. Fed is about to speak. Okay, yeah. I'll pull up the Fed meeting here just in case something important is happening. Then we can maybe listen to it, right? So let me see here. So thank you again. Thank you very much, Musty, for posting that link in Discord. Thank you very much. I'll just leave it up just in case we want to look at it, right? Pull that up here. So it seems like it's so 10 a.m. Eastern, so 3 minutes is when they're speaking here. So cool, interesting. Yeah, the S&P is giving us some nice dips, right? We'll see. Some nice dips. Get ready for what? Giving gains, morning and night. Love it, morning and nights, morning and night. Yeah, we'll see. I mean, that thing has to dip at some point, right? So hopefully a nice dip there might be a play, right? So a nice dip somewhere, right, would be nice. Just watch it go for 27 again, right? Uh, yeah. La, la, la. Get ready. Get ready for the Fed. For the Fed. Let me see here. Let's see. 94. Interesting. There you go. Marlo with the super chat, guys. Let's go, Marlon. Okay, let's go. Marlo, thank you very much. Good morning. Nelsie looking for support in at 7:30. Okay, sounds good. I'll take a look. I'll take a look at Nelsie. Thank you very much, Marlo, for the super chat. Let me take a look here. Nelsie. You're in, okay, OTC stonk, right, Nicole? You're in at 4:30. That thing is currently sitting at 7:21. You're in at again 7:30, right? So you're red in this position for now. It's an OTC play. It's red for the day. Lows of the day at $6, right? This thing was a lot lower actually. Wow. Um, doesn't have a whole lot of volume either, so hopefully that volume starts coming here. It's a skippy stock, right? So it's really skippy. It's back to where you bought in at. It's all over the place for now. Hopefully this thing can run. My only concern is right, that support might be at like $6, 580. But yeah, let me take a look at the daily chart here. And see what, yeah, that's right, that's concerning. It's a little bit concerning. Why? Because look at the last few days here, this thing's just been selling off. Hopefully today's the day that it turns around and pumps, right? It's just been like, it's been getting some massive red candles for some reason here, right? Look at that, right? Again, from a week ago, this thing was all the way at $28, right? And then crash. So you just want to be a little bit cautious here, Amalo. Right, my concern is that when I take a look at this chart for the day here, right, um, if this thing can load, it's loading and loading and loading. BTC looks good. My only concern is the fact that this thing has been all the way down here this morning, right? That's the second, yeah, all the way down here to 580, right? And then your entry's like all the way up here, right? That's your entry right there. So we're failing and struggling. We might get a nice dip again to confirm a double bottom, but I hope we can find support above like like a 680, yeah, like a $7 680 something, right? And then go from there. That'd be nice, right? Would be really nice then. So, yeah. You know what's pumping again, guys? Guess what? It's You guessed it, right? It's pumping it. What a day this thing is having. Nordstrom, guys. Wow, wow, wow. That's impressive. Like it's forming a nice little double bottom here at 20, 25.90 and pumping it, right? That's impressive. Really impressive. Wow, wow, wow. DWAC running a bit. Just broke $100 for DWAC? No way. DWAC broke $100? Wow. Wow, wow, wow. It's live? Okay, sounds good. Thank you, Musty. $100. Yeah, that's the next level of resistance for this play, anyways, right? $100. So see if we can break above 100 now and hold above that. That would be impressive, right? Would be impressive. My lords, squeezing puts now. You're looking for some puts. Okay, sounds good. Yeah, that thing looks really good. Like again, my concern is this thing is very similar to Macy's. Like Macy's was a monster. Like when Macy's had their earnings, these guys no wait. Stewart, really, $45,000? Bitcoin is about $45,000, and we did not even. Wow! Thank you very much, Stuart. 45K. Come on, this is it. Just kidding. But pump it. When 50K, guys. We want more. We want more, more, more. Um, more. Give us more. $45,000, guys, for Bitcoin. Uh, And you know what's funny too. You know what's funny, Stuart, is that most of these names and like most of these arts are not really following along. But we know exactly why that is, though, right? Like that thing needs to set up above 45, and these arts are gonna follow. So that money's all that money is just pumping into Bitcoin. All the monies. Well, Bitcoin is just get eyes on CYRN. Okay, right? So yeah, again, $45,000 is a big level, huge level. We failed at this level last time and then sold off, right? So the fact that we're sitting above this is huge, right? Regardless of the reason. Since I place about price alert, price alerts, Stuart, Peter. Yeah, I don't know what to tell you. Don't know what to tell you, Peter. Um, I just popped IMPP. Yeah, the soaring, the Russian banks is soaring. Yeah, all those dips, guys, all those dips. Come on, now we need the rest of these names to follow. Right? BTBT and Huts Mono. Okay, good, right? Yeah, there we go. AMC is back below, guys. Back below $18 here. S&P says no care, no care, no care. Right? I'm pumping it, um, pumping it. SoFi is trying, holding above $12, right? And Nordstrom says, yep, no such thing as a top because I'm the top. Anyway, so yeah, that's Bitcoin on the other screen there, guys, right? So on the right hand side there. So 45. Wow, wow, wow. Wow, wow, wow. Mullen is pumping RAM. Okay, perfect. Thank you. So Mullen, as AMC is just playing here, guys. So Mullen needs to hold that dollar continuously, right? And it is. It looks good here. So came back down this morning, which is what you want, right? Came back down this morning after that gap up pre-market, right? And held that dollar level. So came back and held that support and in continuation. So that looks good there, right? That next level of resistance is that 120, right? That's the level you really need to break above, right? Just for comfort, right? Break above 120, and that's amazing, right? So, and IMPP is another one that moved as well. There you go, right? Holding $2. I've showed the money flowing to BTC wallets and no skyrocket at level seen a couple of times in BTC history. ETH remain at this exactly right, exactly, Stewart, exactly. So yeah, Trick is making these gains, guys, in those Russian bank dips. That's funny. Um, BT $5 calls. March 18. Let's go. They're pumping. Yeah, have some $10 calls. Those things are far away, but yeah. So hopefully they can get moving here. Right, get moving. Gets moving. Has earning? They do. They have earnings today. Wow. Let me take a look at BTBT here. BTBT. BTBT is up. Well, basically nothing actually, right? 2 cents. It's holding support here at 380, right? Not sure when we talked about this level, but there's a level here to watch, right? Double bottom at 280. Seems like they had earnings or something, right? Maybe that's the yeah. It seems like they had earnings already pre-market here. I'll have to take a look. I'll take a look somewhere. People pumping up. The ticker is SRB something Y. I'll take a look again. David. We talked about those Russian banks a bit yesterday, right? As people were forming into them, right? So, BTBT. Anyways, I'm gonna put up Merlin for now and see what that thing does. Or yeah, I'll leave that up for now. See if that thing can hold $1, right? Again, Bitcoin looks good there. Looks good. Yeah, there you go. SB. Yeah, there you go. So SB or CB, right? So yeah. Uh, by D Queen. What's BDP? BDP. That I'm trying to figure out like what that means, and I'm DY broke $100, Jacob. Yeah, I'll leave up DY here in the middle because I know some of you guys love it. Right, so I'll leave it up here. It's breaking $100, but it needs to hold that level, right? It needs to break above 100 and hold it. And then go from there. Needs to break above and hold. Costa, good morning. Yeah, the market seems to be dipping, right? Everything seems to be dipping right now. Crypto connected, S&P here, right? Dipping. So is DWAC, right? All these names are dipping here now, which is interesting, right? Really, really interesting there. Let me see, 88, 83, 87, 86. One sec, I just need to close out by one second, guys. Let's go. Perfect. Mona, I'm sorry, but I shorted the damn thing, so I just had to take my money. Shorted it. Rubbish. Here you go. Shorted some Nordstrom. Maybe I should have held that short longer, but no, that's okay, right? Had to uh had to short the damn thing. Double top, right? Top there. 26.45 sell off. Second top, right? No thanks. No thanks. S&P is really helping though. S&P is really helping with all these drops here, right? So S&P is retracing here hard. I bet you this actually. Let's take a look at that meeting, guys. We know power speaking, right? So I bet you there might be a reason here for this drop. Um, just want to listen to a little bit of it and see if it's actually impacting anything. Full screen is what? Why can I not? Is unavailable? It says full screen is unavailable, guys.
We stand in a bipartisan way with the people of Ukraine, and we are grateful for their bravery. We want to do everything in our power to assist and support them. Again, thank you, Chair Powell, for your leadership. America is facing the worst inflation we've seen in 4 decades because of Democrats' reckless spending here on Capitol Hill. Instead of a course correction, House Democrats keep hoping the Senate will take up the $2 trillion in new spending through Build Back Better, or whatever they're going to call it. This would only make rising prices worse for families across the country. A Wharton budget model estimates the average American family spent $3,500 more last year to keep up with rising prices. Nowhere is this more evident than at the supermarket, where folks are seeing a 22% increase in grocery bills, according to a recent KPMG study. For a family of 4, this can mean choosing between groceries they need and saving for their child's education, their retirement, or even a home. The American people should not have to mortgage their future because of Democrats' love of more government spending to give them the illusion of prosperity in the moment. And despite what we've heard from President Biden last night, simply telling people they're better off does not, in fact, make it true. However, I'm pleased that the president sided with Republicans instead of Senator Warren, Elizabeth Warren, when we renominated you, Chairman Powell, when he renominated you to chair the Federal Reserve. But as you know, Chair Powell, you have an enormous task ahead of you. As one of your predecessors famously said, the Fed's job is to take away the punch bowl just as the party starts to warm up. But the Democrats have drunk deep, guys, and they want to move on to the harder stuff. That is a risk for our economy. We can't let that happen. I was pleased to see the Fed reject the notion of personal accounts by the central bank. As we've seen recently in Canada, and their unprecedented use of emergency powers to freeze hundreds of bank accounts, we need to ask not just how financial authorities can be used, but also how they could potentially be abused. It's disturbing that some Democrats refuse to see this danger and may actually view it as an opportunity to rationalize more government involvement in America's everyday lives. And that's why I sent a letter to regulators today asking for clarity on what this disturbing move that we've seen in Canada could be, if anything to that accord could be done here in the United States, and what we should do to prevent it. And I look forward to hearing their feedback. Again, Chair Powell, thank you for being here. These are unprecedented times that you're serving. Thank you for your steady hand and your leadership and your willingness to answer questions using language that most of us can all understand. And with that, I yield back.
Thank you, Ranking Member McHenry. I now recognize the gentleman from Connecticut, Mr. Himes, for 1 minute.
Good morning, Mr. Chairman. Mr. Chairman, probably the most effective tool we've deployed against Putin's outrageous attack on Ukraine is the sanctions on the Russian central bank and the freezing of Russian foreign reserves. Our ability to do so stems mostly from the dollar's preeminent position as the world's reserve currency. It is time, in fact, it is past time for all of us to lead on creating a regulatory environment in which we, rather than the world's despots, terrorists, and money launderers, benefit from the emergence of cryptocurrency, including a central bank digital currency. Mr. Chairman, one of the headlines on my news feed this morning reads, "Russians turn to crypto amid increasing sanctions," as the chairwoman indicated. The subcommittee I chair and the full committee have done and will do hard work on this topic, but it is time for all of us to act. Mr. Chairman, I can't shake the image of 17th century bankers sitting around London, unable to imagine that their gold pieces and copper plates could be replaced by these worthless pieces of paper. Not be those guys. Let's lead and not follow.
I now recognize the gentleman from Kentucky, Mr. Barr, for 1 minute.
Chairman Powell, thank you for being with us today. Inflation has hit a 4-decade high, with CPI surging to 7.5%. Core inflation exceeds 5%. PPI is now pushing 10%. Recently published inflation forecasts predict CPI will rise above 8% in coming months. According to a study from the Wharton School, the average family spent $3,500 more for the same goods and services in 2021 versus 2020. Tax and spend policies are largely to blame. Stephen Ratner, former counsel to the Treasury Secretary under President Obama, put it eloquently in a New York Times op-ed. The $2 trillion American Rescue Plan was, quote, the original sin that, quote, contributed materially to today's inflation levels, unquote. A potent cocktail of excessive government spending creating excess demand, combined with a hostile tax and regulatory environment for private enterprise, which has constrained supply, have together produced a toxic supply-demand mismatch, pushing prices up. Compounding these fiscal policy mistakes, the Fed pursued for too long an unconventional and overly accommodative monetary policy, which has resulted in an inflation crisis that is hitting our constituents where it hurts. It is clear the Fed is not satisfying its price stability mandate. I look forward to hearing from you on the path forward to address the monetary policy side of this equation. I yield back.
I want to welcome our distinguished witness today, the Honorable Jerome Powell, the Chair Pro Tempore of the Board of Governors of the Federal Reserve System. Without objection, your written statement will be made part of the record. Chair Pro Tempore Powell, you are now recognized to present your oral testimony.
Thank you. Chairwoman Waters, Ranking Member McHenry, and other members of the committee, I'm pleased to present the Federal Reserve's semi-annual monetary policy report. Before I begin, let me briefly address Russia's attack on Ukraine. The conflict is causing tremendous hardship for the Ukrainian people. The implications for the U.S. economy are highly uncertain, and we will be monitoring the situation closely. At the Fed, we're strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. We pursue these goals based solely on data and objective analysis, and we're committed to doing so in a clear and transparent manner so that the American people and their representatives in Congress understand our policy actions and can hold us accountable. I will review the current economic situation before turning to monetary policy. Economic activity expanded at a robust 5.5% pace last year, reflecting progress on vaccinations and the reopening of the economy, fiscal and monetary policy support, and the healthy financial positions of households and businesses. The rapid spread of the Omicron variant led to some slowing in economic activity early this year, but with cases having declined sharply since mid-January, the slowdown seems to have been brief. The labor market is extremely tight. Payroll employment rose by 6.7 million in 2021, and job gains were again robust in January. The unemployment rate declined substantially over the past year and stood at 4% in January, reaching the median of FOMC participants' estimates of its longer-run normal level. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has ticked up, labor supply remains subdued. As a result, employers are having difficulties filling job openings. An unprecedented number of workers are quitting to take new jobs, and wages are rising at their fastest pace in many years. Inflation increased sharply last year and is now running well above our longer-run objective of 2%. Demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. These supply disruptions have been larger and longer lasting than anticipated, exacerbated by waves of the virus, and price increases are now spreading to a broader range of goods and services. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We know that the best thing we can do to support a strong labor market is to promote a long expansion, and that is only possible in an environment of price stability. The committee will continue to monitor incoming economic data and will adjust the stance of monetary policy as appropriate to manage risks that could impede the attainment of its goals. The committee's assessments will take into account a wide range of information, including labor market conditions, inflation pressures and inflation expectations, and financial and international developments. We continue to expect inflation to decline over the course of the year as supply constraints ease and demand moderates because of the waning effects of fiscal support and the removal of monetary policy accommodation. But we are attentive to the risks of potential further upward pressure on inflation expectations and inflation itself from a number of factors. We will use our policy tools as appropriate to prevent higher inflation from becoming entrenched, while promoting a sustainable expansion and a strong labor market. Our monetary policy has been adapting to the evolving economic environment, and it will continue to do so. We've phased out our net asset purchases. With inflation well above 2% and a strong labor market, we expect it will be appropriate to raise the target range for the federal funds rate at our meeting later this month. The process of removing policy accommodation in current circumstances will involve both increases in the target range of the federal funds rate and reduction in the size of the Fed's balance sheet. As the FOMC noted in January, Fed funds rate is our primary means of adjusting the stance of monetary policy. Reducing our balance sheet will commence after the process of raising interest rates has begun and will proceed in a predictable manner, primarily through adjustments to reinvestments. The near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing war, with sanctions, and of events yet to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to incoming data and the evolving outlook. Maintaining the trust and confidence of the public is essential to our work. Last month, we finalized a comprehensive set of new ethics rules to substantially strengthen the investment restrictions on senior Federal Reserve officials. These new rules will guard against even the appearance of any conflict of interest. They are tough and best in class in government here and around the world. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you very much. I now recognize myself for 5 minutes for questions. Chair Pro Tempore Powell, as you know, the Fed is required to conduct monetary policy in a manner that fulfills its dual mandate to promote maximum employment and stable prices. But as you have explained, most of the inflation we're experiencing right now can be traced back to supply chain issues related to the pandemic, and the Fed cannot directly affect supply side conditions. These supply chain constraints seem likely to only significantly increase as Russia invades Ukraine and the full effect of our sanctions take hold. If the Fed's tools are mostly useful in stimulating or constraining demand, how can we expect monetary policy to rein in inflation that is largely driven by supply side factors?
Our policies really cannot, as you point out, affect supply side conditions. Our policies affect demand. What we're facing now is, though, an elevated level of demand in the face of supply side constraints, and it's the collision of those two things that's creating inflation. So there is an important job for us to move away from these very highly stimulative monetary policy settings to a more normal level of rates and perhaps tighter at a time when inflation is highly elevated, and that is what the committee plans to do.
So it seems clear that the Fed has limited tools to address inflation and that Congress has an important role to play. The Monetary Policy Report notes major shortages in housing supply as a factor in high prices. If Congress were to make investments to alleviate these shortages, do you think this would be helpful in addressing inflation?
Major investments in housing supply. So I think housing prices are high for a number of reasons, actually. Difficulty in getting lots, materials, difficulty in finding workers, very high demand. It's been extraordinarily high. So those are many of the features, and also low interest rates have made credit widely available. Mortgage rates are going up. That will probably begin to cool off demand. I wouldn't want to comment on congressional legislation, but I do think there's no doubt a role for Congress.
So I suppose I could conclude without having you comment directly on fiscal policy that you agree there are ways to manage inflation outside of monetary policy. It's not only monetary policy, that others have a role to play.
I do think that's right, but more in a sort of medium or longer term sense. I think the Fed does monetary policy, and inflation is largely a monetary phenomenon, and it's our tools that can be used to address inflation. Over time, though, of course, anything that expands the productive capacity of the United States over time would, in principle, make greater potential output and a less constraining economy.
Fed forecasters expect that inflation will subside as supply chain disruption issues are resolved. However, housing and rent prices, as you've said, account for roughly 1/3 of the consumer price index, and most economists do not expect the problem to be resolved as quickly as supply chain bottlenecks due to both the time it takes to develop housing and the lack of investment in housing that is affordable to low and moderate income families. Currently, there's a shortage of nearly 7 million rental homes that are affordable and available to America's lowest income renters, and a shortage of more than 5 million homes for potential home buyers. In my district, there's a shortage of more than 34,000 rental homes that are affordable and available to the lowest income families, while the state of California has a shortage of more than 962,000 affordable rental homes. If Congress does not make the investments to increase supply and access to the affordable homes in this country, how concerned are you that the Fed will not be able to contain inflation?
Well, you're right that housing inflation is a significant part of the CPI. We also look more prominently at personal consumption, PCE, which is a different measure, and it's something less than that. And unlike these temporary supply side constraints that we see, housing inflation really is much more of an indicator of the tightness of the economy rather than supply side problems. So it's something we watch carefully, along with wages, frankly, and it is a major contributor to inflation. As I mentioned, higher interest rates housing is a very interest sensitive sector, and higher interest rates, really interest rates that move back toward a more normal level, should act to cool off the housing market over time.
Thank you. The gentleman from North Carolina, Mr. McHenry, who is the ranking member of the committee, is now recognized for 5 minutes.
Well, thank you, Madam Chair. Chairman Powell, thank you for your leadership in tumultuous times. And this is certainly interesting times internationally, challenged times internationally. Everyone else on the Open Market Committee, it seems, has opined about the March meeting. Everyone, whether it's a tweet or an interview or anything else. What are your thoughts going into the March meeting?
The March meeting. Okay, so here's how I'm thinking about the March meeting. I guess I would start, of course, with the U.S. economy, which is very strong, the labor market extremely tight, and inflation running well above target. The way we think about our work is we develop working plans for making adjustments to monetary policy over the course of the coming months, and then we are flexible as plans meet the real world. So we're never on autopilot, obviously, and at a time like this, what we aim to do is lay out our principles, and then with whatever clarity we do have, and then proceed to implement those policies carefully and nimbly. So coming into this meeting, let's say before the Ukraine invasion, the committee was set to raise our policy rate, the first of what was to be a series of raises expected for this year. Every meeting was live. Decisions would be based on incoming data and the evolving outlook. I also expected we'd make great progress on our plan to begin to shrink the balance sheet. And so the question now really is how the invasion of Ukraine, the ongoing war, the response from nations around the world, including sanctions, may have changed that expectation. And so it's too soon to say for sure, but for now, I would say that we will proceed carefully along the lines of that plan. The thing is, the economic effects of these events are highly uncertain. So far, we've seen energy prices move up further, and those increases will move through the economy and push up headline inflation, and also they're going to weigh on spending. We're seeing effects on other commodities and perhaps from declining risk sentiment and weaker growth abroad. The thing is, we can't know how large or persistent those effects will be. That simply depends on events to come. So this is where that leaves me. I do think it will be appropriate to raise our target range for the federal funds rate at the March meeting in a couple of weeks, and I'm inclined to propose and support a 25 basis point rate hike. We're also going to write down our new summary of economic projection, individual forecasts, which will show each participant's views of the path forward in the economy and with rates. I also expect that at this meeting, we'll make good progress toward an agreement on a plan to shrink the balance sheet. We will not finalize that plan at this meeting. We'll do that when we think the time is right at a coming meeting. The bottom line is that we will proceed, but we will proceed carefully as we learn more about the implications of the Ukraine war for the economy. We use our tools to support financial stability and macroeconomic stability. We're going to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain moment. So that's how I would think about it.
Very specific. Now, you mentioned 25 basis points. From all the analysis about what the Fed will do over the course of the next year, is 25 basis points the floor, the ceiling? Is it the speed limit? Is that the max you think the Fed could take on? How do you think of that?
So here's how I think about that. We have an expectation. Those of us on the committee have an expectation that inflation will peak and begin to come down this year. And to the extent inflation comes in higher or is more persistently high than that, then we would be prepared to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings.
Now, you mentioned the balance sheet, a plan for the balance sheet, and that is to come. But what I'm hearing clearly from you is that the Fed is very interested in financial stability given what's happening, and you're willing to make quick decisions on a question of liquidity, on a question of market stability, those important works that you've focused on as Fed chair. And so it's actually substantial news for the House to be the first rather than the Senate to break news. So thank you for your forthcoming, being so forthright about your views on this. And with that, Madam Chair, I yield back.
Thank you. The gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Madam Chair, and thank you for ranking member holding this hearing. Chairman Powell, thank you very much for being with us here once again. As we look at the unprovoked criminal Russian invasion of Ukraine, one of the most notable national security responses has been the president's recent announcement to cut off much of the Russian financial sector from SWIFT financial services. Our EU partners have also joined us and excluded 7 Russian banks from SWIFT. Chairman Powell, what practical effect would this have on Russia, its economy, its financial sector, and its people?
So thank you. I should point out that the Fed does not impose sanctions on other countries. That we, in this process of developing sanctions, we are not a principal. That's really a job for the administration, particularly the Treasury Department. So we provide technical background support and things like that. But I think questions about sanctions and their effects generally would be more for the administration and the Treasury Secretary. I think you can see, I will just add, though, that the effects of the sanctions so far appear for now to have been significant.
Yeah, I mean, we saw what happened to the ruble. We saw what happened to their market. The market's still closed. Is a way around it for them cryptocurrency? Could you talk a little bit about that? I know it's a little bit out of your bailiwick, but as you said, it's an interesting moment in time. You know, we haven't had to face this since really World War II, and even all the comments that you made about inflation and watching the market, so much of it is tied to obviously what the Russians are doing with respect to their unwarranted and criminal act there in Ukraine.
So I don't have any private information on the extent to which that is happening, but that is something you read about and hear about. And I just think it underscores the need really for congressional action on digital finance, including cryptocurrencies. We have this burgeoning industry which has many parts to it, and there isn't in place the kind of regulatory framework that needs to be there. It was probably no different with railroads or telephones or the internet. And ultimately, what's needed is a framework, and in particular, ways to prevent these unbacked cryptocurrencies from serving as a vehicle for terrorist finance and just general criminal behavior, tax avoidance and the like. So I guess that's what I would say there. I don't really know the extent to which it's happening, although you do hear that and read it in the paper.
Seems like an outform since we did go down this road. Could you comment a little bit about then the central bank digital currency? It seems like that would be something that would be helpful in situations like this.
Yes, so we issued a paper after much thought and many drafts. We issued a paper, was it late last year? I guess it was late last year, seeking public comment on the costs and benefits of a potential central bank digital currency issued by the Federal Reserve here in the United States, digital dollars. And we await, I think we gave an extended comment period, and we very much look forward to reading those comments. This will be something that we invest a fair amount of time and expertise and hiring people and things like that to try to get it right, but also to understand whether the benefits actually outweigh the costs, which I think is an unanswered question both here and around the world. Nonetheless, it's our obligation to move vigorously to understand the answers to that question so that we can deploy a central bank digital currency if it's appropriate. So would it, in principle, it depends on why people are using unbacked digital currencies. If they're using them to evade, visibility and evade the law, then for us just to have a law-abiding CBDC won't change that. They'll still be able to use those currencies for that matter. The existing digital currencies that again are not backed are really vehicles for speculation. They're not used in payments. They're not a store of value. They're speculation like gold. That's what they're used for. Whereas, potentially a US CBDC would have a wider view. I do want to stress we have not decided to do it, but we do understand our obligation is to really get to the bottom and understand both the technical and the policy issues that need to be answered.
Thank you, and I know my time's about up. I'd just say from your lips to God's ears, I hope that the inflation does peak this year and does come down because people are hurting. And thank you very much again for your steady stewardship.
Thank you very much.
Thank you.
The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman. Welcome, Chair Powell. It's good to see you in the chair. We appreciate your time and service. Chair Powell, since the last FOMC meeting in January, the global economy has become markedly more complex. Russia's unprovoked and unwarranted invasion of Ukraine has led to a very steep increase in the price of energy. As of this morning, when I checked, a barrel of crude oil was priced at $112 per barrel. And this steep increase in the price of energy risk pushing U.S. inflation potentially even higher. How does, and you've touched on it a little bit, but how does the war in Ukraine affect your thinking as you prepare for the next FOMC meeting?
So I think the first thing again to say is that the ultimate economic effects of the war and all of the sanctions and events yet to come are just very highly uncertain, and we need to understand that. And so, as I mentioned, I think it's appropriate for us to move ahead. Inflation is high. The committee is too high, and the committee is committed to using our tools to bring it back down to levels of price stability, which is to say 2% inflation. So, but I would also say that given the current situation, we need to move carefully, and we will. And we'll be nimble. We'll be looking at the situation as it evolves. And again, we will use our tools to add to financial stability, not to create uncertainty. And
at this point in time, you don't think that it significantly alters your expectations for the rate increases that you've discussed this year?
I don't think that's knowable yet. I mean, so we've run what we like to do is run alternative scenarios, and we've done some of that, as you would expect. And it's easy to find cases where it would affect, but we don't know that yet. We honestly don't, and we'll see.
Thank you. Chair Powell, could you explain the role of the Federal Reserve in implementing U.S. sanctions on Russia? How you're working with OFAC, how this actually is implemented? Right,
so sanctions are really designed by the administration. They're part of what the elected government does, where we provide technical support. We implement those sanctions, or we make sure that the banks obey them, that we supervise and regulate. That's one thing that we do. We also consult on, we have knowledge about financial markets and financial institutions, so we're providing technical support, but we're not the decision makers on those things. And honestly, these are decisions that are made at the level of the government, not at the level of the elected government, not at the level of the Fed.
And I know things are happening quickly and in real time here, but what actions has the Fed taken to date since the invasion of Ukraine?
Well, I'd say, first of all, since late last year, we've been on very high alert for cyber attacks. We haven't seen any notable incidents about that yet. We consult. We're making sure that the banks we regulate and supervise are also on high alert. We communicate with the reserve banks, where there's a lot of expertise in these areas, and other parts of the government. So that's one thing that we've done. I mean, we're, as I mentioned, we are in very close contact with the Treasury Department, as you would expect, between every central bank and every finance ministry around the world. But again, we're not the ones who design the sanctions.
Right. Well, cybersecurity is certainly, this committee is, and especially at the Fed, is a top priority. I'm glad that you're watching it closely. Chair Powell, does our U.S. financial system have the necessary capital and liquidity to handle any economic fallout from this war? What kind of data will we be seeing?
I mean, the evidence to me strongly suggests that the answer to that is yes. We just went through a rather enormous shock with the pandemic and the near closure of the global economy, and U.S. banks' capital levels are at multi-decade highs, liquidity levels the same. It's hard for me to look at that and say that a lack of capital is a threat at this point. There are certainly issues. Cyber for private financial institutions is a huge issue, and one that they spend a great deal of time on, as do we.
In 2015, the Obama administration blocked the development of the Keystone XL pipeline, a decision reversed by the Trump administration, and President Biden canceled the permits, again, depriving the U.S. of over 800,000 barrels of oil a day. Wouldn't expanding the supply of oil by 800,000 barrels a day reduce energy inflation and lower prices at the gas pump?
We're not responsible for energy policy. That's a matter for Congress and the administration. Of course, the laws of supply and demand do work.
Laws of supply and demand do work. I've used my time and I yield back.
Pissed. She's pissed.
Gentleman from Guam, Mr. San Nicolas, is now recognized for 5 minutes.
Thank you so much, Madam Chair. Good morning, Chair Powell. And I'd like to first recognize one of my senators from all the way from Guam, Senator James Moylan. Thank you so much for making time to join us here today, Senator. Mr. Chairman, over the course of the uptick of inflation in the last year, you testified before the committee on multiple occasions that the Fed believed that the inflation that the country was experiencing was transitory. And since that time, especially today, there's a seeming change in that tenor. Could you elaborate more on that?
Sure, I'd be glad to. So I think very widely among macroeconomists and other central banks around the world, we looked at it as akin to an energy shock and a supply side shock. And the textbook on monetary policy would have you look through that, because the supply shock comes and goes. And if by the time monetary policy is having its effect, which happens with long and variable lags, we think, the supply shock is already gone. So we looked at it that way. And, I think that we expected to get relief, particularly going into last fall, I would say. We expected when schools reopened, vaccinations, raised, kids back in school. We expected supply of labor to come in, that kind of thing. And it didn't happen. But it didn't happen because the supply side constraints didn't ease. They didn't ease it. So it's not like, as a practical matter, what was wrong was not the theory. It was just, in reality, the supply side constraints have been much more durable and persistent than we had expected. So we knew that we could be wrong, and I think I always thought we could pivot pretty quickly and catch up. And we did pivot when we started to pivot in the middle of last year, and then pivoted hard at the end of the year. But in the meantime, the economy was really healing incredibly quickly over the second half of last year. Record job growth and record decline in unemployment, record tightening in the labor market. So, we know that what our job is now, which is to move away from these highly accommodative settings to more appropriate settings, given the very hot nature of the labor market and the level of inflation.
There's chatter, Mr. Chairman, public chatter, that the intensity of the inflation that we're dealing with today is a reflection of the Fed not taking policy action soon enough, not taking enough policy action. And there's chatter, public chatter, that causes the Fed's credibility to come into question as to whether or not it is acting responsibly and appropriately with the data sets that are coming in. And I bring this up, Mr. Chairman, because we have a duty to the American people to be able to raise these questions as pointed as they are, and to give individuals such as yourself an opportunity to really speak to the credibility question that's really out there in the community. If you could elaborate further on that.
Sure. It's for others to judge many of the things you mentioned, and we understand that. But so we, starting in December, at our December meeting, we began talking about significantly more rate increases. The market took us very much at our word. And as this year has gone on, the market so market participants do appear to be reacting, what I would call as appropriately to our assessment, our ongoing assessment and reassessment of what's appropriate. And I'll just assure you and everyone that we are committed to achieving price stability. We will use our tools to achieve price stability. Really, that is an essential bedrock element of everything else we want to achieve in the economy, including a strong labor market.
When we faced the financial crisis in 2008, a lot of lessons were learned about the need for the Fed to be more responsive to the liquidity traps that could take us by surprise. Given the circumstances we're dealing with today and the frustrations that the American people are facing, can you share with us any lessons that the Fed has learned with respect to its responsiveness to the inflation that we've been dealing with over the past 12 to 18 months and the intense inflation that we're dealing with today?
So the inflation that we're experiencing is just nothing like anything we've experienced in decades. It's higher, of course, much higher than anything we've seen since I was much younger. But not only that, it's different. It's coming from the goods sector. The goods sector has been a source of disinflation for a quarter of a century because so many manufactured goods have been. But
just specifically, Mr. Chairman, reclaiming my time, what specific lessons has the Fed learned from the outcome that we're dealing with today?
Well, I mean, we're still living through it. So the main focus we have is not on doing a retrospective. It's on conducting policy appropriately to return us to price stability while also sustaining the expansion.
Gentleman's time has expired. The gentleman from Georgia, Mr. Laudermilk, is now recognized for 5 minutes.
Thank you, Madam Chair. Chairman Powell, thank you for being here, and congratulations on your nomination to continue your job for a second term. I think it's well deserved. Before I get to my questions, though, I want to hold up something here. This is a Ukrainian dollar. It's a hryvnia. I kept some of these when I was in Ukraine several years ago doing some ministry work, and I think it's interesting to think that what happens in the next few days may determine whether this is another defunct piece of currency and the nation returns to a ruble, or will this maintain some of its value? But as you look at it, you can see it's physically a fraction the size of the US dollar. It takes about 30 of these hryvnias to match a US dollar, but when you look at values, our dollar has decreased in value, as you have mentioned, due to inflation. Now, a year ago, when you testified before this committee, I asked what your outlook was for the economy, and you said you expected economic growth to be strong for the rest of 2021. But at that time, I warned that the $2 trillion stimulus bill that was making its way through Congress at that time was unnecessary and far too big, given the economy was already recovering. Lo and behold, these predictions came true. In your opening statement, you mentioned that you didn't expect inflation to continue at the rate it is right now. But I also recall throughout 2021, we heard that inflation was slight, it was going to be temporary. But I also understand that that prediction probably didn't include the actions and the roles that Congress had, as you had said. Now, according to a report from the Federal Reserve Bank of San Francisco, because the American Rescue Plan was so extremely large and was passed when the economy was already recovering, this was a significant contributing factor to inflation. Do you agree with that report from San Francisco's bank that our reckless spending is a contributing factor to our inflation?
I wouldn't like to comment on any particular law, but I'll say this. All of the things that we did after the pandemic were we turned our dials as hard as we could. So did you, with the CARES Act. And the economy did benefit from that. We have the strongest economy in the world now. But part of that, no doubt part of what we did and what Congress did without naming any particular laws is also part of the reason why inflation is high now.
Right. So there are multiple contributing factors to that, being reckless spending, which devalues our dollar, is one of those. And what we heard last night was that there is not going to be a change in the direction this Congress is going or the White House. It sounds like we're just going to repeat the same mistakes we made in 2021. Now, I know that you have the tools of adjusting the interest rate. You mentioned increasing 25 base points, and you mentioned that it may be necessary to go higher. Understand that. Do you still think that inflation will be temporary? And I believe that you said it would be short-lived going forward because of resolving our supply chain issues. But since there are other contributing factors to that, are you anticipating that Congress or the administration will undo some of the failed policies, such as the spending policies and the suppressing of America's energy supply, which has been a significant contributing factor? Let me rephrase that. If Congress and the White House does not change the policies of 2021 and continues down that same path, do you still believe that inflation will stabilize? Price stabilization will come this year?
Well, first, we've had this expectation, as you all know, for more than a year, and it hasn't actually come true. So we're humble about the fact that we can't really call with any confidence the turn, but it does seem that this year we'll be withdrawing policy accommodation. Actually, a lot of the fiscal policy spending has happened now, and so the impetus to growth will be declining and in fact negative from fiscal policy as it stands now. And those are things, and just the natural improvement of supply chains and labor supply and things like that. Those are the things we're looking to for relief on inflation, hoping for. Very difficult to say when they'll happen. And our job is to achieve price stability one way or the other.
Okay. I see I'm running out of time. I've got several other questions, but I'll submit those for the record. Now yield back, Madam Chair.
Thank you. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member, for this hearing, and thank you to Chair Pro Tempore Powell for joining us. It's been a challenging year. Rising prices at the gas pump and the supermarket cause real distress to working class families like my neighbors in Chicagoland, and improvements in employment and wages are real, but not nearly enough. My constituents saw a decade of stagnation after the last recession. Working class Latinos and immigrants like my neighbors are always hard hit. We simply can't afford that again. Chair Powell, you've said that inflation has been driven by bottlenecks in the supply chain. And last night, President Biden highlighted their role in corporate concentration and price increases. I'll note that CEOs from Kimberly-Clark to Tyson Foods have bragged to investors about their power to raise prices without facing competition. And last night, President Biden said, and I quote, "Lower your costs, not your wages." And my constituents were glad to hear that. So, Chairman, can you explain how raising interest rates will lower prices for diapers or chicken? Last time it was because my neighbors lost their jobs and couldn't find diapers or chicken. So is that the idea?
Well, the idea is that right now the federal funds rate is still set close to zero, and that is a very stimulative level. I think it's 8 basis points today. So that is not an appropriate level, we think, going forward. We think it's appropriate that we engage in a series of rate increases over the course of this year and also let our balance sheet shrink. And so what will happen then over time is demand will moderate as interest rates get into the economy over time. And these annual price increases in everything where prices are going up will moderate as well. That is how it has always worked with interest rates. We don't do competition policy, so I can't really comment on that part of it. But I will say that that's how we think about inflation, and that's how we use our tools to get inflation under control.
Uh, Changing gears, we discussed corporate concentration, and last July, the president issued an executive order on competition that encouraged the Fed and other regulators to increase scrutiny of bank mergers. It's been a long time since regulators blocked a bank merger, even an acquisition by a globally systemically important bank, or GSIB, in 2020. Chairman Powell, do you think it's appropriate to issue a moratorium on pending mergers while the Fed updates its framework for their review?
Well, I think we have a statute that Congress has passed that gives us the rules for evaluating potential acquisitions and mergers by banks. I think we have a widely developed framework for that work, and we're continuing to implement that. I mean, any changes that would come would either come through legislation or through new personnel at the Fed, neither of which we have right now.
As we learned from Wells Fargo, frontline bank workers are an important resource for regulators. They see firsthand how banks implement or ignore internal controls, and they can identify problems as they develop. Incorporating frontline workers' voices in our banking regulatory system would improve the information we have and diversify the voices that get heard. Chairman Powell, will the Fed commit to adding bank workers to your various advisory councils? Why or why not?
Very interesting question. We do have quite a diverse group of people on our various advisory councils, including people who are representatives of workers. I don't know that I don't know that we have ones that were councils, outside councils that advise us on bank supervision per se, but we do always seek out in all of our reserve bank boards and also the advisory councils that we do have representation from labor and also from people who live and work in and represent the interests of, pardon me, low and moderate income communities.
Thank you. Appreciate it if you would consider that. And Madam Chair, I yield back.
Thank you. The gentleman from Tennessee, Mr. Kostok, is now recognized for 5 minutes.
Thank you, Madam Chair. And thank you, Chair Powell, for attending this morning. If you can, a lot of times we look for historical references when we try to reference an event, a current event. A number of people, a number of pundits, when they look at inflation today, they reference it back historically to the late 70s and the early 1980s. From your perspective, is that the proper historical reference to what we're experiencing today as it relates to inflation?
That's the proper historical reference for what we're trying not to replicate. So we look back. Obviously, all of us have looked carefully at the history of post-World War II inflation and business cycles and all of that kind of thing. One of the things that's different now is that central banks, including the Fed, are very squarely take responsibility for inflation. That was actually not the case in the 1970s. There was a school of thought that really there were certain things that an independent agency just couldn't do because it was too hard and Congress should do it. So now I think central banks around the world have an inflation target. They have transparency so that they can be held to account for it. You know, we're not waiting. We are using our tools now and that's really different than it was in the 1970s. So also inflation expectations have been anchored for a long time. They really weren't then. They were allowed to become unanchored without much of a response. That would not happen in today's world and will not happen.
A few weeks ago when the CPI number came out, I was on my way to a breakfast meeting in Jackson, Tennessee, where I represented one of my constituents. And when we were talking about the new CPI number, he said, I don't care what the number is, because I know that I'm paying 50% more in gas than I did 12 and 18 months ago. I know I'm paying 20 to 25% more in grocery prices than I did a year ago. I know what the price of a new car and a used car is. If you were me, if you were a member of Congress, what would you tell your constituents about the rising cost, the expensive cost to just live today?
Inflation is too high. we understand that, and we're working on it. It's going to take some time, but we're going to get it back under control. By the way, we're seeing this everywhere in the world. We're seeing it more in the United States because our economy is stronger, but we're seeing it everywhere in the world.
Let me, if I can, follow up on a few questions that some of my colleagues asked about. Ranking Member McHenry asked you about the next meeting and your plans for the next Fed meeting, and I think you eloquently laid it out. But you also talked about the situation that's developed in Russia and Ukraine. My inference from your answer is that if Russia had not invaded Ukraine, that the Fed would be more aggressive as it relates to the balance sheet and to rate hikes. Is that a proper inference?
No, I think that remains to be seen. As I said, we are moving ahead at this meeting. It would be my expectation in 2 weeks with a rate increase. And we're going to make progress on agreeing on a plan at this meeting to shrink the balance sheet. And I'm confident we will. The question of when we implement that plan is not answered yet. So I don't think that's clear at this point. It's certainly something that we can't answer now.
Mr. Garcia referenced the President's State of the Union remarks last night. The President, when he talked about addressing inflation, said that we need to control cost. Did you hear him say that?
I did not. I was too busy getting ready for this hearing. I did not watch.
I won't tell the President.
I probably just
when the President said he wants to control cost, or that businesses should control cost to address inflation, would you have any idea what he's talking about?
I really can't comment.
Fair enough. In follow-up to my questions from Congresswoman Wagner, she asked you about cyber. I know pre-pandemic, pre-invasion, one thing that you talked about that kept you up at night was a cyber attack. If Russia were to retaliate against the United States in some form of a cyber attack, what degree of confidence do you have in our nation's banks to thwart a cyber attack from Russia?
What I can tell you is that everything that we can do to protect ourselves against cyber, we're doing it. We're doing it. The private, large financial institutions are doing it. They have been for some time. So it's very hard to say what's possible to happen, but we're certainly on high alert, and we will continue to be.
Thank you very much. The gentleman's time has expired. The gentlewoman from New York, Mrs. Maloney, who is also the chair of the House Committee on Oversight and Reform, is now recognized for 5 minutes.
Please. Thank you. Thank you very much, Chair Lady Waters, for your leadership in calling this hearing. Mr. Powell, first I want to say that at a time when we are still recovering economically from the COVID pandemic and we're facing challenges at home and now in Ukraine, I think and I feel deeply that the Fed should not be subjected to political stunts in the Senate with boycotts by the Republicans, and the Senate should consider the pending Fed board nominations as soon as possible. The Fed has an important job to do, and President Biden has put forward qualified nominees, and we need to get this done. So that's just my main point. With that said, as you and I have discussed in the past, the economic recovery has not been even, and we still have a ways to go to ensure our economy works for everyone. Just as one example, the Black unemployment rate remains at nearly 7%, which is more than double the white unemployment rate. And later today, the Select Subcommittee on Corona Crisis is having a hearing where we will be looking at the depth of the pandemic's impacts on child care providers and workers and the results that has on our families and our economies. So I want to ask you about the monetary policy report the Fed released on Friday. The Fed notes that the labor force participation rate remains well below estimates of its longer run trend as a result of retirement and people out of the labor force and engaged in caregiving activities. From both a macro perspective and a micro perspective, what does this drop in labor force participation mean for the U.S. economy, and what does it mean for those workers who leave the workforce to care for their children or family members?
Well, having having a lower labor force participation rate now, it's about a little more than a percentage point lower than it was. It reflects a lot of retirements, and what it means is that our labor force is smaller. That has consequences, including it's contributing to the labor shortage that we're seeing across industries all across the country. If we had a few more million people working, then we wouldn't be feeling that quite so much. It also means the potential output of the country is lower. Many of the people who are not in the labor force are retirees who have made a choice, but some of them are still people who want to come back but perhaps can't because of childcare activities or fear of COVID or other factors. In any case, it's been the decline in labor force participation that we've seen has been much larger than that of other comparable nations. And it was not something we expected, and it's certainly something that's now contributing to wage inflation and actual inflation and to the labor shortage that we're currently seeing.
Thank you. It's been announced as a result of the Ukraine war and other disagreements that Russia and China are now moving to trade completely in their currency, no longer using the dollar. And Pakistan has flown in to meet with Russia. There's some talk that they may be part of it. What effect would that have on the U.S. economy if China and Russia no longer use the dollar in certain block trades around the world and with each other? What effect, if any, would it have on our economy?
Well, we do benefit from being the reserve currency for the main reserve currency for the world. And that really is because we have open capital accounts and the rule of law, and we have inflation, over a long period of time under control so that the dollar preserves its value. And so our markets are the most liquid, and it's the place where people want to be. Over time, the question is, if some want to move away from the dollar, what will be the effect on us? I don't think it's something you would feel right away. Over time, they would have to create an economic ecosystem whereby another currency becomes, a better currency for them to use. What we can do is we can make the dollar the most attractive currency by continuing to have the rule of law and open capital accounts and make it an attractive place for people to invest and to use in their businesses. There wouldn't be any short-term effect of that. Over time, though, it would I suppose it would diminish our status as the reserve currency. It's also possible to have more than one large reserve currency, and there have been times when that was the case, and so it's not really clear.
Thank you. My time has expired. Thank you. I yield back, Madam Chair. Thank you.
Thank you. The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Madam Chair, and to continue several points that a number of my colleagues have raised. As Putin's aggression in Ukraine has continued to escalate, the U.S. and its allies have responded in a unified voice to condemn Russia and apply economic pressure. Chairman Powell, could you discuss the difficulty of predicting what the implications will be of locking Russia out of SWIFT?
So again, on sanctions, we're not the right folks to ask. We don't design them. We don't implement them. So it would be really a question for the administration.
Let me word it this way. How sweeping do you foresee the ripple effects through the U.S. financial system? Is there an effect on us as those actions take place?
With big actions like this, there may well be unintended and unexpected effects, and hard to say what those might be. In the economic sphere, you're seeing, not directly to your question, but we're seeing concerns over palladium and neon and corn and wheat, shortages of those potentially, but so it would be difficult to say exactly what the effects could be over time. The United States, our financial institutions and our economy do not have large interactions with the Russian economy. It's a relatively small thing, and it's gotten smaller and smaller in recent years. So there wouldn't be direct effects from these kind of things on the U.S. economy, it's hard to think what the second order effects might be.
Thank you. You've answered my question. As Congresswoman Wagner touched on, the price of oil has continued to climb during the past year to its highest level in more than 7 years. And we now see international banks appropriately shunning Russian oil, even without energy sanctions. Can you describe the range of different scenarios the Fed projections paint in regard to this? And along with that, how do you see this potentially impacting the already rampant inflation issues?
Well, it obviously the price of oil depends on events that haven't occurred yet. It really depends on where this goes going forward. We have seen prices move up, including just in the last couple of days, and they moved up quite substantially since, if you go back 3 months before this incident kind of began, prices are up quite a bit. The effects are going to be passed through into gas prices, into lower economic activity, and into inflation, headline inflation. And the larger the increase, the larger the effect. But the question then will become, that's a price level change. Is that going to lead to repeated inflation increases at that time? And that is not necessarily the case. And of course, we would use our tools to make sure that it's not the case.
And of course, representing the constituency I do, which is both oil and gas and production agriculture, we take very careful note of what those actions will affect, how they will affect world crude oil prices. And of course, the Ukraine being a very historic major grain producer, my wheat people also are prepared to step up and match that. But it all underscores, I suppose, the increase in energy production in the United States and supporting policies that will not penalize or drive capital away from domestic oil and gas production. That's more of an editorial on my part, Mr. Chairman, but I note that we stand ready in this country to replace resources that may not be available or affordable for the rest of the world. And we just need a little incentive and encouragement from this side of the room to utilize those things. So my last question in the time I have remaining, the economy is currently operating in what I think we'd all describe as, at the very least, massive economic uncertainty. And when you deal with this 40-year inflation and supply chain issues and the COVID-related issues, hopefully as we're in that final stage, can you elaborate on how critical it is for the health of the economic system to be reliable and to maintain liquid markets so we can navigate through all of whatever lies ahead of us?
Yes, so I would say our markets have been functioning well. There's a great deal of liquidity out there. We have now, between our swap lines and our repo facility for other foreign central banks and our standing repo facility in the Treasury market, we have institutionalized liquidity provision. And I think just the knowledge that that is there will help support good market function, which, despite all this volatility, we still have.
Thank you, Mr. Chairman. I yield back, Madam Chair.
Thank you. The gentlewoman from New York, Ms. Velasquez, who is also the chair of the House Committee on Small Business, is now recognized for 5 minutes.
Thank you, Chairwoman Water. Chairman Powell, thank you for being here today. Given what you said about the upcoming meeting in March and the illegal invasion of Ukraine, how is the Fed coordinating with other central banks around the world and accounting for their actions when considering adjustment to interest rate policy here at home?
So we're in ongoing contact, it's fair to say, with our major central bank colleagues. And actually, we have a meeting of all of them on Monday morning at 7, a virtual meeting at 7 a.m. on Monday. So it's something that we do regularly. That said, we conduct monetary policy to achieve domestic objectives, specifically here in the United States, maximum employment and price stability, and that's what we use our tools for. But it's, of course, the foreign events are very much top of mind right now, and it's enormously helpful to understand the perspectives, particularly of the Europeans, who are so much closer physically to what's going on. So that's an important channel for us.
Thank you. And Chair Powell, last week, the Fed published its 2022 Small Business Credit Survey. Among other things, the report found that small business applicants that used online lenders for their financing needs reported more challenges with their lenders than did applicants at other sources. The top challenges faced by borrowers from online lenders were high interest rates and unfavorable repayment terms. Can you explain the report's finding and what it could mean for small businesses that utilize online lenders to satisfy their financing needs?
So if I recall that survey, it did raise some interesting questions, and our people looked at it and actually saw differences in data gathering. So it's not clear that the data in the two surveys was comparable, but I do think it raises interesting questions, and we'll come back to your office on that.
And it might raise interesting question where we, through legislation, could provide some relief and regulations so that small businesses are not shortchanged when it comes to the most important element for any small business, access to capital, affordable capital. Chair Powell, during public remarks last month, acting comptroller of the currency, Sue, stated that in the not too distant future, the OCC, Fed, and the FDIC will issue a joint notice of proposed rulemaking to update the Community Reinvestment Act. Does the Fed also believe a joint NPR is possible, and when do you expect it to be released?
Yes, we do. We think that will be ideal, and we're working very closely with the OCC and the FDIC and to come up with a consensus notice of proposed rulemaking reflecting all of the comments that we got on our advanced notice of proposed rulemaking. I think the timing is soon. I wouldn't want to put a specific date, but I know that we're going back and forth, and it feels like we're getting very close.
Right, thank you. And Chair Powell, a note published by a Credit Suisse strategist over the weekend warns that a decision to exclude certain Russian banks from the SWIFT system, which I support, could result in missed payments and giant overdraft with significant consequences for money markets, thereby forcing the Fed and other central banks to intervene to enhance liquidity to offset missed payments. Do you see this scenario as likely?
No, I don't see that as likely. Of course, we always appreciate looking at different risk scenarios. But again, given the relatively modest exposure that our banks have directly to Russia, and given the existing tools we have to provide liquidity, I don't see that as a likely outcome.
Okay, thank you. I yield back.
Thank you. The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Madam Chairman, thank you very much. Chairman Powell, thank you for taking time to not only join us today, but your insight into monetary policy. The monetary policy report of February 25th, seemingly still hot off the press, brings about, I think, a good review of the Fed's analysis of where we are. And I know there's that temptation by members of Congress to hold you accountable for things which are not within your purview. But on page 3, you talk about special topics. Page 3 of your February 25th, 2022 monetary report. Special topics: low labor supply. Next, it goes to several other issues, then supply bottlenecks. As a member of Congress from Texas, both of these are highlighted to me on a daily basis as I receive feedback. This is inflationary also. We have taken a bit of time with you to probe with you your ideas that I think you have professionally handled on behalf of yourself and the Fed, the issues related to energy. But the bottom line is we can't get people back at work. We find that turns into a low labor supply, and then we've got bottlenecks. These are all hand in hand, glove in glove together, in my opinion. I took a few minutes just now to look at the labor unions and schools, teachers unions. But let's move to the federal government. Where is the federal government on their employees coming back to work now by OPM?
I don't know. We're an independent agency. I'll tell you where we are, we're in the middle of that process. Probably closer to the beginning than the middle.
I know you are, but you see, if they don't come to work, then others don't come to work. So I think your point and my point is well made. I believe that what we need is your robustness, not just your acumen in these issues, and your robustness within the administration to actually let them know that for this report, monetary policy, to be correct, that you believe inflation is a short-term, meaningful hindrance on our economy. They're going to have to make, meaning the White House policy, they're going to have to understand what caused this. And I think that this administration, I think the Democratic Party, I think this Congress has made friends with inflation to encourage it. And that if your prognostication is going to come forth that we end this inflation, we're going to have serious changes. Because right now in Texas, which has been relatively open, I don't see relief on the horizon. And I think that this administration, this Congress has a lot to do with it. So without chastising you, I meant to help you. I would like for your voice in this administration and within halls of Congress, perhaps doors that are shut, for them to understand that they have actually made friends with and are continuing inflation, whether it be with teachers unions or whether it be with OPM. And we've got to get serious about getting people back to work, because as you tap down the amount of money that is put in the economy, as that moves, it's going to have to correspondingly have people that come to work, that pay taxes, that move the economy. GDP as a term we used earlier today. It's shifting this big, massive task. So you've almost got a whole 30 seconds left. But I'd like to, without defending yourself, to say to you, I'd like for your voice of reason, of prosperity, of future to come true as you would like. Did I ask you a question? Okay, I'm going to support you. I'm for you. How can we help you?
I do think honestly, we have the tools and we have to use them we will use them to get inflation under control. But to the extent we get help from the supply side, it'll make that job so much easier. It's about labor force supply. It's really about supply constraints and shortages and that kind of thing. It's also about exogenous events like a war, which will drive up the price of oil and gas, and that'll get into prices, certainly, and we'll make sure that it doesn't provoke a cycle of inflation.
This is what happens when you have to rely on other people for your food, cheese, and energy. Thank you very much, Mr. Chairman.
Thank you, Mr. Sessions. You can help Mr. Powell by asking your friends on the Senate side to confirm his appointment. The gentleman from Georgia, Mr. Scott, who is also the chair of the House Agriculture Committee, is now recognized for 5 minutes.
Chairman Powell, how are you?
Fine, thank you. How are you, Mr. Scott?
I want to sound the alarm here this morning. And I want you to listen to me, and I want the nation to, because I'm the chairman of our House Agriculture Committee. And I'm very worried about this turmoil over in Ukraine and Russia's violent, illegal, and criminal action that they're taking, and the impact that this has on global trade, and most importantly, our own food security. We could very well be on the verge of a hunger crisis all over this world. I want to share with you some research and the nation so we can understand what this Ukraine-Russia situation is causing. Today, Russia alone is producing more than 2/3 of the 20 million metric tons of fertilizer used to grow corn and wheat around the world. One country producing 66% of the fertilizer that is needed. And when you combine Ukraine and Russia, also, these are the two largest exporters of wheat, corn, and barley, producing a quarter of the world's wheat in these two countries, making this impact a crisis of soaring magnitude when you have this much, and these two countries are warring each other. So I want to sound the alarm on this. I want to ask you this question. I want to ask you, Chairman Powell, the disruptions and rising prices from these commodities will destabilize global food markets and threaten our food stability and social stability. So my question to you, Mr. Chairman Powell, to what extent could these developments create a financial stability risk here at home and abroad? And what must we do? We can go without a lot of things in this world, but the one thing we cannot go without is food. And when you have this much power on our food security for the world in the hands of these two countries warring each other at this time, what can you do about it?
Sir, I think your point is very well taken, and I think it's shipping, it's corn, it's wheat, as you pointed out, it's fertilizer, and we see that getting into food prices and into the food supply just in these early days after the sanctions have been put in place in the war, less than 2 weeks old now. The Fed doesn't really have the tools to address this. This is really a matter for Congress and the administration, I think. But you're right to call attention to it, and I do think that this is understood and understood that that help will be needed here.
Well, I just want to say that we cannot allow the world to get into this desperate situation. So I'm giving this as sort of a Paul Revere moment here. I'm not saying the British are coming, but I'm saying the Russians are already at the door, and they could cause worldwide hunger. And I hope that free nations around the world can come together and realize that this is not just Ukraine's fight. It's our fight. And we have got to win this fight. And hopefully we can get more of our nations to come together and end this situation in Ukraine and Russia before it causes truly a worldwide war.
Thank you very much. The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you, Chairwoman Waters. Chair Powell, when your former deputy, Mr. Quarles, came before the committee last May, I pointed out to him that just a week before the April inflation rate had been reported at 4.2%, the highest since 2009. The rate in March 2021 had been only 2.6%. I asked him if we were paying the price for monetizing a huge federal debt, what the late Dr. Friedman and former Chair Bernanke both called helicopter money. Mr. Quarles told me that he didn't believe the Federal Reserve was monetizing the debt. Mr. Chair, looking back a year, does the Fed continue to deny that it has been monetizing the debt? And do you believe that you should have acted before now to rein in the inflation rather than let it now exceed 7.5%, the highest rate since 1982?
So I think by monetizing the debt, what that means is for the central bank to purchase the debt with the intention of holding it. And that's not the intention of here. You know, we're about to start shrinking the balance sheet, and we will return the balance sheet to, you know, a size relative to our economy that it was before. So also that is not at all our intention. We purchase longer term securities in order to drive down longer term interest rates to support economic activity. I'd also say that that's not really what we think of as the source of inflation. Admitting that inflation, proclaiming that inflation is far too high and that we are committed to using our tools to get it back down. It's really about very, very high demand, particularly in the goods sector, related to a spending shift that happened in the pandemic, and supply constraints that we didn't foresee. International supply chains, labor constraints, low labor force participation right across the economy. It's a very different kind of inflation story than we've had in the past, but it's one that we have to deal with, and we will deal with
it. Chair Powell, when you appeared before this committee in March of last year, and I asked you to clarify the purpose of the Federal Reserve collecting data and employing stress tests related to climate change, you assured us that the Federal Reserve would be collecting the information to help financial institutions learn about climate risk and wouldn't be using the information for regulatory purposes. In recent weeks, considerable controversy has emerged in the confirmation process to fill 4 vacant seats on the Federal Reserve Board. One of the nominees has a record of advocating for aggressive Federal Reserve regulation related to climate change, including actions that would regulate capital allocation away from fossil fuels. I won't ask you to comment on the confirmation process, but can you continue to assure us that the climate data and stress test proposed by the Federal Reserve won't be used for regulatory purposes and driving investment away from traditional energy sources here?
Climate, we call them climate stress scenarios, and we haven't, you know, we're actually just building the capability to do this. And the idea is not to use them the way that we use the traditional stress tests to set capital levels, in effect. The idea is more to allow financial institutions and also regulators to understand better, you know, the extent to which and the ways in which climate financial risks has any implications for the banks. That's the purpose of it. I'll add, though, that it is not our job to tell, we don't think, to tell banks which legal companies they can and can't lend to, and I don't see that as an appropriate role for us.
I'm really glad to hear that. So that's an absolute, unequivocal, guaranteed answer that the data will not be used for regulatory purposes in any way whatsoever.
I can just say that first of all, we're not even doing the tests yet, or scenarios yet. But certainly that's not going to be their construct. The construct will be what I said, which is to help us understand better, not to set capital or otherwise put further regulatory requirements on. Okay.
Thank you so very much. I deeply, deeply appreciate that, and I yield back. Thank you.
Thank you very much. The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Good morning, Mr. Powell. How are you?
Fine, how are you?
I'm good. And I just want to thank you. You've been getting picked on inflation, But I'd like to start with chart 1 of your book. I always ask about your charts because I love them. And chart 1 shows a tremendous growth in employment, as does chart 2 shows a tremendous drop in unemployment, the converse of it. And it's like dropped from about 14% to 4%. Do you think that the Fed's monetary policy helped in reducing the unemployment rate?
Yes, for sure.
Okay. And, 2 years ago, we were going into a pandemic. You and I had a conversation about the potential for a worldwide recession of a magnitude we'd never seen. Did we hit that? Did we get that recession?
No, we didn't.
And you may recall, I'm a bankruptcy lawyer. That's what so I look at things kind of with the pessimist eye. I expected many, many bankruptcies. Did we have those? Did we have the bankruptcies that we thought we might get?
We sure didn't.
Okay. Do you have any idea how much the gross domestic product has grown in the last year?
I want to say 5-point-something%.
Well, it's actually more than that. And one of your charts has that. I think it's on page 23, chart 14. It's went from 2020 to now. It went from less than 17.5 trillion up to 20 trillion. So it's substantial, about 15%. Now, I don't think it's that much, but it's substantial. Did we expect that when we went into COVID?
You mean since the trough? Yeah. No,
Yeah.
I was just giving you the last year. So, as you know, we were looking at some really bad scenarios and hoping they wouldn't happen in the first half of 2020.
Now, the Fed took some pretty dramatic actions, as did central banks around the world, did it not?
Yes.
And the Congress, led by the Democrats, took some pretty substantial and dramatic steps, including the CARES Act, the American Rescue Plan, the infrastructure bill, to build a better America and to help us get out of what looked like it could be a tremendous recession. Now, I could ask you, did it not? But I'm not going to lead you in that one. But what I do want to talk about is the fact that despite the one flaw that Republicans can find, which is inflation, we have lower unemployment, a bigger economy. Do you know how many other countries have higher inflation around the world than America? 64, according to Trade Economics Inflation of country by country. 64. This is a worldwide phenomena, is it not?
Yes, it is.
So I want you to take a look at a couple more of your charts, because I think these are probably the most important. And they are the median wage growth found in chart C on page 12, and the change in the price index for personal consumption on the next page, found on page 13, diagram 8. According to your chart on page 12, the bottom quarter of wage earners have had their wages increase by almost 9%. You see that?
Yes.
And the next quarter by 6.5%, 7%. You see that?
Yes, I do.
Okay, and then you look over to the next page, and we're running, I think you said it, about 5.5% inflation. So wage earners in the bottom half are making more money than they are potentially, if I do the math, they're making anywhere 8-9% against a 5% increase in cost. Now, it's not apples to apples, but wages are going up, are they not?
The wages in the bottom quartile, have gone up in real terms. I do not think that's true for the second, third, and fourth quartiles, but it is true for the bottom quartile that their wages, nominal wages, have gone up higher, more than inflation.
Okay. So last question. When you and I spoke at the beginning of this year, and my time has expired, I'll ask it to you later on. And I thank you for your service, sir. I thank you for keeping us out of a recession. I think we built a better America by staying out of the recession. I yield back.
Thank you so much. The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. Thank you, Chairman Powell, for coming here. And I also appreciate your book and the work. And frankly, just yet again, want to highlight the really heroic work that the Federal Reserve did to create stable markets, particularly in March and April of 2020. Since then, of course, there have been a lot of economic distortions, one of which is the ongoing inability of the Federal Reserve to stabilize its own balance sheet, which is now over $9 trillion. I appreciate Mr. Perlmutter highlighting some of the good news. And frankly, I'm positive that he has previously operated a lemonade stand because you can always turn something good out of the lemons. So there's no good news, but the concern is that in the long term, this has come at the expense of sound money. And so just over a year ago, I talked to you about sound money, and as the US dollar represents sound money, because many of us anticipated that inflation was not transitory and that the quantity theory of money might have some impact on inflation. So in light of the fact that we have seen substantial change in the rate of inflation now versus what was showing up then but was anticipated, do you still think that the US dollar is sound money? And either way, what are the threats to the US dollar as sound money?
The US dollar is sound money, yes. The threats to the US dollar as the reserve currency really in the near term are to displace the US dollar as the reserve currency, if that's your question. You need to be a very attractive place to hold large amounts of reserves.
It's really different than that because we are probably still going to be the reserve currency since the world grades on a curve. And frankly, the planet's never had this much debt since World War II. So all of the countries around the world did similar things. The discipline of the Bretton Woods era was gold. I don't know that there's magic just in gold, but there is magic in discipline. So if you look at sound money being defined by a stable store of value, an efficient means of exchange, and a trusted record of account, you've at least taken some dings on store of value. And so as you've seen people decide to filter transactions and develop technology and regulatory frameworks that are intended to be able to filter transactions, it's not as trusted or efficient as a means of exchange or a record of account. And so those kinds of things, not so much do we do okay on the curve, but is it truly sound?
I'm not sure I followed the last part, but I do think that, look, inflation is indisputably too high. We are using our tools to bring inflation back down to levels of price stability, and we will accomplish that task. Longer term, the U.S. dollar is easily the best currency, and it's because of what I just said. It's also because of the rule of law, and the fact that we're the incumbent, and we as long as we observe the rule of law and keep the dollar relatively, keep inflation low and predictable, that will remain the reserve currency.
Yeah, okay. So thank you, Chairman. And look, historically, there have been multiple reserve currencies. And generally, when something loses its status as a reserve currency, it's not just because of other things that unfold, but it's because the value is debased. And we can come up with fancy words like modern monetary theory or quantitative easing or, similar to quantitative easing, but not really the same. When the Federal Reserve's balance sheet's growing, in a way, it represents the Fed as the lender of last resort. We're not constrained by the taxes we collect. We're not even constrained by the amount of money the world will lend us. We're constrained only by the will of Congress to not spend more. And what are you going to do? Not cover the spending, the prolific spending by Congress. So moving on, just talking about, the Fed's role, of course, stable prices is really one component. The other is full employment.
And I wonder if you think, in light of Mr. Perlmutter's reference to chart 2, if chart 4, which is the labor force participation rate, trends the right way. And as you link to the next thing, as a regulator, there's a lot of pressure for you to do ESG. What can the Fed do, and what does Congress need to do to strike those balances?
With relative to ESG?
And full employment.
Well, full employment, I think most members of the FOMC now think we are at labor market conditions that are consistent with maximum employment.
With 60% labor force participation, 62?
I mean, the maximum employment can never be higher than the level that's consistent with price stability.
The gentleman's time has
I think
expired.
we're at that level.
Thank you.
At least.
The gentleman from Illinois, Mr. Foster, who is also the chair of the task force on artificial intelligence, is now recognized for 5 minutes.
Thank you, Madam Chair. And I'd like to add to Representative Perlmutter's list of your triumphs the record level of small business formation. And so I think that when you try to preserve the very strong economic recovery, I realize you have a dual mandate, but keep an eye on that one too. It's one of the most important successes we don't talk about enough. Do you remember the misery index?
I do.
Yeah, and so that when unemployment drops from 14% to 4%, so drop by about 10%, and then the inflation goes from 2% to 7%, so up by 5%. Does that mean the misery index has increased or decreased?
It would be decreased.
So thank you for that. Now you actually mentioned repeatedly that the inflation problem was largely one of goods. And not so much one of demand and also of labor shortage. And so can you make any rough estimate of what fraction of the inflation we're seeing was due to sort of those three effects?
So I should be clear. Inflation is also too high in the service sector. I wouldn't want to oversell that. But the real big change has been in goods, which had negative inflation or close to zero inflation for 25 years. I don't have off the top of my head the ability to just tell you what the contribution of that is, but it's big, and it's a significant part of it. It's a lot of it also that is energy, which is not
obviously a worldwide problem.
Yeah,
and exactly. So that this is if you could get back something a little more quantitative from your staff on that, I'd just be really interested in knowing your estimate. Now, in terms of the labor shortage, back in the days when we had a different Senate, they passed comprehensive immigration reform that was then, of course, blocked by Republicans. And many studies at the time indicated it would be a huge positive for our economy to pass comprehensive immigration reform. And that was at a time which didn't have an extraordinarily tight labor market. Is there anything you can think of that would invalidate those studies that showed that comprehensive immigration reform in both the low skill and the high skill sectors would be a huge plus? If
I can answer that this way, if you look back at the trend, let's say 5 years ago in that range of immigration, legal immigration, people coming in, and look where we are now. We're now several million people, many of whom would be in the workforce short of that. So lower immigration is definitely part of the story of the labor shortage. But that's what I would say.
So is there anything quantitative you can say about the time scale for unwinding the balance sheet? Do you think of this in terms of a fixed time scale that we want to go back to normal in the next 2 years, 3 years, or do you say we're going to take it down by 1% a month, or are you anticipate some sort of feedback loop where we look at the taper tantrums or the equivalent and sort of adjust it as you go?
So the way we did it last time is we set a cap on the amount that will run off, and anything above that gets reinvested for both MBS, mortgage-backed securities, and for treasuries. We haven't had that discussion at the committee. We will have it in 2 weeks. But I guess it takes. It turns out that the level of the cap doesn't really matter that much for how long it takes. Something in the range of 3 years to get back to where you're trying to get to. And the way we define that, what is the end? The end. We look at the size of the economy, the size of the banking system, and we ask, what's the level of reserves that we'll need at that point? And so we set a course for that place, and then as we start to get close to it, we might slow down a little bit, like as though it were an airplane, And that's the way it will work. But I think something in the range of 3 years to get back to what the balance sheet needs to be, which is basically reflective of the public's demand for our liabilities plus a buffer and what we call ample reserves.
Yeah. Do you have an estimate for how many hours of your life have been spent attempting to explain the difference between quantitative easing and monetizing the debt to members of Congress?
No, sir.
Okay. All right. Now, one of the most valuable functions of the Fed is to provide the emergency assistance to the financial systems of the free world. And you mentioned that you stood ready. Are there specific things you're worried about in Eastern Europe where the economies are more tightly tied to Russia, where you may really have to step in and get involved? Any specific worries?
What we're watching is sort of the global markets and the dollar funding market, and we're seeing markets that are functioning, and of course we have tools and we have things in place to deal with stresses should they emerge. That's really what we're doing, and as I mentioned, markets are functioning, so we haven't had to deploy any of those tools.
Thank you, and my time's up. I yield back.
Thank you. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair, and welcome, Chairman Powell. Good to see you again. We're in the middle right here of a really disastrous situation with Ukraine, and the part of the approach to corralling the Russian advance there is on the financial side. And it would appear to me that we probably didn't do this as quickly as we should have. Didn't look to me like we had a plan. If we really wanted to get involved financially, we should have been sitting here saying when they move the 1st battalion or regiment or wherever you want amount of troops you want to talk about on the border, we should have said something, well, okay, if you move another one there, we're going to start doing things to you. And we didn't do that until they started to invade. And now all of a sudden we're playing catch up. So that begs the question, we know that China is watching all of these actions very, very carefully. They're looking at what Russia does, how we react, what we do, how the rest of the world reacts, what they do. So to me, we need to be sitting here as a country, as the Fed, as congressional individuals saying, we need to be ready for the Chinese when they invade Taiwan, because I see no reason why they will not do that shortly. So if we don't prepare for that, shame on us. So my question to you is, are you beginning to think about what kind of actions you would take or support or suggest to the administration should China take over Taiwan or attempt to do this? Because this is going to be a completely different scenario because of the size of China, the size of the military, the size of Taiwan versus getting into Eastern Europe. So that's kind of a large question, but can you like to jump into it?
Sure. So, those questions are really questions that are dealt with at the National Security Council and the Defense Department and the intelligence agencies and the Treasury Department. We're interested students of all that, and we have our technical expertise that we can contribute. But honestly, we're not.
Mr. Chairman, now I listened to you very carefully a while ago, and you made the comment that you're looking at making policy for anticipated situations in the coming months with regards to a number of things. What happens with the economy, what happens with inflation. And so if you're not doing that, I understand you may not want to tell me today because that would be helping the Chinese who are probably watching this right now. I understand that. But just a sort of wink and nod to say, yeah, we're looking at that would certainly be nice because it would give us a level of comfort to know that we're not going to be, behind the eight ball again.
Well, as I also mentioned, we do model alternative scenarios of various kinds. And, we, in fact, with every teal book, which is our document that we use at the FOMC, we run half a dozen of them in great detail, and people study those, and it helps them think about alternatives. So I'll just leave it at that, if I could.
Okay, thank you. I'll let you off the hook on that one. With regards to inflation, we've talked about it significantly here today, and I think sometimes that you're giving way too much credit for it and giving way too much criticism for it. I think that there are a lot of things that are outside your control that happen that basically affect inflation that you have to react to. You don't make monetary policy. from the administration side. You don't make legislative policy from the legislative side, and yet you have to react to all those things. So I had an economist, I'm the ranking on small business, I had economists come in to talk to our committee the other day. And I asked him to break down the different causes of inflation. And I said, well, let me identify at least what I think are four significant causes. One is money supply, the amount of money is pumped in, either through Fed actions or through our actions as Congress, regulations, supply chain / workforce situations, and energy. And he broke it down like this, and he had some charts, and he started going off, and I said, just give me the percentages. And so he's roughly 40% due to money supply, the money that goes in as a result of Fed actions or congressional actions, 20% regulations, 20% supply chain, and 20% energy. So if you look at that, I know Mr. Foster, while I was looking for some answers, so hopefully I've helped him with this question. If you look at that, basically you don't have a lot of control over regulations. You don't have a lot of control over supply chain and no control over energy policy. And money supply, if the Congress gets involved and passes these massive bills and throws a lot of money in there, you don't have control of that either. So the amount of control over this is probably in the neighborhood of 20 to 40% at best. So, you know, my concern is that when you say that you're trying to help things with inflation, it really goes back to the administration and to us as Congress. You know, the administration, first thing they did was stop the pipeline, stop oil drilling, and prices went up. And so that right there is 20%. So it's important, I think, that we understand that. I'd like for you to comment, if you would, just for a second. We're out of time. If you'd like to comment.
Sure. Yeah, interesting breakdown. We can continue this discussion. We would have a little different assessment. I would just say, though, we welcome, this is a lot about supply side issues, and we welcome any help we can get on that. And we're looking for help from improved supply side.
Okay.
Thank you very much. The gentleman's time has expired. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Douglas.
Thank you, Madam Chair, and Chairman Powell. Welcome to the committee. Before I ask my question, a statement, they say one of the benefits of inflation is that you can live in a more expensive neighborhood without moving. And so I thought that was very interesting.
That's a good one.
Statement I had seen, and I thought I would bring it to your attention. You know, according to the recent analysis of branch closures by the National Community Reinvestment Coalition between 2017 and 2021, banks have closed as many as 7,000 branches across this country, 1/3 of which was in low-income and moderate-income communities, neighborhoods of color. To what extent is the Fed considering these banks as in contemplating which reform to implement and strengthen the Community Reinvestment Act and the importance that banks' branches play for nearby communities?
So I do think that's a focus of the CRA and also of the focus that we want to strengthen in our proposal that's out for comment. Actually, it's now, we've had the comments and we're getting ready to put a notice of proposed rulemaking out. But we do understand the importance of presence in the community and service to the community. And those things do go into our CRA assessments.
Okay. Mr. Powell, according to the latest forecast from Goldman Sachs and the Federal Reserve, which raised interest rate more than expected this year due to high inflation and labor market approaching full employment, can you speak more on this? Should we expect the Fed to raise interest rate at all several remaining policy meetings this year? And should we expect the Fed's main rates to be by the end of this year?
So yes, so the inflation is running well above our target. The labor market is extremely tight. The economy is growing strongly, and our policy rate, we do expect to move our policy rate up in a series of rate increases this year, away from the very low setting that we put into place during the acute phase of the pandemic, and to a more appropriate level, given the fast recovery and the strong recovery that the economy has had, given the fact that inflation is running so far above our target. We do expect that that will be appropriate. We've communicated that transparently and clearly, and markets have accepted it. And it is our plan to return to price stability while also supporting continued expansion.
Okay, and I want to make sure that I understood the statement that was made earlier. And I know you had the opportunity to observe other inflations that we've had. With wages going up, as they say, and the bottom half are making more in earning, do you consider that we in a better situation to deal with the inflation that we have now compared to inflation in the past?
I think that this inflation is substantially higher than anything we've seen since I was in college, 50 years ago. So this is strong, high inflation, and it's very important that we get on top of it, and that's exactly what we're going to do. I would say this: the labor market is extremely strong. So from that standpoint, I do think we're in a good place from the standpoint of trying to get inflation under control. Workers are still going to be getting good jobs and pay increases for some time, so the economy is strong, and that means the economy can take the rate increases that we're going to be making. Ultimately, we need to get demand and supply back in alignment so that we can get inflation back to a more appropriate level.
Okay, thank you, sir. And with that, I yield back, Madam Chair.
The gentleman from Michigan, Mr. Huizinga, is now recognized for 5 minutes.
Thank you, Madam Chair, and Chair Powell. I appreciate this opportunity. I'm actually going to pick up on what my colleague from Florida was just talking about and add that to what my colleague from Missouri next to me here was talking about. And you may have said that the 40-20-20-20 ratio that came from Douglas Holtz-Eakin, breaking that down, about 40% of inflation being tied to monetary policy and spending, 20% to regs, 20% energy policy, 20% supply chain. You might disagree with that, is what you had said, but do you believe that spending has contributed to the situation of high inflation that we are in?
Okay, thank you.
So I may have misunderstood what your colleague said about.
Madam Chair, I ask that you suspend. I think Mr. Lawson has his microphone on yet, and we're getting a little crosstalk. So if we can maybe add a few seconds back here.
Okay, is the gentleman muted now?
No, clearly is not.
I think you can resume.
Okay, I'm just like to would ask that you have a light gavel at the end of my time here. I think we were having a little crosstalk as we have to go back on that.
So I may have misunderstood. I thought that the 40% was money supply, but you made it sound more like a monetary policy. And so I would look. I mean, look, we can discuss those numbers, but that makes more sense to me.
Point being, has spending contributed to inflation?
Yes, I think a number of factors have, including policy.
And I would agree with that. And frankly, many of us have sort of warned or talked about this situation. We have record debt right now, previously without conflict. Now, war and rumors of war that we hope aren't going to happen may even increase that debt. And I'm afraid that our spending habits are putting you and all policy decision makers in an even tighter box. Look, we all know that inflation is real. It's hitting, whether it's gas, $3.79 versus $2.74 a year ago, groceries, you name it, housing. And when you were here in July, I talked about the housing situation. My family's in construction and what that means. And we can't just magically wave a wand and say, oh, we're going to lower prices. That just simply isn't realistic. But what I heard last night is that the president is acknowledging people are living paycheck to paycheck, and he understands that. Yet the message I keep hearing from the president and my friends on the other side of the aisle is we need to spend even more. And I'm concerned that is going to put us again into an even tighter box than we currently are. If you care to touch on that before I move on.
I should stay away from fiscal policy if you don't.
Well, and look, I'm not asking whether you support a particular bill or not. Theoretically, we're your classroom. America's your classroom as they're watching this right now. Spending is a contributing factor to inflation, correct?
It is, but it's not really our job and not ours to comment on. We do have a role here, and we need to do it.
Fully understand that. I just the facts. That's all right. So I'm going to move on to another issue, which is rules-based approach to monetary policy. In the 114th Congress, I think it was in 2015, I introduced the FORM Act, which would lay out a rules-based monetary policy. And I know in your testimony today indicated that a rate increase is expected, and you confirmed that with the ranking member. So what I'm curious, though, is since 2017, the Fed's monetary policy report included a section on monetary policy rules. And you've been very clear, and now Secretary Yellen has been clear that a lot of rules are modeled and looked at. The only exception to this was 2020, the first year of the pandemic, and maybe more surprisingly, a report that was just released this month. For example, in 2017, monetary policy rules section of the report stated, quote, monetary policymakers consider a wide range of information on current economic conditions. It's not included in this report. Can you shed some light on why it was omitted this year?
I honestly didn't know if that was the case, or if someone talked to me about this before the thing was printed and sent up here. I don't remember it. That's also a real possibility given the number of things I have on my mind right now. But as you say, we didn't have it in July of 20. We'll have it in the next one. I don't think there was no big thought, as far as I know, going into that. It's just sometimes we include it, sometimes we don't. I will say that I think thinking about policy through rules is something that I learned a lot about monetary policy doing that. When you're actually implementing policy, no committee has ever really used policy rules as a way of setting policy, but they use them to inform your thinking.
Yes, and I guess my idea with the FORM Act was to then inform the market, and that includes us as citizens as well. And I'd like this committee to re-examine that. So I appreciate the indulgence, Madam Chair, as we had that crosstalk at the beginning, and I yield back.
Thank you. The gentleman from Illinois, Mr. Caston, who is also the Vice Chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Chair Pro Tem Powell. I'm always struck that there's a real risk of hubris for those of us in our line of work, at least up here. If we get to write laws, sometimes we conclude that means we can write the laws of physics as well, which is dangerous. And I am troubled by some of the questioning of my colleagues and some of the debates around confirmation of your colleagues around climate change. The IPCC report that came out last week said climate change effects are outpacing our ability to adapt. We're seeing communities that sort of simultaneously have droughts, floods, and fires, and money is moving in surprising ways. I've seen stories just in the last month of one coastal community where the roads are being washed out that haven't yet paid off the bonds that were used to pay for the road, and they don't know how to reconnect those communities. Another community on the coast where the mayor is sitting there realizing that one neighborhood he can afford to build a seawall, and in another neighborhood it's cheaper to relocate people, and dealing with the political fallout of that decision. We have massive political risks that are coming, and we know they are coming because the laws of physics do not care how we vote. And I'm concerned by your response to Mr. Posey when you said that we've not even done the scenarios yet, excuse me, on the climate change. And I understand these are complicated, but if those scenarios haven't been done, I want to start, if we don't deal with the financial.
Well, Mullen's setting $1, Kelly. Okay, nice. The market looks good, right? The market The market is enjoying this. Well, right? It's pumping. Like it's pumping. We're sitting at 437. It seemed like we were about to crash yesterday, right? Today we're pumping. Like the market is very confused still, right? So 430. I wanted to ask our what is today's JWN? I have no idea, Josh. No idea. Um, no, again, Nordstrom looks really good. Like really, really impressive. BBIG is trying to move here as well. Back below 260, but that's okay, right? Nordstrom looks really good, guys. Below $20 yesterday, today 27. Wish we held those calls longer. We left, like Virgo said, we left some monies on the table, which is fine, right? Um, yeah, let's see if we can get a retracement on this thing somewhere. I mean, it has to dip at some point, right? That's a huge run. Huge run. Highs on highs on highs, flag high. So that thing looks really impressive. Spy, for you back down. Remember the last time you were asking about this, Alan? Spy go down, spy go down. It just kept pumping. So, yeah. Anyways, what else are you guys watching? So, Merlin testing $1. CPIC CTIC looks okay. What else? What's Bitcoin at anyways? We can go back to that, guys. With they, we can go back to that in a bit here. I just want to see what the market looks like. So Bitcoin is still holding $44,000, right? 44.4, which is nice, right? Which is nice. Anything else on here? Oh wow! Look at the S&P, guys. 438. ATXI. Okay, looks good. Okay, thank you. I'll take a look. IRNC. I'll take a look at those. But no, again, look at that, right? The S&P looks really good here. Little sell-off at that head and shoulder, but then said, nope, we're not gonna do that, right? And pumped. So that looks really good. Really good. Anyways, let me take a look at some of these other names here. Oh, there you guys are looking at. BBIG again looks fine. Of course, you want this thing to get back above $3, right? $3. Let me take a look at ATXI here. This was one we looked at really closely yesterday. Oh yeah, it's trying. I mean, it's sitting at the there's some resistance here at like 75 cents, right? Between like 70 and 75. We doubled up at that level this morning and sold off, and we're struggling here again. So yeah, 75 cents needs to clear that level, and then $1 is what you're looking at there. So we are looking at Facebook is what? Oh, let me take a look at IRNT. IRNT here. This thing better be above 5. Okay, good, right? So as long as that thing sits above 5, it's okay. Nice sell-off. Again, gap up, right? Sell off at the open. Triple bottom here. So that's a really good sign for potential turnaround. Broke above $5, which it failed at twice, and then eventually, right? Broke above. So that's a good sign, right? That looks good there. If this thing can push again and go back for 525, it's gonna run again, and then you're looking for 550, right? Pump it. Are you glad you saw CRM? What's CRM at? Wow. CRM 209. Okay, it's back to your yeah, right back down. SOPA. Sure, I can take a look at SOPA. SOPA here looks like, oh wow, 7%. It's not bad. Yeah, SOPA is one of those names. You guys remember SOPA from to $77? SOPA was $77, right? SOPA looks okay here. Let me take a look at the bigger picture. It's trying. It's trying to turn around, but what it needs to really do here is get back above 275 as well, right? That thing needs to clear 275 and then start pumping, right? Not a whole lot of volume, but it's a smaller float and you can really move. But it needs to clear that 275 here. Once it clears the level, I feel like it could really start pumping, like really start moving, right? So it needs to clear that level there. What else? Let me take a look at Facebook. What's Facebook doing? Facebook below 200, or is it above? 207. Okay. It's almost 2%. Yeah, Facebook is pumping. Well, I mean, like the S&P is pumping, right? So you see Facebook pumping as well. SOPA, and GHSI. So GHSI is a penny stock that was up this morning. Can't remember what it's sold off from that 36-cent level, right? Yeah. It's trying to move now after forming a nice bottom, right? Again, look for these bottoms after a morning sell-off. Look for a spot where we can find support and set the stop losses below, and you're good to go for potential recovery. So yeah, that looks fine. See if we can get back above 30 cents. Says 30 cents, yeah. See if we can clear this level, right? Once, twice, 3 times, right? Again, failed at this level 3 times already today, right? So it's really gonna need to break above, right? Get back above the 29.5, that the 29.5, something like that, right? 29.7, and then 30 cents ultimately, right? So 30 cents needs to clear that level there. GBS. A little bit now retracing. Good volume, but penny stock. Okay, sounds good here. Excure. Let me take a look at AMC here. What's AMC at? AMC is currently below $18. So again, we would like for AMC to be above $18, but that and that's the thing too, though, right, guys? Again, like that earnings call was absolute doo doo, absolute rubbish, right? Without that, imagine AMC never had that earnings call. Do you think we ignore the market today, or do we pump with it, right? We most likely pump with the market. AMC's at $19 and looking better, right? So it's just, again, with that earnings call, so a lot of people lost confidence, right? They're like, you know what's with this free popcorn over and over and over, right? And that's annoying. So make a double top and trap people. Did it make a double top? No, it did not yet. I mean, it's getting close. Like 438 is the same level we failed at last week. Remember, Alan, right? Failed at 438 last week and then sold off hard. But is it trapping people? Don't think you can say that yet until we break below key level support, right? Until we break below support level, it still looks fine here, right? The S&P still looks good, right? So there you go. There you go. What else here? Wow. Yeah, Nordstrom just doesn't give up. Like, this thing does not give up. It's just going highs on highs on highs on highs. When dip, I don't know, right? Can we see right? Mono, did you hold any of those? Like, are you gonna exercise anything? Wish we you know what I mean? So so yeah, we can go back to that call, that conference thing, and see what they're saying. It's exploding. The ATXI is exploding. Ooh, yeah, it needs to clear the 75 level here, right? So we have some resistance here. I'm gonna put a line there just for visual purposes here. But I think a lot of people are waiting for this thing to actually break above $1 and then go for that. What level? 120, right? We kept failing on 120 yesterday, so yeah, not bad. But it has some work to do here. We're sitting at a level that we failed at twice already, right? And you can see that we're struggling here with this the last 3 candles at 75. So yeah, it needs to break that level and hold above it, right? Confirm and then go for $1. AMC isn't worth less than a large popcorn, and isn't it worth less than it is, Professor. It is 76. Okay, break above, come back and test confirm, and then go from there. You like it this afternoon? VSEO. Victoria's Secret. Well, I mean, I wish this thing was pumping. Wasn't pumping. I wish it was selling off, right? Selling off. I also like ChargePoint earnings, potential. Yeah, ChargePoint. Yeah, so ChargePoint reports as well. We looked at this. We looked at it this morning. And I just like, oh wow, okay, ChargePoints. Okay, interesting. I like that we're testing 14 and holding, right? But not pumping. I don't like the pumps into earnings, guys, right? So if we can get a nice dip into the close, just like we did yesterday for Nordstrom, this might be something to watch, right? Might be something to watch. TXI. Oh yeah, it's trying here, right? So I'm just waiting for that test, right? Waiting to see what happens here at 75. We can do ChargePoint, yeah, Virgo. Again, if we can get something nice. I feel like ChargePoint might have some issues, like some supply chain issues, and just because of Lucid, right? Just because of Lucid, they might have some issues like that. So we need those discounts. We can't be pumping, because then no, thank you, right? Good, Christopher. How are you? Good. Don't forget to hit the like, guys, if you haven't already. Let's get to 200 likes. So hit the like, please and thank you. Hit the like, hit that subscribe if you're new to the channel, and there you go. Yeah, no, the S&P just does not want to dip here, like not at all. Entry, you're looking for an entry into TRVI. TRVI entry. So this thing's up. That thing's up 28% already, 29, right? It's difficult to look for an entry now because I mean these are some massive green candles. Like those are massive green candles. Can you keep going? Of course, right? But do we have resistance here? Yeah, we do, right? Around this level here, around $1.16 here, we have some resistance here. Initially support, right, Shannon? Support. So this level is going to be a first level of resistance. So we're sitting right at that resistance. I'd like a dip. You know, you'd want to see what happens at $1, right? Test and hold that level. Okay, cool. And then maybe there's something there. If not, you're looking for like 85 cents, right? They just had a massive pump already. So either wait for a dip and see if we can hold support, or watch what happens here at $1.16. If we're testing that level with a lot of volume, and then okay, cool, and then maybe you can FOMO with the stop loss, right? So yeah, exited at 514, lovely. Congratulations, good job. Yeah, your SPY calls are printing money. Congratulations. Yeah, SPY calls are printing. Printing. IMPP. What does that look like? IMPP here. I. Every time I say this name, it sounds very weird. Anyways, the entry for this thing was yesterday at $1.50, right? So if you got $1.50, congrats, right? Now it needs to clear $2 here. That's what you're looking for. If this thing can break above $2 and stay above that level for tomorrow or the rest of the day, that's a good sign, right? It's up. It's done really well today, 31%. Because of Sthlm, federal tax break, EV supply chain will come around eventually, but we still need chargers. Yeah. You 2PP. Good job. It's you do PP. Good job. This is like the Fed meeting, right? This is like the Fed meeting. It's like, you know what the answer to this question is, Powell? Yes. Do you know what this? No. At $1.35. Interesting. Yeah. ATXI. Oh, you scared me a little bit. Again, and that's what I'm waiting for here on ATXI, right? That's all I'm waiting for here. Again, cool. We can break above, and that's fine. But what happens on the way down? Can we confirm this level? If we can, then you're looking for higher. If not, well, I mean, right? Just another sell-off again. So this thing's gonna need to break above and confirm support above that level before there's confidence there, right? It's up to the dot on Monday, Hugh. Yeah, I read your comment differently, Hugh. I was like, we topped, so we broke above. But I didn't see the Monday. Today. Yeah, there you go. Yeah, scared me, Hugh. Yeah. So, needs to break above and hold it. Let me see what those guys are saying now. If they're saying anything productive, you do PP. Anything else here live?
As a fair, honest, independent group who really is just looking out for the best interests of the country and of our citizens, and we'll be making recommendations on the appropriate structure if we do come to make a recommendation. The point is, though, that we our existing statute doesn't really contemplate a central bank digital currency, so we would need, ideally, we would get legislation that would be authorizing legislation, and we would take part in it. It's not that we'd be asking Congress to start this from scratch and figure out all the answers. We would be working with you to build trust in our process and ultimately come to you with a proposal, and then Congress would work its work and authorize.
Thank you. But Mr. Chairman, the concern is that the architecture and the security of the system will guide policy. So I believe we need to work together. Thank you. And Madam Chair, I yield back.
No, I would agree.
Thank you. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Powell, for being here. It's always good to have you come before the committee. There hasn't been a Federal Reserve chairman since Paul Volcker in the 80s that has dealt with inflation at these levels that we talk about today. And historically, the Fed has been unable to reduce prices without sending our economy into a recession. And to further complicate the situation, the central bank has previously never had to deal with winding down such aggressive asset purchases to go along with increasing interest rates. You are going to have to take action on both of these pressing issues with the backdrop of what we see in Ukraine, between the Russians and Ukraine, and the general global instability that we have. So needless to say, you have a very tough job ahead of you. So Chairman, how do you plan on getting inflation under control without completely hampering growth or worse, causing the economy to go into a recession?
So that is exactly our objective. We're going to use our tools. We're going to raise our interest rates, and we're going to shrink our balance sheet over the course of this year. As I mentioned, during this critical phase of global events, we're going to do that with care, and we'll always move with care, but particularly now. And that's how it works. We remove accommodation, and the very high levels of demand that are to some extent a result of our accommodative policy. Those rates will go up. And take housing, for example. The housing market should cool off. It's very, very hot right now. And that should happen broadly in the economy over time. We talk about getting to neutral, which is a neutral rate, which would be somewhere between 2 and 2.5%. It may well be that we need to go higher than that. We just don't know. And we don't know what events will intervene in the meantime. But, we haven't faced this challenge in a long time, but we all know the history and we all know what we need to do. I also do think, and I think it's more likely than not, that we can achieve what we call a soft landing. And they're far more common in our history than is generally understood. And that would be what you described, which is get inflation back under control without a recession.
Yeah. Well, some of us in this room remember the 80s.
Sorry? Yeah.
Some of us in this room remember the 80s and what it was like. We know that there is a lag period between the Federal Reserve's actions, and the inflammatory implications being felt in the economy. The San Francisco Fed, which we've mentioned today, admits that this latency period could last anywhere from 3 months to 3 years. And for families and business owners like myself, 3 years would be an extremely long time to deal with prices in these elevated levels. So, Mr. Chairman, when the Fed eventually decides to raise interest rates, what tools will you have at your disposal to ensure your actions are felt with as little a delay as possible, so we can once again have price stability like we talked about?
In this world that we live in now, when we make a decision about interest rates, or frankly even talk about a decision to raise interest rates, markets pick it up like that. Financial conditions have already tightened. We haven't actually lifted off from zero, but as of a week ago, the market was pricing in, literally already reflected in financial conditions to some extent, 6 or 7 rate increases. Now it's less than that now, and we haven't made decisions to do that yet. But our decisions get into financial conditions very quickly. It does take time, of course, for that to affect economic activity, and that's where you get 3 months to longer than that. I think by the end of a year, much of the effect is generally thought to be in. So, but that time period has already started because monetary policy really works through expectations, and we're now expecting rate increases, and they've already happened in effect, and we have to ratify them, of course.
Yeah, we're seeing them. Finally, in the past year, you have referenced productivity gains as being key to increase the living standards for American workers over time. Unfortunately, we've seen the Biden administration implement many new time-consuming regulations that are forcing businesses, again, like mine and others, away from productive activities. The American Action Forum conducted a study that estimated that new regulations from the Biden's first year in office will culminate in over 131 million new paperwork hours. So quickly, Mr. Chairman, can you discuss the correlation between the company's regulatory burden and the effect on productivity?
I'm a little bit familiar with the research, and it's actually been difficult to make those connections in research. But we know, as a practical matter, we all want just the right amount of regulation, not too much. And to the extent you're spending resources unnecessarily, that'll hold you back.
Thank you very much, and I yield my time back, Madam Chair.
The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Madam Chair. During his State of the Union, President Biden reported that the U.S. has seen the fastest job growth in history. The U.S. has had the fastest economic growth in more than 4 decades, and the U.S. among advanced economies has had the fastest economic recovery from COVID. And so the inflation that we've seen is the consequence of a strong economy colliding with the supply chain disrupted by COVID-19. Given the Russian invasion of Ukraine and the inflationary pressures that could likely follow, is there a risk that raising interest rates could backfire, that it could cause a recession without actually reining in inflation? How significant is the risk of stagflation?
Well, there's several questions in there. So our goal, of course, is to raise interest rates in a way that restrains inflation and gets it back to levels that we would call consistent with price stability, and do that without while still sustaining an expansion and a strong labor market. That's our goal, and that's how we'll use our tools. There are no guarantees in life, but that is our intention and what we propose to do.
The U.S., as you know, has severely sanctioned Russia, and Russia is expected to engage in cyber retaliation. There are financial institutions, commercial banks that invest up to $1 billion every year in cybersecurity. How much does the Fed invest in its own cybersecurity every year?
I don't have a dollar amount for you, but it's quite substantial. We have very good cyber people, and at the reserve banks and at the board here in Washington. And as I mentioned a little earlier, we've been at a very highly elevated level of oversight on cyber issues since for several months now, as this event has increased, and we haven't seen any troubling incidents yet, but we remain on high alert.
The ability of the U.S. to hold rogue states like Russia accountable depends heavily on the SWIFT international payment system. In your view, how easily could China and Russia create an alternate messaging service that could seriously compete with SWIFT and seriously undermine the effectiveness of SWIFT sanctions?
I mean, and that's an interesting question to speculate about. I think in the near term, that's not something you can create overnight. I know that China does have their system. It's really a question for the longer term, and not for the immediate. It's not something you could do quickly like that, but let me think about that.
Fair enough. I have a question about stablecoin. The leading stablecoin issuers have chosen to peg their stablecoins to the US dollar, which to me represents a vote of confidence that reinforces rather than challenges the status of the dollar as the world's reserve currency. The US has no CBDC of its own and is unlikely to have one in the years to come. Do you believe, as I do, that dollar stablecoins can play a role in outcompeting China when it comes to digital currencies?
I'll say it this way. I think there may well be a role for well-regulated stablecoins. I think there's the possibility over time, and this is not what we see right now, that they could be efficient and popular among consumers and things like that. I think in terms of helping us compete with China, I don't know, but possibly, yeah. I think
I'm assuming it's better to have stablecoins pegged to the dollar than to have stablecoins pegged to China's currency or the currency of a separate country.
I would agree with you that in a way that is consistent with the role of the dollar, and most of the big stablecoins are, of course, dollar-based.
I have a question about the Community Reinvestment Act. Even though the CRA exists to prevent racial discrimination in matters of lending, often referred to as redlining, regulators fail to consider race when enforcing the CRA. Do you think race should be considered?
So we went out with an advance notice of proposed rulemaking a couple of years ago. We took in a whole lot of comments and took those into account. And I think we're now sitting down with the OCC and the FDIC to come up with a notice of proposed rulemaking. And that's one of the issues that we have been thinking very carefully about. And I don't have any announcement for you, but that's something that's going to come out of those conversations.
But you're open to considering it?
It's something we've been considering. We asked for comment on it.
We'll come back. We'll come back as the S&P, bumping it. See your last, Alan, Yeah, you might get a double top around like 438.20 something, right? 438-ish. But yeah, yeah, maybe. And then ATXI, just that thing crashed, right? Well, not really crashed, but again, we failed to hold that level, and that's always my concern, right? If you break above, that's not the issue. The issue is testing and holding and confirming. Never quite did it, right? And then failed again, and then people just sold it off, right? So that's concerning. Concerning. I want to take a look at some of these other names too. Names that are like something like AI, for example, like Josh is mentioning in the like in the chat, right? Oh, that thing just turned green. Right, that thing just turned green. I just want to look at the option chain and see what that looks like there. Sitting at low lows, right? Low lows going to earnings. They beat the last few beat and then dropped. Beats here had a nice little pump and then dropped. They're volatile. That's what I'm looking for here. Pump it, $75. Okay, cool. Interesting. Yeah, I just want to take a look at that option chain and see what it looks like here. Right. Hoping we can get some nice dips. So what's a gamble on? What's a gamble on, guys? That's what we're looking for. Right. So it's going back up. Looking really good, Margaret. Okay, good. Nice. Nice. If that thing can just stay green, that's good, right? So yeah, let's take a look at the as are we failing? Yeah, failing. Let me take a look at this. So again, Snowflake, ChargePoint, AI, right? Victoria's Secret there, some of the bigger names. I wanted to, yeah, let me take a look at that option chain here for this thing here. So March 18 is what we'd be looking at for the next available date. These things are not that bad in terms of like open interest, right? Not that bad at all. AI, yeah, it's interesting. I wish they were cheaper, like cheaper. I like with the maybe these 35s, but that you'd be expecting a big move though, right? So um, be a YOLO gamble. The 30s, just don't want to spend a whole lot. Like once we start getting into 50 cents into earnings, like I lose interest. Like I just like when these things are over $1, yeah, no thanks. Not about to give you $1 per contract. It's a gamble. It's a YOLO. No thanks. Right? But when we're sitting below, like the 20 cents and below, let's go. That's YOLO, right? A little bit of risk with potential, right? You know what I mean? So, for example, those Facebook ones that paid out really nicely, they were below 10 cents, right? Nordstrom from yesterday, that was below 20 cents, right? So stuff that has potential but is also so I don't want to pay $1 there. So these 35s, but you'd be expecting a bigger move there. So we'll see what happens as we get closer to the very end. Open interest is good for these things, right? For these calls, which is good, which is really good. So actually, we might look at these 35s going like closer end of the day, right? We might look at these a little bit closer. We've looked at, what did I just do? Okay, that's just a glitch. Anyways, we've looked at no Snowflake. We looked at charge points. No, let me take a look at charge points here. Charge point. Let's do that. Rivian, CHPT, IMPP. What is it doing? I think we looked at charge point already. Actually, did we? I like what this is doing. It's most likely selling off as well because of Rivian, because of Lucid, right? I bet you that's why it's selling off. So that might be the a good YOLO, but these things better be so 14 tomorrow is Thursday. Yeah, I like the YOLOs that we do on like Monday, Tuesday, right? Because then we have these options expire on Friday. When we start getting closer to like the end here, it's a bit of an issue, right? Anyways, what do the 20s? Ooh. So these 1750s are not bad. What does the 20 look like here? The 20s are green for some reason, guys. Oh no, those are the 2050s. The $20. Not a whole lot of open interest. These things are dead. So that might be just extreme YOLO. Extreme YOLO with as little risk as possible, right? As very small risk here. So that's what I'm looking at. So again, we'll take a look at these names closer to the end. right? Hoping for a sell-off to the end and then go from there. Can we check SOFI, Jason? Yeah, of course. What's your position in SOFI? CYRN, lovely. Okay, I will. Is it possible to see, Alan? If we double top at that 38 level, 38, which we're pushing for it now, if we can fail here, it's possible, right? If we fail right there, that's your last hope, right, for a dip, right? Well, I'm sure we're gonna get a dip, but these things look impressive, right? If we fail at this level, yeah, right. Double top there. We talk, yeah, 38, 30, 438, 30, right? 438, 30. If we fail here, yeah, and then you can see a nice dip. How about before the open earnings? What does that calendar look like there? Best Buy, Kruger, Canadian Natural, Billy, TD Bank. Uh, hmm. Best Buy would be Best Buy and Kruger, right? I know Kruger always beats for some. Like Kruger is we can take a look at those two as well there, right? So if we can fail here, Alan, and then yeah, okay, cool. There you go. Let me take a look at Best Buy and Kruger as what are we doing here? Dipping a little bit there. Yeah, I mean this thing has to dip at some point, right? Maybe give us 26, 26.50 something, right? Has to dip. Anyways, let me take a look at the daily chart here for Kruger. I want to take a look at Kruger, friends, because I remember the last time these guys reported earnings. It's pumping, isn't it? It's pumping. Seems like that news is getting. Ooh. Uh-oh. Do I want to? I want this thing to pump. You know, like when I say pump, I want it to keep pumping because now I'm leaning towards some puts on this, but it's a food thing. It's a food thing, and these guys usually do well, and that's my concern. These guys usually do well. Um, like look at that, right? So you take a look at the last year, right? Dividend and earnings, they've done really well, like really well. So that's my only concern there. Double top there, double top at $50. Can we push to $50? I'll take a look. So we're KR, yeah. Lucid. What about Lucid? Jason, you have 2,000 shares at 10.35. Okay, I'll take a look, Jason. I'll put it up so I don't forget. I'll put it up so I don't forget there. But I want to take a look at some of these chains here. Anyways, again, so yeah, right. If we can fail here, Alan, right, that'd be a good thing for you, right? With your S&P puts, right? This is gonna be it's gonna be a tough level, right? Whether we're above or below, right? It's gonna be a tough level to get away from. We failed around this exact same level last week, right? Let me take a look here. Josh, KR, KR. Can we so all those calls are nicely green. Are you kidding? Kidding? Like Kruger's okay, no, that's good. That's what we want. So we're sitting around 50 here. Ooh. I wish these things had better open interest here, Josh. What are you thinking, Josh? What are you looking at here? Mm-hmm. Yeah, I wish these things had better open interest. I just don't know if I see Kruger dropping as much, like, right? But we're sitting at the double top level, so you would at $50 there. Interesting. A lot of volume there. Puts on big. What do you mean? And then puts. 45s. Nope. 40s here, maybe. The open interest is just lacking, but yeah, those 40s maybe. Interesting. Again, all of these names, we'll have to take a look at the very end again and see what's performing and what isn't, right? And then make a decision. Video explaining how to trade options, and they work exactly. Video explaining how exactly options work. Do you have one on your channel? Recommend a good one. I can recommend you a good one. Contents. Send me an email. There's one in the education channel on Discord. But if you send me an email at the top of the stream there of your YouTube thing, I'll send you that video. Yeah, it's just a well detailed video, right? So let's see here. So that's Kruger. What does Best Buy look like here? S&P. Interesting. S&P is wild. wild. Kruger is sitting at like a potential double top level here after, it's had a nice run into earnings here already. So, um, hmm, something like this, something like that right there, 47, and then sold up to it. Like it's not a huge drop though, but yeah, into earnings there. Mm, earnings. I just want to see if we've ever had like a big dip on earnings here. 31. Nothing huge. Nothing huge here. Yeah, nothing huge. Let me take a look at Best Buy. BBY. BBY. Best Buy. Ooh. Best Buy pumping, pumping, pumping here. Remember the last, yeah, Best Buy the last time was fun, right? Pumping into earnings here, like right there, pumping, like pumping into earnings, and that was an easy play, right? Puts as we're pumping into earnings, and then crashed, right? That thing crashed hard. Um, now that we're sitting at a very mixed spot here, that complicates things a little bit. So we'll have to take a look at these things closer at the very end. Sky H, and it's a one pump day it's becoming a pattern pump day. Okay, one pump day, and yeah, 66 to, yeah, okay. BJ puts 66, yeah. I think what we might need to do, I'm not sure if that's a pattern yet, right? Calls at the very beginning, puts at the end of the week, right, as we go into Thursday, Friday. Yeah, so I'm leaning towards putting those plays, right? But we'll see. um, Leaning towards puts, so we're shorting it. Again, the S&P, as you can see, right, some resistance here, a lot of resistance here, right? So see if we can clear the level. I'll take a look. So Jason again is asking for SOFI. Let me take a look at SOFI here as we, yeah. So again, Nordstrom is back above 27 here. That thing is strong, like strongs. So in at 10 SOFI, in at 1035, 2000 shares. So you're nicely green in that position. I like that SOFI again, right? SOFI. If we zoom out here, I'm gonna do that later. But again, so far looks fine to me, right? If this thing can stay green today, your 2,000 shares, you're in profits. I feel like if this was me, like I just feel weird, like just weird ways about it. My stop loss, because I don't wanna, don't wanna. I would set my stop loss at either you can do just below $11, Jason, right? Just below $11. But I feel like if this was me and I had 2,000 shares, I would want to collect $2,000 from this thing. If, again, I'm sure this is a longer term position for you, right? But I feel like my stop loss would be somewhere just below, like just around this $1 from where I bought it at, like at 11.35, right? Just so I can collect $1 from it. But that, again, that has nothing to do with technicals, right? As long as this thing holds like 11.20 here, which is where that moving average is, right? So if I zoom in here a little bit more, right, you can see that that's a what it's done today is a healthy test, right? So again, broke above this level, this moving average, right? Broke above that yesterday. Usually what you see is these things come back and test, right? What I'm looking at is this moving average here at 11.20, right? So as long as we stay above that level, you're fine for now. If we do break below that level though, then it's concerning because you can retest $10 again, right? And that's not exactly what you want. So yeah, that's what I'd be doing. Let me take a look at Sky H. Sky H here. Sky Harbor. Ooh, interesting. 14 to 1550 here. Okay. Interesting. For SoFi, absolutely. TRVI. Okay. Let me take a look. TRVI. 50% here. Not bad, right? Not bad. Yeah, I think we were looking for that $1.15 level earlier, right? So $1.15 finally broke above that level and said bye bye, right? All the way to $1.57. Wow, 58. That's a nice pump. Wow. Wow, interesting. Would have liked to see it like a dip to that level again and a slow turnaround. That would have been a really nice entry, right? But if we can turn around here and start pushing for that 150, right? That might be a push. Might be a push to again that double top initially, right? And if you can break above that and then gone. Then gone. Let me take a look here again. So that's the S&P still struggling, right? I think Alan is hoping for a double top and a sell off, right? It dipped back to 35.60, right? That's what you're hoping for, Alan. Is this thing still going on?
currencies are a
guy's
means
still
by
going?
which you can evade both law enforcement and national security concerns, then that's not something we should tolerate.
Thank you. Thank you for, again, your transparency, and I yield back.
Thank you.
Let's talk about crypto.
Thank you.
Crypto again.
The gentlewoman from Pennsylvania, Ms. Jean, is now recognized for 5 minutes.
Thank you, Chairwoman Waters, and thank you, Chair Powell, for being before us again today with such forthright testimony in such challenging times.
Wow.
I wanted to just start on the question of inflation and something that you said to one of our colleagues in response. Inflation is too high. We're seeing it everywhere in the world. Ours is worse because our economy is stronger. Can you flesh out that duality a little bit, maybe by way of contrast with others globally who are struggling with inflation but do not have a strong underlying economy?
Sorry, I think if you look at our, maybe the closest economies and political systems would be the countries of Western Europe and Canada. Advanced economy countries like that, they're all having the highest inflation they've had in a very long time. Places like Germany, which is famously, inflation averse, has high inflation. Now ours is a little higher. Our economy is now well above the level of output that we were at before the pandemic. If you just look at the output an economy had before the pandemic to where it is now, we're way above that, and other countries are kind of just getting back to that level. So we've just had a stronger recovery, and that is because of monetary policy and fiscal policy, and also just vaccines and a whole range of factors. So our inflation is definitely, of the advanced economies, ours is higher generally. We're going through the same process that the Bank of England and other central banks are going through, which is raising rates and trying to get inflation back under control. Very committed to doing that. It's a common problem. Again, ours is worse because our inflation is higher, I think largely because our economy is that much stronger.
And I know you have a series of meetings and possible rate hikes. You talked about in 2 weeks, likely the 25 basis points increase. For my constituents, my consumers, what impact will they begin to see with the small incremental rate hikes?
It's a little bit like the rate hikes that took place in the first part of this century. Not the rate hikes that took place after the global financial crisis were much slower. They were every other meeting, but the cycle before that, the rate hikes are consecutive meetings. So what you feel is these are fairly small rate increases, 1/4 percentage point every 7 weeks. And we haven't made any decisions after this meeting, but the thought is that rates move up, our policy rate moves up, and with it, rates on mortgages, rates on car loans, rates on, the loans that people take out to buy appliances and things like that. So companies, their borrowing costs go up, and you get to a point where you've raised a few times, and it's even still a gradual process, even though it's fast, as much as twice as fast as the last cycle. But still, people start to spend a little bit less, and the economy demand returns to a lower level. By this time, we hope that that the economy is going back to normal in terms of supply chains and the breakdown between goods and services spending and things like that. So we hope we're getting help on the inflation front from a bunch of things. In any case, we do have the responsibility to generate price stability, and we will use our tools to do that over time.
I thank you for that. One particular area of concern for me is the role that increasing market consolidation has played in contributing to inflation. An example that we've seen is the huge price spikes in the meat industry, which has become incredibly consolidated. To what extent would you attribute supply chain fragility and recent price increases to market concentration?
So we're not the competition authorities, and so I would defer to the competition authorities on all those questions. In terms of inflation, though, inflation really is mainly a macroeconomic phenomenon, and which doesn't link in the aggregate very well to concentration. Some of the most concentrated industries, in fact, were those that drove low inflation. I'm thinking there of warehousing and retail and things like that. Those industries consolidated and they drove lower prices. So it's not so obvious. There clearly are industries where that may be the case, where they've become consolidated and they're able to raise prices. It's not clear they'd be able to generate an inflationary cycle, but they could certainly raise prices in the first instance. It's not a settled question in the economics, but
The
again,
gentlewoman's
we defer to
time
the
has
competition
expired.
authorities.
Gentlewoman's time has expired.
Thank you, Madam Chair.
Thank you. The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Madam Chair. Inflation remains a serious concern for my constituents in West Virginia. Inflation erodes the real value of every paycheck. When the cost of filling a tank of gas or buying groceries increases, all Americans lose money. Today, I'd like to focus on a slightly different aspect of inflation, which is inflation's corrosive effect on Americans' savings. The combination of low interest rates and high inflation has clobbered returns on common savings tools like savings accounts, money market funds, and certificates of deposit. January's 12-month consumer price index of 7.5% pushes the yield on these savings tools into deeply negative territory. In other words, with inflation as high as it is, Americans who have saved responsibly for years are losing their money over time. So Chairman Powell, first question is, how concerned are you about the effects inflation and negative savings yields are having on the long-term health of our economic recovery?
So I would agree that inflation falls heavily on people who are living on, for example, bank deposits and CDs. And this is typically retired people and the elderly. And of course, they do bear the brunt of this. So that's why we need to get, one of the reasons we need to get inflation back down to appropriate levels. And that's what we're working on.
Thank you. Savings is an important way to achieve financial goals like purchasing a new home, paying for college, or retirement. Savings is a way to take control of your financial destiny. Savings is a part of how we can achieve the American dream. So I'd like to raise another potential issue about the declining value of savings and its implications going forward. I'm concerned that our current economic environment will discourage savings altogether. So Chairman Powell, are you concerned about the effects inflation and negative savings yields could have on Americans' incentives to save money going forward?
Interesting. If it were to persist for a long time, I would be concerned. Of course, right now, savings are, the level of savings on people's balance sheets is at historic highs because they saved during the pandemic. They weren't able to spend money on travel. So right now we're looking at a couple $1 trillion of savings above where they would have been without the pandemic. But over time, yes, savings is important, and I would agree that high inflation can be a disincentive.
Okay, thank you. I think it's important we monitor the savings rate closely with this in mind. If Americans save less, that could have economy-wide implications both now and especially in the future. So we should be careful to ensure monetary policy encourages savings going forward. And that's all I have. Thank you, Madam Chairman. I yield back.
Thank you very much. The gentlewoman from Texas, Ms. Garcia, who is also the Vice Chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Pro Tem Powell, for being with us today. And I think I'm going to be last, so I'm trying to try to be soft.
Last?
In a recent press conference, you had mentioned that forecasters expect inflation to subside as supply chain disruptions issues are resolved. I understand this is being addressed, and my colleagues and I are working on addressing this supply chain crisis through multiple legislative solutions. At home in Houston, one of the nation's shipping and energy capitals, we are focused on expanding and developing the nation's ports and waterways to continue building our role in facilitating global energy and trade. You also said in your remarks today that we understand the high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. So I want to focus some on housing. In Houston, housing costs have skyrocketed, with the median price rising 18% last year and the average 16%. Nationwide, housing and the rent prices account for roughly 1/3 of the CPI. and most economists do not expect this problem to be resolved as quickly as supply chain bottlenecks. In your earlier exchange with my colleague, Congressman Williams, you mentioned a soft landing, wherein the Fed will address inflation first and survey the housing prices trending downward. My question is this: is the Fed looking at alternative plans in the event that housing prices do not trend with inflation? How might that impact inflation reviving if low housing supply continues to in the upward pressure?
So we do, as you mentioned, housing costs and housing services costs, and how if you're a renter, they're a very big chunk of what goes into the inflation indexes. And to the extent housing prices, we're not saying they'll go down. What we're saying is that the increases will be much smaller. We don't need housing prices to actually decline, just as long as they. What we can't have is them. We don't want to have them increasing at very high levels as they have been doing. Largely as a function of supply and demand. You know, supply is constrained. I don't know about Houston, but many places in the country, difficult to find lots, difficult to find labor, difficult to get materials. Or materials very expensive.
We're experiencing that.
Yeah, and so demand is very strong. So interest rates are low, and what you get is a lot of buyers and not enough new houses. So what will happen as we raise interest rates, and this is already happening, it's already priced in, is mortgage rates will go up, and you'll see that bidders, prices will begin to go up more slowly, demand will decline, and hopefully we'll get back to a place where demand and supply are well aligned.
Will we ever get back to the pre-pandemic levels? Will we get back to the pre-pandemic levels?
Of price?
Yes, sir.
No, I would only expect that we could limit further price increases. We're not trying to drive prices back down. What we're trying to do is limit future, future prices.
Right.
Increases.
Now, how concerned are you that there seems to be a lack of investment in affordable housing, and how that could cause inflation to become a long-term problem, even if the Fed is able to get inflation under control in other segments of the economy? So now specifically about public housing.
Public housing is, of course, not our. It's not our policy tools don't generally meet the need for affordable housing. It's really more of a fiscal policy and a housing policy question. But I know that you know, economic research shows that high housing costs for workers are making it difficult for people to live close to where they need to be going for work, and it is limiting the ability of people to be in the workforce and ultimately limiting our economy. So I will say that.
Last question, you mentioned in your remarks that it impacts essentials like food, housing, and transportation. What does this do to the poverty rate, increased inflation? And because I know unemployment is down, does that necessarily mean poverty is coming down, or does it continue to rise with inflation?
So those things would have offsetting effects. To the extent inflation is going up and people or faster than people's wages, and that's actually not the case for people at the lowest end of the spectrum, because that's where the highest wage increases have been in the aggregate. But to the extent that were happening, that would potentially increase poverty. But to the extent people are going back to work, that would decrease it.
Thank you, Madam Chair. Yield back.
Thank you very much. I'd like to thank Mr. Powell for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask Mr. Powell to please respond as promptly as you're able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is adjourned.
Completed. Said, please, bye-bye. And the S&P, risky. S&P, look at SPY, guys. Look at that. AMC is loving this as well. AMC is loving it. AMC is finally back to back above $18. Like, it's loving it, right? Old 18. but like what the S&P has done today, impressive. Now everyone can go bingo, go play bingo, guys. Come since I sent you that email. There you go, 1820 almost here. SPY, wow. Wow, wow, wow. I mean, that thing is strong. It's going for, is it about time? About time. It's going. Like, that thing is going for 440 here, seems like. Pumping? Yeah, new highs. Highs on highs, guys. Wow. So 440 is the next big level, right, to watch. That's unbelievable. AMC said, yep, it's time for me to go. Like, bye-bye. See you guys never, because I am pumping. Almost back to green, 2 cents. And here it comes, 1 cent. And break even. Almost, right? And Nordstrom, I mean, like, Nordstrom is wow. Wow, 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 Nordstrom. Wow. 2740, guys. And pumping all day today, right? So no dips allowed on Nordstrom. Nordstrom, $30. Here we come. Okay. Yeah, there you go. Bingo. Yeah, go for bingo. Means nothing. We'll stay in the 17, 18 range. Pre and post market, Peter. Yeah. Trying to get some music going. Increase rates by Canada. Increase rates by 25 basis points. Yep. There you go, Canada. Yeah. No dips on SPY. No dips allowed, Musty. No dips. No dips on Nordstrom. That's what I'm saying. Dips on SPY coming at some point. 439, right? Again, the next level here is 440, right? Big level here, 440. Seems like that's what we're going. We're already at 439 anyways, right? Wow. Vino, that's impressive. That's impressive. And of course, again, EMC loves that, right? Wow, wow, wow. Impressive. Thoughts on into earnings? Acquisition final today. Acquisition. SGFI. Let me take a look. SGFI. What's that? DWAC? DWAC is 95 again? Wow. Okay. SGFI. FY. Let me see. So the thing is red today. Acquisition completed today. Ooh. Interesting. That's a dip, Josh. That's a nice dip. Double bottom, right? That would have been a really nice entry at $12, right? Bottom, double bottom, and going. Interesting. My only concern here is with all these earnings reports or like the acquisition, I feel like I'd be waiting on this thing to clear to clear this double top here as well. Right, double top twice again, and then slow retracement. Interesting. Yeah, I don't know. I always like to think about these things like what I would do if there were no earnings, right? And then okay, well, you know what I mean. So like, yeah, so it's interesting here. What to do with that one? This one would be based on that option chain or something, Josh, and like it looking really good, like appealing, right? The option chain would have to sell this one. All above 2%, Musty? Yeah, crazy, right? You took profits on SPY, Robert? Okay, congrats. No, the S&P looks really good. Looks really good. And then yeah, the other names, we'll take a look at them as we get closer to the end, right? What's the S&P at? Yep, still just chilling here for now, but that's impressive. That's really impressive, and it's not even giving up yet, right? Not yet. Lock in profits. Profits. Let's see where we are, and what time is it here? Oh wow, AI just started pumping. You guys were looking at those AI options. Yep, that thing just started running, guys. Wow, interesting. Well, again, the S&P is pumping as well, so there you go. SPY. BBIG was just a trap again. Don't what happened to that 11%, Musty? I don't know how BBIG would be losing all those profits with what the S&P is doing here, right? Wake me up when BB exactly right, Professor. That thing needs to get back up $3. Otherwise, again, those levels are like 220, really nice level at the bottom there, and then $3. Right, needs to clear that $3 level again. The catalyst would be nice. Right, something would be nice. Something, a news article, right? So might just have to be patient, patient, patient. Wow, wow, wow. I want to take a look at some of these Bitcoin. Okay, Bitcoin is below $44,000, guys. Right, that thing was at 45 earlier. Yep, sold off. It's interesting how that sold off with the with like the S&P pumping, right? Because we know those things have been connected. What does ICO look like at Hugh? ICO $50. Yeah, it sold off against the 50 here. $50. 48, 49, 50. Okay, cool. Interesting. Like it's amazing how every single day this thing has a level that it like just respects, right? Again, like of this $50 level once, twice there, three times, right? So maybe again for ISPO here, Hugh. So on BBIG options in April. BBIG options in April. Let me take a look at BBIG. He has the S&P is going again for a new high. Wow. And now BBIG, the S&P is going for a new high. So we're sitting at 250 here. January, February, March, April. I'll take a look. Kelly. Still green? Yeah, still green. BBIG option chain is what I need. Options for April. Buy at 3, but not at 240. No, 220. 220. No, I'm just saying, not talking about like the willingness to buy. I'm talking about like support and resistance, right? Like the main levels, right? Again, that really good level is 220, right? Whereas like your main level resistance where people feel comfortable is above $3, right? So not about like buying here or not buying, right? It's just about like the main levels there. There you go. Yellow finance, BBIG option chain. So we're looking at April, March the 4th, all the way to April. So the 3 different dates in April. So I'm gonna do April the 1st here, Kelly, and then zoom in here. Interesting. $4 calls. They're green today. They're up 18%. Like these like the chain isn't that bad. Like your best bet here would be like the $4, unless you just want to go cheap. But these $4 calls are not that bad. Even though they're green today, which is annoying, right? But they're fairly priced. They're fairly cheap with some good open interest, right, Kelly? So yeah, these like the $4 call for April is not that bad. Again, if so you're back. What rubbish did you miss? All the power rubbish. La la. Jose says, "What is your love language?" What is my love language? What is my love language? We're getting deep and personal, Jose. What is your love? That's such a. I'm so like. That's such a weird question to ask, Jose. What is your love language? Love language. Communication. There you go, Jose. Communication. It's cookies. It's cookies, guys. It's cookies. It's cookies. Yeah. It's cookies. Cookies and avocados. No. His love language is cookies. That's funny. Yeah. So BBIG is no, again, like if we take a look at that daily chart too, Musty, right? Like BBIG has done well. Like for us, it's done well of 220, right? Like take a look. The first time of 220, like multiple times now, right? Smash the like, yeah, right. So again, look at that 220, right? BBIG explodes, right? 220 again, BBIG goes for a massive run, right? 220 again here, we go for another run. So again, around this 220 level is usually a nice level for BBIG, right? So that's what we're looking at here, right? And then your main level of resistance is at $3 in the S&P. Watch this thing. This thing's not gonna give us any dips today, is it? Right? It's gonna be one of those days where we pump. I think he loves like is TA in money. No, money. No, TA. Get tired of it. No, it's communication. It's communication. Oh la la. God, that's funny stuff. Is your arch, arch enemy Dan? Yeah. Wow, wow, wow. It's crazy because yesterday at the close, like the S&P looked like we were going to the abyss, guys. Like yesterday, we looked like we were about to go to, like, like go to like crash, seems like we're about to die, right? Seems like everybody was getting it. Like, look at this yesterday, right? Yesterday, that was yesterday, and today, like we were crashing hard into the close, and then today, there's no such thing as a dip, right? It's a when moon, when moon, when moon. Like we're just pumping, straight pumping, right? Like just going up, up, up. It's crazy. Like it's crazy based on not a whole lot, which is very confusing, right? Like Chris calls it the scam market. But yeah, so 440 is your next level of resistance here. Uh, it's time for spy puts. I mean, YOLO gamble, right? YOLO, it's time for spy puts. Yeah, we're approaching that resistance here. Maybe think about it. Yeah. So, oh yeah, it's just one of those days where you don't get any dips. And what's AMC at, by the way? AMC is at AMC is back to green here, right? AMC is back to green, holding $18, guys, which is amazing, right? Which is very, very good, very, very good. So it's gonna need the S&P to keep pumping though. No, it's gonna keep going, right? Yeah, like this, it seems like one of those days where the market just keeps pumping. Um, look for Merlin. It's come back. Okay. With SPY, we are 2% up. What the heck? Is it possible that we pump him more? Starting to get a formal feeling, Dan. I know it's possible, right? We could easily do 2.5% here, and that would still be fine, right? Is it still a monster, Dan? Yep. When dip, Dan? Let me know when we get a dip for that thing. Give us a nice dip. 20 something, 26.50, $26, 25. Give us a dip. Talking about buying more and said nope, we already bought the dip. Yep. What is Tesla at, by the way? Tesla is actually, no, I'm not gonna do that. I'm gonna take a look on a different chart here. Tesla better be above something good. Wow. Tesla is red on the day. Like that's crazy, right? That's impressive. Like on a day where the S&P is like not dipping at all, Tesla's red. Like Tesla's red. On those 30 calls, he bought this 30 this morning 75%. Dan, congrats, good job. Yeah, like it's crazy, and that's part of the confusion because you have like names in the S&P selling off or not doing anything, but they're using just one specific name to pump up the market. Tyler, welcome back. Any place for today or afternoon? We'll see. We'll see, Tyler. Right, so Nordstrom has been the play for today, right? And if you bought this thing at any point today, you're green. You've been celebrating green from this morning to the next hour to the next hour, right? Anytime today, you're happy. 840 or below. 840. You're hoping for 840 or below. Yeah. It's hoping for 900s. Hoping this thing would be above 900 already, Hugh. What's all this slacking here? All this slacking. If it goes, I watch both. If it goes green, SPY goes red. Yeah. Crazy star. Crazy, crazy, crazy. SQQQ. Oh yeah, SQQQ, yeah, right? Inverse. That's just the short ETF. And the UVXY, the VIXY, all those ETFs, right? So when those things turn green, S&P goes red. And yeah, so does the TQQQ, right? Hopefully it is just a cool off. We keep pumping. Yeah, I mean, yeah, getting a little dip here, but I don't think anyone's hopeful because this dip is nothing, right? You can see that dip is actually like there's 4 candles there, all holding that same level, which is impressive. 438.60, right? Um, yeah, yeah. And Nordstrom is just not dipping at all. Maybe these things are starting to give us signs, like these pre-market highs or after-hour highs. They're usually signs of where we're gonna get to the next day, right? So Nordstrom, thank you. Let's go, Dan. Thank you for the super sticker. I think you wanted to send a super chat. Thank you very much for the super sticker, Dan. Congrats again very much on the profits, the gains. Make these gains, all the monies, Dan, right? So all the monies on Nordstrom. Congrats. Good job. Good job. No. Going the way it is, Tesla should be exactly by now. Exactly. Did Elon get crazy on Twitter again? Hugh, like it should be, right? Tesla should be pushing for 900 with what the S&P has done today. Uh, love it, Robert. Love it. Love it. Love it. That's okay, Star. That's okay. That's okay. Man. Nordstrom. There we go, S&P. We're getting a nice little dip here. Little dip. Come on. Give us a dip. Give us something. Can't just pump like this all day today and then tomorrow we're back to red, back to pumping, back. Like it's very confusing. Give us a nice little dip here. Alan, are you still holding those puts or you sold them already? Like it's always amazing to like Dan, you like it's always amazing sometimes to think about like um to think about some of these plays and like the conviction, right? And then see how they play out, and then go from there. Uh, just to think about Nordstrom. You guys were excited about Nordstrom, like excited is excited. So you missed it also, Robert. That's okay, right? The excitement on that call was like Mono was excited, we were excited. So I'm glad that played out nicely, right? Hopefully we can hopefully these gains just keep coming. Wow, Nostrum is just this thing is not gonna dip today. Like it's just gonna go, right? Like it's not gonna dip not one bit. Like this is the strongest song here today, right? Just as strong as the S&P here, stronger than the S&P. Wow, impressive. Earnings are only because it's your favorite store. I mean that's sometimes that's all you need though, right, Star? Um, when convictions, DOJ. Um, yeah. Did you just uh Tesla to 900 Americo? Tesla is not at 900. Tesla's at 860. Tesla is struggling today. On the struggle bus. They need to send it to the village for some witchcraft. That was based on your faith. Yeah. Up 3,000% there on MU calls. Wow, congrats. VSCO. So that's again that's Victoria's Secret. Those guys report earnings today. Let's take a look. So VSCO. Tesla's at 863 here. So VSCO here. For tonight, Victoria's Secret. Ooh. What I like about this, even though it's green here today, right? What I like about this is the fact that sure, like we're selling off. It's sold off here, right? But this thing has a nice little base here at just about $50, right? It's been holding for a bit now, right? Hold, bounce, hold, bounce, hold, bounce. So that's a good sign. That last earnings report there, uh, they actually did well, right? They went from 52 all the way to $60, right? So we might need to take a look at that option chain there for VSCO, right? Let's do that right now, actually. So yeah, VSCO option chain here. VSCO, Victoria's Secret. So when did these things? March 18 is the earliest ones we can find here. So calls. These things don't have a whole lot of open interest. The ones that do, these 65s, right? They're up 74% already here, which is not exactly what we want to see, right? So these $65 calls are already up good open interest, but they're also up 74% already, which is annoying. So these 75s are red. Okay, cool. Not a whole lot of open interest though, so that's concerning. They should 900, yeah. We'll go down to 7. Calls on what, Professor? Unbelievable. Was down 12K this morning and made it all back on Tesla and UPST calls. Wow, Tesla calls? Interesting. Cal what? Did I say it's gonna go to 900? I want to say yes, but when I take a look at the S&P and see where it's sitting at now, and the fact that Tesla hasn't gone with it, what if the S&P dips tomorrow? But in the long run, right? In the long run, Tesla will be SOFI and losing all the gains before I could sell you calls. You buying shares instead? Okay. Yeah, I just wish the option chain was a lot more, had a lot more interest here. That's my concern there. 50s. Interesting. Yeah, this option chain is very slacking. Slacking. So yeah, there you go. So that's Victoria's Secret. Again, let me take a look at Tesla. Yeah, Tesla, right? We know we obviously have support at $800, right? That's the level that we looked at. Before that run to 1200, right? 12, $800, right? In terms of support here, Tesla looks fine here to me for now, even though it's back to green slightly here, back to red now. Again, this thing should be a lot higher with what the market has done today, right? It should have been a lot higher today, but it is what it is, right? Your next level of resistance is 880 and then 900, right? Those are your next two levels. What I'd be looking for here on Tesla is this 840 level, right? That 840. If Tesla holds above that level, it's fine for me. If it breaks below, yeah, back to $800, right? So 840 is your next level of support there, just above that moving average, right? But again, Tesla should be a lot higher. It's not. It's struggling here, right? Take a look at the last 3 days. We've been failing at that same level, actually. Yeah, 880, right? We've been struggling at 880 all day today, right? And yesterday and the day before that. Why? Because on the way down, we identified 880 as a level of support, right? So again, 880 here, support. So now on the way up, we expect that level to become resistance, right? So yeah. So that's Tesla, guys. So that thing needs to clear 880 and then it's gonna go for that run. If not, you're looking for 840 for support. No. Okay, this thing's back to red. Wow, it looked really good earlier, actually. Really good earlier today. I mean, look at that, right? Double tops. Don't FOMO with the double tops, right, guys? Again, so double top right there, and another top, and then sort of hard, right? So and lost $1. So again, don't play with double tops, please, and thank you. And yeah, CYRN here, Josh. Yeah. Maybe Costco and Walmart because people are my panic buy canned goods, because war, Professor. Yeah. Costco, Walmart. Is that AMC still? Yeah, that's AMC. Up 10 cents, guys. 10 cents. 10 cents. For when people are gonna need for when they're bored in the bunkers. Unbelievable. Um, Play double bottoms and triple bottoms, Tyler. Double bottoms and triple bottoms. Yeah, right. So yeah, don't FOMO with the double tops. Look for the double bottoms instead. Yeah, no, CYRN here needs to yeah, again, double top, right? Double top, and then from this morning, right? So we hit that level in the morning, came back down, double bottom actually, right? Double bottom, and then hit that double top again. People took profits, and then it sold off, right? Which is interesting. Interesting. So for the rest of the week, so tomorrow is Costco, right? Costco, Marvel, Gap. Okay, cool. Broadcom, Elastic, Smith and Weston, Eagle. Okay, cool. Duolingo, right? Duolingo reports earnings tomorrow as well. The language app. By the way, it's the Beat. It's the Beats, guys. So don't know if we're feeling like. You know what I want to take a look at because we completely ignored it. Plug. What did Plug do for earnings? They miss. Okay, they look okay. They sold off initially as well, and there's another double bottom, right? Bottom, pump it, right? Bottom again and pump it again, right? So yeah. And now we're feeling around the same range here. So all these things are feeling at double tops. The S&P and Nordstrom, the only two names that have actually just ignored all that stuff. Let's go, Dad. Come on. IRNT. Thought it was Tuesday or North Star. It's right. It's yep. It's not. We talked about this one holding $5, right? It's been holding $5 here. It looks good to me. Like our IRNT looks good here to me. So if this thing can clear that 525, the highest day, the double top high, that might be a good sign. Nope, it's Wednesday. Tomorrow's Thursday, right? So that's why, like, I'm a little bit hesitant when it comes to calls at the end of the week. A little bit more hesitant, especially after an S&P pump like this. right? Just yeah. Ooh, we actually did. Okay, we dipped a little bit here on the S&P, right? We dipped, came back and tested that previous top. So that's a perfect test and hold, right? So initially we had a double top here, right? Previous top, right? We broke above that, pushed all the way there, came back and tested that level and bounced. So that's a perfect yeah, there you go. So that's a perfect test and hold there, right? But I mean, like, damn, can we get a dip? Just hit 56, knew it, right, Dan? 50 and 50 something, 50 and 50 something. Like every day, ISPO does that. Like every single day, it does that same thing, right? Like every single day. I just haven't paid a whole lot of attention to that today, and that's annoying, right? Like every single day is the same story, right? We find a level. So, for example, on ISPO yesterday, right, the levels yesterday was 57. Was it 57, 57, 56, right? It would bounce up this level, right, and pump it, and pump it, and pump it. Today, it's $50, right? So, it's done that 3 times already, so which is really interesting. Hit 57, yeah, 57, and then, yep, there you go, right? 57, guys. Look at that thing pop it. I even said it as Ash Wednesday. Yep. Is Ash is a ticker? No, Ash is just a day. A religious day. There you go, 57, guys. And we looked at this stuff too. Dan when it was at $50, right? A few minutes ago, and now it's $58 and pumping it. Pumping it. ISPO here. So yeah, that looks good. Again, $50 would have been nice. Double bottom at $50 would have been really nice. And here we are, $59, guys. One of those $60, $65, $70 pumps, and then crash. 59. Wow. Wow, wow, wow. Oh, they're asking now $60, guys. $60, 60.24. That's where the ask is. Ash is at 50, 91, 50, 52. Yep, here comes $60. Wow. Wow, wow, wow. That would have been a perfect, nice scalp. Would have been a really nice scalp. But nope. Classic 92. Okay. What is this now? Toba, this is ISPO. This one is you don't remember this, Toba? You don't remember this one running from like $14 to $108 last week, 2 weeks ago? And now it's been here every single day now, causing wahala every single day. It wants to ANGH is going as well. Yeah, now those packs are going to be pumping, right? So nice little dip here, right? ANGH is another one. CPTN is another one as well, right? Look at that thing, right? These things are all the same. Like they sleep and then wake up and explode at the same time, right? Gary ISPO, yep. Look at that, right? Up 8%. CPTN was the other one that we paid attention to. This one went from the abyss to $77, and then from 10 to 77, and then crashed to 18 the next day, and then the rest is history. So this one is just dead. This one is dead, dead, dead. This one's it's giving nothing. Like this one's lost all the momentum here. CPTN back to its favorite, back to its normal levels here. I feel like DWAC should be higher now. And then yeah, Professor, yeah. When rock pull, yep. I mean this one's had a rock pull, right? This thing was $80, guys. $80 a week ago, right? $80. I mean, this thing went from $10 to $80 with less than 300,000 in volume, right? And then crashed after hours. So, yep. Yeah. No volume at all there. Dip some might be able to scalp it this time. Just getting too high, Tyler. No, why not? Why not? Why not? Why not? I mean, it's probably gone now, right? So it's gone. Unbelievable. It's crazy how this thing moves. With 70 warrant was 25, when 80 warrant to 26. Not 95 education, $25. Yeah, it's crazy how those warrants move though. Yeah, so you want to be careful. Into 440 to this by ready to rip and pop. Vino, yeah, the S&P is madness. How do you do that? I mean, like, look at the S&P, guys. Look at that. I'm just asking for a friend here. Look at that. That's perfect, right? Again, push it, come back and test and hold, right? And it's going for 440 here. That's the next level, right? The next level resistance there, 440. Hashtag scam market. uh, Amiibo. Long term, hold them, but it's very difficult for me to hold anything. Yeah, Star, I know. It's just yeah. With fire news, what's the news? Almost 2 weeks now. Yeah. Toba, remember Bryce? Bryce said buy uranium about a month ago. Buy uranium stonks. Some uranium stonks. So yeah, that was about a month ago, and those things will be doing well. 440. I'm sure that keeps coming back. Exactly, Gary. It's like Rocky. Exactly, Gary. Like I was expecting this thing, that ISPO thing, to not be uh, it just keeps fighting. Like it just keeps going, right? $57 here. Asks are 59 again, right? So that thing just keeps going and going and going. So and going. Amazing. Can we get a dip? Can we get a dip? Yeah, Pablo, you've been playing UUU. Yeah, uranium. UUUU. UUUU. That's the common one that I've played in the past, Pablo. Right? That. So, Hugh, what's wrong, Hugh? What's wrong? Let's see, what time is it? Okay, let's give it a few. Let's see what the market looks like in 15 minutes, guys. 15 minutes. Funk power. Oh, that's just the name of the song. See what the market looks like in 15 minutes, guys. Now we can take a break and hang out in Discord, right? So let me know if you have any questions and whatnot. Right? We can maybe do some scalps in Discord, or just hang out, just relax, right? Sabia, and then we can then I'll probably take a look at some of these earnings plays at the very end and see if anything is appealing to me, anything stands out. Right, and then we'll take a look at some of these options at the very end there. Can I buy some of that uranium? Uranium. Who stole it? Stole uranium? Oh. Um, yeah, CCJ is another one. DNN. DNN is Tobo will tell you a story about that, Pablo. DNN is yeah. Yeah. GNN. Some stories about that. And CCJ, yeah, CCJ has been one of the common ones as well. The bigger ones, right? So, or maybe not, but those guys had earnings last week, CCJ. So CPTN is about to rip. Is it about to rip? Yeah, it's lacking, right? It's CPTN here. Mm, I mean, that thing is not. Why do you say it's about to rip, Aldrin? Why do you say that? The only reason I would guess that is because well, obviously it's slacking, right? Everything else has gone for a run, and it hasn't. But that thing has no interest here, not a whole lot at all, right? This thing, wow, it's been all day today, actually, all day long. Highs of the day on this thing, yeah, 11:22, and then okay, cool, yeah, she's been selling off, right? You are Dan. You pick up some Kruger calls. Okay, sounds good. Yeah. Those guys like to beat. Only concern is that it's sitting at a potential double top there, but those guys usually beat, right? So it follows the other one. Yeah, it does, right? But for some reason today, it's just been just not having it, right? Not having it at all. Holding, yeah, light, yeah. As long as that thing stays above $5, right? It should be okay. It should be okay. No, I like to scalp the main one, ISPO, Audrin, because there's some volume here. Well, it moves, right? So, and then when it moves, he makes some nice little gains. Announce a share buyback. Vuzi did announce a 225 million share buyback. Vuzi, so Vuzi is another one of those, right? 12%. Ooh. Um. Okay, cool. There we go. Some news. Yeah, Vuz is another one of those. 50, 60 million. Okay, cool. These guys announced a share buyback, Pablo. Wow. I mean, for you just don't see like stuff like this from a smaller company, right? That's the you just don't see it from companies like it's just don't see from like companies that are below stuff like this. Anyways, that's a nice little double bottom there at 550, right, for Vuzi. Interesting. And this thing can move as well, so you might need to keep a close eye on Vuzi. Vuzi. Interesting. S&P, yeah, not giving up, guys. SPY says nope, not today. No dips. INDO wants $20. Wants $20. Let me take a look. Ooh, not bad. Good, nice. Highs of the day, yeah. Just be aware, just be careful here of this 1330 level. That previous double top, right? But again, your main level of resistance here is 1350. Is Jiffy Lube public? I don't think it is. Maybe on the parent company or something, but I don't think it is. The INDO looks good. Wow, 22% today. Yep. Double bottom, well, kind of at $12, right? Oh, that looks good there. Oh, highs of the day, guys. Highs of the day, right? That looks good. It's amazing how like good Nordstrom looks. Last, oh, bless your heart. It's amazing how that thing looks, like how good it looks. Nordstrom, like how consistent it's been. It did, Roger. Okay. What do you know about ABSI? I just got a text from a friend telling me to keep an eye on it. ABSI. That name sounds very familiar. Very familiar. So we're getting somewhat of a double top here on INDO, so be careful, right? Filled at, oh nope, there it goes, right? So 1350. Let me take a look. We can come back to IND also. AB. So this friend, right? Track record is this friend, Hugh. Are they usually reliable? Have they given you information before? What did they do for a living? All the questions. This thing is I mean, this news would have been nice at $6-7. You know what I mean? We're approaching resistance here at $10, right? So I'd be waiting for that thing to clear 10 first, and then consolidate, hold that level, and then go from there. 24 minutes ago, Pablo. Thank you very much. Yeah, that's amazing. Interesting. Yeah, so $10 here, resistance, right? Initially support, like a really good level of support at $10, right? But once we break below that, it's now resistance. So it's gonna need to clear that $10 level here and sit above it, and then confidence. AMC is changing the ticker to pop. Imagine if they did that. If AMC changed their ticker, I don't know what to say. Anyway, so Vuzi. Oh, wow, these guys are AB. Okay, these guys report earnings. All reported earnings today. Whether they did it seems like they report after the close. It seems like I only eat popcorn in a theater. I only eat giant sub at the zoo. Yeah, that doesn't look too bad. It doesn't look bad at all. It just needs to clear resistance, or I'd like to know why. If someone's gonna tell me why I should be paying attention to, I'd like them to tell me, give me a reason. IMPP here. Give me a reason. $2. Okay, nice. That looks good. Oh, $2. KSCP, one of our favorites. Ooh, is this thing ready to bounce now? Are you guys ready for this bounce, Dan, Hugh? Are you guys ready? I mean, we did it last time, right? We did it last time of this level, of the same level, right? Initially once, second time here of that $6 level, let's say $6, right? Of that level, pushed all the way to 10, right? And it's trying again here. Green today. So this might be a reason is moolah. The reason is moolah. There you go. And there's the pop on Nordstrom. Yeah, that thing looks amazing. Wow. You could just tell that thing was about to get another pop there. It's very consistent. Coin will be a popcorn design. Into support area on Vuzi this afternoon. Hold high today is 588. Pablo, okay. He's given me some good tips in the past, but I trust TA and DD. Gonna dig in. Okay, perfect here. Yeah. So it doesn't look bad. It just needs to, right? To red purple DWAG. Yeah. DWAG is gonna be forever a volatile stonk. Forever, forever. Forever, 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 guys. Yeah, again, KCP might be finding a bottom here, so we'll keep a close eye on this name. Hopefully, you don't miss it again, right? Yeah, that thing clears like a 17.25 there. 17.30, this thing might start pumping again. Not 17.7, 7.30. So that would be a next level of resistance, main resistance. So that's interesting. Sky H. Specs and specs, guys. New highs. Wow, wow, wow. Yeah. Is it? No, it's not halted. Volume slightly. Share small float. Yeah. From wait, this thing was at $13 earlier today. 13 to 18. Wow. $13 to 18. Wow, wow, wow. That's impressive. Every time it goes high, it will drop $8 to $15. Okay. High. Sky high. Sky Harbor. La, la, la. At 45, you sold at okay, 45 to 100. Okay, nice. Tom. Yeah, I mean that thing is just going 18 to 1865 now, right? It's pumping. $20 was the level we looked at last week. Yeah. Let me take a look at the daily chart actually. So, for this thing here, well, this thing was at $20 last week. Interesting. Is it just hitting all-time highs? Yeah, it actually is. Yeah, so 20 would be a next level resistance. Yeah, this thing's hitting all-time highs here. Again, I know we were, yeah, that thing ran last week. Yeah, ran last week, came back and tested the moving average and held it, right? Moving average hold and then slow recovery, right? So from 16 back to that moving average and then pump again. So usually a good sign. SPAC day again, Martin. It's only your fifth mention. I know you. I know. I know. I know. Slacking, slacking. You wanna back in on spy calls? Okay. Spy calls. Yeah, no, Spy's done well today. Yeah. Oh yeah, look at that thing, guys. $19 now. Right, Sky for Sky H here. That's impressive. Impressive, impressive. Wow. What else do we have on here? Okay, that's the S&P. Yeah. Uh-oh. Almost $20, guys. Uh-oh. When FOMO? When FOMO into Sky H, guys? I'd like to see a dip, but when FOMO? That's the question. To be or not to be? To FOMO or not to FOMO? Wow. He says, only my fifth mention. Again, guys, don't forget to smash a like if you haven't already. Hit that like, hit that subscribe if you're new to the channel. And yeah. Some spy calls. If you're looking for spy calls, I'd like a nice dip, right, Robert? So I don't like to buy spy calls when we're sitting at highs here. Just below resistance as well at 440 big level. I'd like a nice dip. Sky H looks really good actually. Wow. No FOMO. No FOMO, no FOMO, guys. No. La. La. There we go. Getting shinier if you want to play earnings. Getting shinier, shiny and shinier. Yeah, I'll take a look at like all the earnings plays, like the last, at the very end, like the last 30 minutes. I'll take a look, and then make a decision. Make a decision. Yeah. Again, it'd be nice to get a dip to something, something concrete here for the S&P, right? Because these pumps like all day long are very scary. Because tomorrow, next thing you know, we're crashing, right? Yeah, that thing just broke $20, guys. Sky 8 said, see ya. Bye bye, right? Oh, wow. Uh oh. Uh oh. 81 said, uh oh. Wow. That's impressive. $20 already? Yeah, it's going. AMC is dipping. The S&P is dipping slowly, right? Sky H no care. Well, right. Hugh says, let's go, let's go. At $1.60, you're in? Yeah, I remember that thing at $1. Like trading, scalping that thing at $1. Like that was its favorite level like a year ago. It would come back to $1 and then 130 and then yeah. 20 dollars. Can we get a dip? When dip, guys? When dip and then back to $20, right? That's the question. When dip? Q when dip? No, no. I know we ignore a lot of let me log in here again. It's been a while since I scalped anything. Let me see what's on my rubbish list here. Let's see here. Let's see. There you go. Yeah, let's see if we can get a nice little dip here on Sky H, right? And then push for $20 again. Been working this thing all. You've been working it all day. Hugh, I know you have. I know you have. Jess, what's your position in SoFi? What's your position? Give me some details. Are you in? Are you out? I'm in at this price. What's your question? We've looked at SoFi quite a bit today. Quite a bit. So, give me some details. Is out for today. Many companies. Then the weeklies. Okay, yeah. He says I've been working it all day. Working it. So 20 is gonna be a huge level, right? So just to hold above 2020. Let me take a look at some DMs here. Maybe Tesla. 72. Let's go in. 27. When dips to $18. When dips to 18. Give us $18. That'd be a nice scalp, right? $18. Don't think you get that though. Maybe. When dips to $18, Hugh. S&P is bouncing off this support, right, guys? Again, that's another double bottom there for the S&P, right? Same story last time, same story now, holding support. So it does look good. Looks really good there. Tesla. So you're still holding. You're in Tesla at 870 something. Okay, let me take a look here. Let me take a look at Tesla. Tesla. What is 1 second. Tesla. So Tesla should be bouncing here with the S&P as well. I'm going to add another chart here to the screen and take a look at Tesla and then get rid of it. So Tesla, BBIG is still at 250. Okay, cool. So Tesla, TSLA. So you're currently right in that position again. Like same story for Tesla. Honestly, Tesla should be doing a lot better today, but it's not. So it's bouncing with the S&P here, which is fine. If Tesla can hold above this 60 level here, you should be okay, Tom. Right? If we can hold above 860 here, you should be fine. Right? It needs to go with the S&P. My only concern is, on one hand, S&P sitting just below resistance there. It's been running all day, and Tesla hasn't, right? And then on the other hand, it's holding support at 438, right, which is a good sign as well. So watch the S&P here. I'd be watching the S&P here closely, right? If this thing breaks below this level, yeah, Tesla's gonna say bye bye, right? If this thing pushes for that level again, Tesla's gonna do really well, right? So for now, we're just in the middle. So that's what I'd be looking for there, right? There you go. So yep, that thing bounced already again, right? No 18 says $18. Who you 18? Nah. cannot tell you. All I can do is play cautiously. Exactly. Honestly, Hugh. Right. Honestly, that's all you can do. All I can milk it for what it is. Willing to give. Exactly. That. What else do you want to do, Hugh? Like with these packs, what else do you want to do? Right. That's all you can do. Just milk. Right. Yeah. It looks good here. Right. If that thing breaks above 20, that high again there, that thing can really start pumping. But for now, we watch it carefully, slowly, and see if it gives us anything here. See if we get anything out of that. Na, na, na. So yeah, so Tom, you should be good, right? So you want more. Yeah, if that thing breaks above 20 again and breaks above the high and doesn't create a double top there, that could get exciting. It could get really exciting there. So we'll see what it does. Nordstrom is sitting at $27 now, still looking very good here. Wow. Wow. Well. Hey, Crystal. Hey, yo. Sorry for the delay. That's okay. Busy day. Okay, no, that's okay. These days, yeah. I missed anything important? Not really. So we had what do we call this here? The House Committee meeting with Powell speaking. He talked about SWIFT and Russia and cryptocurrency a little bit, right? But the market's been pumping all day today, honestly. Like all day today, the market's been pumping, which is impressive. AMC is back above $18 here as the S&P is sitting at the highs, 438 or 439, which is madness, right? So yeah, the market is done well today. Yeah, so what's Bitcoin at now? Bitcoin is currently at 43.6. So Bitcoin crypto's dipping, right? So crypto's dipping here. So dipping a little bit. No. INDO, Craig. INDO. Okay. INDO. Sure. Let me take a look. INDO. So Tesla's trying. Tesla's pushing for 866 again. You take a look at Tesla, Tom, right? That's Tesla right there. And this is the S&P. Same chart, right? It looks exactly the same. So as long as this thing is performing well, Tesla is trying to go as well. Tesla's back to green here, right? So, yeah. INDO looks like nothing yet, right? We talked about this level earlier, right? Let me zoom out a bit. So we broke above it slightly, right? That double top from the morning, that 1330 level, hit it, failed to close above, and then sold off, right? So it needs to get back above that and push above 1350, and then just keep pumping it and keep pumping it. 19, yeah. You might get just be careful, right? Just around $19-20. Be careful with the FOMO because we might get a nice dip here. A nice dip. Absolutely, Crystal. Oh, Jess. No, it's not. It's not. That's okay. That's okay. That's okay. Nah. Come on, Hugh. Sell half of your position so we can get a crash to $17. Like, quick. Give us a crash. Give us $17. Hugh. Just one quick dip. Not asking for whole lots. Just one candle. Not more than one candle. Just one to 17, and then pump it again. Or late to the party, aren't we? What time is it, anyways? Okay, cool. So 2 hours left. 2 hours. 2 hours left. We're gonna need something here. Good days of the $1 level. SYTA. Yeah, SYTA. Beth is your rubbish play, right? Your rubbish play there. That thing's been really annoying for you. So really annoying for Beth. SYTA. Come on, Spy. What are you gonna do? I feel like we're just waiting to see what happens here, and it's not really giving us anything. Not from the start. Yeah. No, that thing's just holding $19, saying dip. Yeah, no thanks. Hugh told you 5 times, you didn't listen. No, Hugh, I just completely yeah, that's nice. Uh-oh. Or let's see if this thing breaks above this moving average, or if it fails above. If it fails here, you're gonna get a nice dip, a nice dip. Got a small scalp, $1.15 bounce. Joe, you did? Okay. Small scalp, 115 bounce. Hold the weight. Okay, so you're in at $1.15. Okay, good. Okay. I'll take a look. 1 second. I'll take a look. Just getting some glitches here. Let's see RBI. Yeah, just don't go right in that position, right? So like just slowly build confidence again, right? Whether it's a 1 cent scalp, a 2 cent scalp, like anything positive is amazing, right? Just to build confidence and then keep going, right? Like anything at all. So anything at all. Yeah, it failed at that moving average, right? And that's what we're looking for there. Failed and then retraced. So until that thing can break above, wait for those dips, right? And here comes the dips. The biggest. A tweet there from someone? Okay, cool. Thank you. Yeah. So see if we can get a dip. FOMO. A 10 cent scalp, Joe? Exactly right. Yeah, absolutely. No, that thing's just, again, even though we're dipping here on this, is a little bit delayed because that thing's just holding $19. It's just holding it and holding it and holding it. So that's impressive. 87. AMC, yeah, AMC still above $18, which is nice. And just had a nice little pop here for AMC. Nice little pop. You out? Okay, waiting. Okay, sounds good. I will warn you. This is sluggish with its response. I'm afraid it will not instantly shoot up, but who knows exactly, right? Yeah, exactly, Hugh. It's a slow stonk, slow stonk. It's waiting for that push above $20 again, Hugh, and just to see what happens there. Just to see what happens. 60. Yeah, it's currently struggling with that moving average, actually. Currently struggling with it. Come on, Spy, give us a dip. Like, what's all this pumping here? Give us those dips. It's a airspace. Wait, that just came out now. No more games. Let me see here. No more games. Another day. I don't unless it's quick in and out. Star. Yeah, absolutely. Hey Bill. Hey yo. Hope everyone is making gains. How are you, Bill? How's work? Bill is back to work. How's work, Bill? How's work? And there's that drop, right? So come on, Hugh, give us $17. We want 17s. You're looking for an entry into ISPO. I mean, that entry was the entry would have been $50, right? $50 would have been the level earlier today. So I don't know if you missed it or if you're still gonna get that, right? So I just like looking at the volume with these candles on a different platform here because TradingView likes. I just like looking at like the selling pressure and all that stuff, just to see what people are actually doing, right? It's really yeah. So there's a question here. Ooh, AMC loves that actually. AMC loves right? AMC loves that Bill is here. Look at that. AMC says Bill, 1845, right? Holding $18 again. That's all you can really hope for. Hold 18, right? Keep holding it. And that's a huge win. Huge win. So hold the line. Need a boom boom so I can day trade with you and the other whales, Bill? Yeah, absolutely, right? Absolutely. No, AMC is doing well, especially with the S&P sitting at the highs here. Is doing really well. Says work and suck it. Oh, no. Need to quickly sign in here again. Unbelievable. Get out of there and into that. There we go. Look at the S&P, guys. Like, look at that, right? And AMC is just eating it up. AMC says, let's go. Let's pump it. AMC looks good. Is it okay if I post my YOLO? I'm buying 50K worth of Astra. Earnings is March the 14th. You're buying $50,000 worth of ASTR. Basically 15K shares at 336. Go into stream earnings in your reaction. Yeah. Okay. Cool. I mean, yeah. Your YOLO. I mean, if you're YOLO 50K, that means you're rich. You're rich. That's all I'll say, right? YOLO 50K YOLO. Wow. Has a history. Of nothing else. But wow. Yeah, rich. 50K YOLO, guys. With the gains, nah. Gamble on ABSI. Okay, can't really find much on it though. Yeah, the source is vague. Yeah, unless you like gambling. Yep, right. Yeah, that thing can clear $10. It might not be too bad, right? Might not be too bad. Nah. Or maybe 2 hours. Do we see 440 today, guys, for the S&P? It seems like it, doesn't it? It seems like we're going to see that level, because the way we're just pumping and pushing for new highs here is impressive on the S&P. Seems like this thing is headed for some new highs here, which is crazy, guys. Yes, yeah, 440. Yeah, seems like it wants to do it, doesn't it, Star? Oh, yep. That thing said no more dips. Yeah, 18 would have been nice too. Like 18 would have been a really nice test, Hugh, right? But never quite got there. So just waiting and seeing here. No dips. The bulls in control, Roger. Yeah, they really are. Like that's impressive. Is today's Wednesday? Like it's Wednesday too, right? How impressive is that? It's Wednesday, and we're seeing all these pumping, all the pump here, right? So Wednesday, guys. Let me see here. It's Wednesday. Oh, you back above? Yeah, 1950. Bulls in control. Remember I called it display at 56 cents this morning. Watching it closely. Arjun, okay. NXTP. Yeah. Yeah. What should be a rug pull at the end here, Star? What should be a rug pull? Oh my goodness, we're crashing. Most likely not. Yep, and there goes Sky H again, right? Want to see that thing clear $20 again, because if it does, it might get really spicy. We might start seeing halts and FOMO and halts and FOMO. And we about buying a 440 calls on Friday, Blaze. Exactly, Bill. Exactly. Like 440 on Friday. Like, wow, right? I mean, even yesterday, Bill, right? If you bought these calls yesterday, you're printing. Why? Because the sentiment was red, negative yesterday, right? So the fact that we're doing this today, those calls would have been like an absolute zero, right? And then you're pumping today, you're printing it. Rockfall, is there such a thing as a Rockfall, Gary? Yep. Yeah, Gary wanted to pump today from Powell, right? Pump it today, so that's nice, Gary. Gary, do we wanna rock for tomorrow? Yeah, print it. Yeah, right. There you go. Oh, it's going, isn't it? Yeah, it's going. Let's see if we can clear $20 again here. No. All the dips. Dips for Nordstrom, no dips here. Dips for Sky H, no dips. Missed the one dip on ISPO. Unbelievable. All the nice scalps. You bought a 427 Biden pump? Okay, nice. $20. Is that where the bid is at? Is that where the ask is at? Let me see here. Yeah, the ask is at 2012 here. That's where the ask is at. So we'll see. My only question is when halts, guys. Yep, broke above $20, right? And it's about to go. When halts? Do we double top or do we halt? That's my question. You bought, yeah. Is Spike in clear 442? It's going to be a nice day. No more, yeah. Right. So I mean, it's if Spike can clear 440, that's impressive. 427 to where we are today, that's impressive. So 2020, 2024. What's the high today? 2050, 2059. Uh-oh. Do we get a double top or do we get a halt? That's the question. When halts, cover on 2050, right? 2050, 2059. Are we halted already here? No, we're not. Do we get a double top or do we get a halt? That's my question now, right? Right there, right? Do we sell off? Key level here. I mean, we're backing off a little bit, right? We hit that level and backed off 10 cents here. The question is to pump or not to pump. Well, that was our dip, guys. That was a dip. The dip came and gone. How high can Sky? I not sure. I not sure why, because it's sitting at all-time highs, right? It's never been to these levels here. So you want to be careful with that, of course. But oh, when halts, Hugh. Is the bid really at 21 something? Wow. Yep. When halts. That's the question. When halt. That's the only question to ask. 21.18, guys. Yep. When halts. The bid is not $21. Impressive, right? Don't FOMO, guys. Go on, Bill. It said bye-bye. Hi, my name is Moon. I don't belong here. Gone. Right, so that looks really good there. That looks really good. Ooh, I might need to get rid of I want to get rid of a position here, actually. Something. La 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 la. No, that thing needed a little bit more of a dip on that. 20. Wow, highs of the day. Never halt on the way down. On the way down. Nope. Finish it on the way down. La la la. Have a limit or is it new? What do you mean a limit, Martin? There's no it's a spec. It's one of those specs, right? So there's I'm not sure what you're asking in terms of like yeah. See we can DWAC Sky H. See we can DWAC it. Again, like I don't like I wouldn't FOMO here. I'd like a retest at $20, right? If this thing retests $20 and starts pushing again, it might be fun, right? Also keep in mind that you're approaching the final, like the second half, like the last 2 hours here, when people take profits, right? So be careful. Like FOMO, be careful, please. Right? 25, yeah. All right, you. Yep. 25s. When dip, Gary, when dip is the question. Ooh, 91. Okay. 150, 80. Cool. There we go. Here comes the dip. Comes the dip. The dip of the dips. So we can debug this. Is what you're asking? I don't know what to tell you. Is anyone in this? Yeah, Stefan. Yeah. Learning curve. TRVI to the moon. You asking me if it's going to the moon? Lockheed LMT. Lockheed Martin for war is what you're looking at. I'll take a look. Are you in it already or are you looking for position? Let me know. Give me some details and I'll take a look. Are you in it already or are you looking for position? What is your Hugh? Hugh is looking for $25 in that thing, right? So 25s. Again, this is what we're hoping for, right? If we tested 20, if we can confirm hold 20 here, that would be impressive. That'd be a really good sign, right? And then a turn around and pump again, that'd be a really good sign. So, I need to get rid of a short position here. I'm confused because I need to maybe look at that, but I also want to get rid of something else here. Here you go. Just need to get rid of something there. And then I can come back and take a look at Sky H. Sky H. Sky H. There we go. And my short position here is... One second, guys. I just need to close out a short here. Buy to cover. Buy to cover. One second. Just delaying here. Come on. Here we go. Buy to orders. There we go. So that's closed out here. Coming. There we go. Here we go. And there we go. Closed. That thing's halted on the way down here. Oh no, guys. Oh, do we form a double bottom here? Do we crash now to 17? Still a nice build though. We'll look for re-entry on Sky H. Oh, you took profits? Okay, nice. Let's see here. We'll look for an re-entry on Sky H. Okay, cool. Yeah, right. Let's see if this thing dips to Can we get our? We wanted $18. I'm gonna get an order ready actually. So we're sitting at that level there. Get an order ready. See where that thing opens up at there. There you go. Iran, ISPO. Okay, let me take a look. S&P is dipping here, and so is everything else. So 66. Let's see here. ISPO. It's halted. 58. Yeah, that thing's done well. Pushed to 66. $66 for this. It seems to be following. Actually, this is following this here, right? You have 4 shares at okay, you do Steph. Okay, I'll take a look. 449. Okay, I'll take a look. Wow. There you go. So LMT here. Lockheed Martin, your war name, right? 14 shares at 449. So you're currently red in that position, right? But this is most likely a longer term play for you, isn't it? Right? You're looking at, let me see here. Yeah, this is tough. This is tough because if you take a look at the last few trading sessions, people have been pumping this name with the expectation of like all the issues that are, everything that's happening, right? With everything that's happening, seems like this name's been pumping. So you're in at, actually, you're green, 44. No, 44.9. So you're slightly red in that position, right? So 449, yeah, you're slightly red in your position here. You're going to need it to keep pumping here. My only concern is that you bought this thing on the way up. Hi, Slow-mo, right? You bought this thing at all-time highs, almost. Yeah, you bought this thing at all-time highs, right? Almost at all-time highs there. So that's the concern. As you bought it on the way up here, it's gonna have to dip at some point and find support and then go again. But for the most part, though, this has been a good long-term play. It's always done this. It's always highs on highs on highs, right? Just make sure you have a plan in terms of like your stop loss and whatnot, right? Something you're willing to lose. But I just think you FOMO'd a little bit, right? I would have liked to wait for a dip. Would have liked for you to wait for a dip here, anywhere, right? A nice dip. So yeah, that's tough. But again, this is a good long-term play anyways. It's done well. Always seems to be a higher and higher and higher. These guys always seem to do well. Anyway, so let me go back here to the S&P as we are. Yeah, S&P is still doing this thing there. And the other name, still halted, guys. Still halted. We're waiting. Are we gonna open at $17, $16? Where do we open here? Where do we open before we pump again? Right. So 2 hours left here. Can we get another? Can we get a nice dip? Scary dip. Oh, let me see here. Mm. No. Can you look at BBIG slow-mo? Yeah, we've been looking at BBIG today. It had a nice little run today, and then gave away the gains. So BBIG again needs to go. We need some type of PR or something. You bought it. Let me go back into the stock market today. I need them profits once. Yeah, you need that. 10 to 20%. I mean, if you're looking for 10 to 20% on Lockheed Martin, you'd be waiting for for a bit, right? So is perfect entry for calls if it gets there. For Rivian, yeah. SPY. Unhalted, guys. Are we unhalted? No, we're not. That's just the S&P pumping. Oh yeah, no, it's unhalted, right? Let me see what these bits look like here on a regular thing here. Are we moving up or moving down? Okay, slowly recovering. Slowly recovering. I just want to see where these bits like settle at. See if we can find some type of support anywhere before we make a decision here. It's not gonna give us a dip, is it? Maybe it is. Oh, here it comes. Here it comes. Give us 17, give us $16, give us a fat red candle. Whatever you want. We're ready for a quick bounce. So we'll see. Hugh, are you back in or you're just watching for now? Are you back in? No, it's again, it still looks questionable to me for now, right? It still seems like it wants to go lower here, so I'd be waiting. Maybe a double bottom here would be nice. Something, right? But confirmation. A little bit of confirmation somewhere. It's all over the place, actually. It's not quite settled yet, and that's my concern. This thing can just like crash and halt and bye-bye, right? So that's my concern. Let me see here. Let's see. Let me see here. Yeah, just watch for now. Plugging at 1777 is what you're looking at. 1777. Okay, sounds good. Power hour for SOFI. Yeah. Do we get a dip or do we get a pump? Not ready. I mean, it seems to be, again, like he really does seem to be forming a double bottom, which is nice, right? Double bottom, right? So if we can do that, that'd be cool. The S&P just dipping, like S&P just selling off, which is it's just selling off here. And AMC isn't liking that, of course. Here we go. $18. Here we go. 18, yeah, $18. Okay, cool. Looking for 7. Here it comes. I'm gonna get an order ready just in case we get a massive nice dip here. Let's see here. Let's see. So order. Give me 17 maybe. In seat other than you. Yeah, there are a few people. Like I'll take a look, money. I'll take a look in a bit. Time to go shopping on what? On this? We're going low, unfortunately. On what? 17. Dip it. Here it comes. Here it comes, you. 17 with the stop loss. I think. Oh wow, that thing dipped way below 17. You know what? Maybe this is a no go. Maybe this is a rock pull, guys. 16. Yeah, that thing is not holding support anywhere. So I'd be careful here. I might just have to close out this order here, honestly, because that thing looks scary. Not about to do that. Let me see here. Yeah, I think we just close out this order here. No. Yeah, onto that thing settle somewhere. Spy is dragging it down. Yeah, look at that. Look at the S&P, guys. I mean, like it's funny though, right, Chris? Because this thing is dropping. It's like it's dropping, but it's still like still holding its nice support here above that 438.30, which is impressive, right? So it's still holding. Like it's that initial double top resistance, right? Broke above it, like, and then now it's pumping and dropping. It's like it's undecided here, but it's still holding, which is impressive, right? And what's this thing doing? Yeah, see if we can form a nice little base here at 17, and then maybe there might be something here. But for now, that looks scary. Oh wow, look at where the bid is at now. 1620. Yeah, okay. Uh, goodbye, rock pull. It's a rock pull. When rock pull? Well, here's a rock pull, right? Did we double top? Yeah, kinda. Wow, these sellers are aggressive. Actually, 1650 might be the level to scalp this thing off at, like right there ish. We're sitting around that range, but that might be the level to watch here. Yeah, might actually not be a bad level. Spy, no options. What do you mean? Oh yeah, look at that. Look at spy. I mean, this had to happen at some point, right? Had to happen at some point. So S&P is dipping it into the close, saying when you dip, I dip, just like that. Yeah. Does it have a comeback? What does this? Most likely. I bet you we're gonna get one more pump before we close out the day, right? So the question is, how low do we go before we pump? Right? That's the question. But I bet you there's one more pump here. Question is 1650. We're sitting at 1680 for now, right? So do we dip a little bit more before we bounce? That is the question. 37, just below 38. Musty. Okay. MMA. Oh, you're asking about MMAT. Does it have a bounce? Josh can answer your question in the chat. Everything has that. Everything can. The shorts are killing SOFI. Yeah. $17s have done well for Ford. Yeah. $17. Oh, let's see here. The shorts. I mean, again, the issue with like some of these names, Jack Jess, is that when the market pumps and you don't follow, when the market sells off, these things usually get a nice dip, right? So that's the concern with names like SOFI and AMC, right? Because if they're not pumping, and then the AMC and the S&P dips, these names go down even further, right? So it's trying. I mean, it's trying, right? So for Sky H here, he was in already, guys. Hugh, Mr. Sniper, if you play, took a lot to get up. Very little tank, right? Exactly. Hugh, you're back in already, right? You're ready to pump it again. Hugh, we asked for 17. You gave us 17. So, well, it's just that we're hesitant now. We're very hesitant, especially as we approach the last hour and a half here. Right? That's the only concern there. Look at where like the bid and the ask, scary. 1670 and dropping. Here comes that 1650, guys, right? We talked about 1650. I mean, this thing is but we just don't want to just test 1650. We want to test and hold it, right? It's not doing anything. Yeah, that thing looks scary. Noir says good morning. Good morning, Noir. How are you? Noir, you missed the entire day of like rubbish, of like your type of rubbish. Earnings I've ever heard and read. They did? Really? More than AMC? Wow, okay. Yeah, that's 1650, Hugh. play without a safety net. Exactly right. Yeah, that 1650 might be the level there. But I just be careful into the close. Be very, very careful. I'm sure we can get one more pump, right? But the question is, from where do we get that pump, right? From zero? You have tons of rubbish at work. Tons of rubbish at work. Is Biden speaking? I thought Biden was supposed to speak today. Maybe not. Again, the only thing we focused on was Powell today, right? And the House committee there today. So cow dump. Oh. 2 cents. 2 cents. 2 cents. 91. Yeah, that's a nice bounce. Nice bounce. Yeah. There you go. West Coast boys have things to do, right? Noah, West Coast, West Coast, Best Coast, West Coast, Best Coast. For 2 months to 70. It's been doing that for 2 months. Josh. Now from 53 to 73 is a nice swing play. Okay. West Coast, Best Coast. Yeah, that's actually not that's 1650. 1656. I like how we keep bringing this number lower. 16, $16. Gary just having the popcorn, guys, and watching, right? Popcorn and watch. Yeah, I feel like I might just watch too, Gary. I mean, I wanted to push back to $20, but I feel like I might just watch. Right? It's just what a dip! Wow, what a rug pull from 21.36 all the way to 16 something. Yep. It's trying to find a bottom there. If I don't get 17 on the next few candles, I'll have to abort. Okay, sounds good. Yeah, that thing needs to get back above 17 as soon as possible there. It needs to start curling. Otherwise, it might be done. S&P, yeah, that thing's dipping again here. So, let me see. Let's see. No. What 16 candles? 16 candles? I mean, he was watching all the candles. All the candles he was watching. Nope, it failed. It failed at that 17 there. I'm just looking at the volume here. Yeah, it's struggling. You might get a nice fat dip again here. Yep, here it comes, right? So, yeah, so just be careful there. Back to 1650 again. Just look at the volume, the volume which that all the stuff is happening with. Interesting. FOMO in? No, you FOMO on the way up, right? You FOMO on the way up. No one will crashing. This is a crash. Even though it's trying to hold 1650 here, that's a crash, right? So that's a scary crash. You got burned on what? On PaySafe? I thought PaySafe was up today, Virgo. PaySafe. Oh, is it back above 17? Yeah, it is. It's trying. Yeah, that 1650 would have been a nice little scalp there, Hugh, right? Nice little scalp. And then maybe run away. But yeah, that's not bad, too bad. Not bad of a scalp at all. Right? Why did we say this level? Because of that last dip, right? That last dip, bounce, maybe. It can do something again here. Maybe. We'll see. This thing is toying with you. No, just like it did the rest of the day. Yep. It's gonna do that though. It seems like one of those names. Like it's gonna play games before it moves, or if it moves, right? So yeah. So you're gonna need patience. It's a lot more fun, honestly, here when stuff is sitting flat like this. When we do this, right? When we sell off like this and we sit flat and we're slowly curling, that's a lot easier to play with. When you go for a massive run like this into the end of the day and you start dipping, that's really scary because you're not sure what to do with it, right? So it's not the same. You like it? Okay, sounds good. He says I'd like it. The S&P is back above that 438, guys, which is good. 438.30, yeah, back above them, back above that moving average as well. So that's amazing, right? Oh, you got in late. You didn't follow the rules? Okay. It's amazing though, Virgo, right? Because when you mess up, when a trade goes against you, You know you did something wrong. Well, for the most part, not always. For the most part, though, right? So, which is interesting. Is it following the S&P now? It's moving with the S&P. We know it doesn't. It does its own thing, but is it moving with the S&P there? Yeah, those bits are still below like 17. SPY. What's no okay, Nostrum is back to 27 as well. AMC is holding $18 still. AMC is only red by 4 cents, guys. But with all those negative earnings, AMC is only down 4 cents. So that's a win. That's a nice little win there. You have a problem? What's your problem? Uh what's your problem, Hugh? You like taking risk? Is that what you're saying? That's your problem? That's your problem? Risk taking? I have a problem. Let's see. Oh no. Here you go. Do you have a problem, Hugh? Risk taking. No, that's okay. That's okay. That's okay. I mean, you have a very nice roles. Like you're not falling into anything. You're locking in profits, right? So, for the most part, like your problems are good problems, right? No, you do well. You do really well. I like it. Right. So you got into this thing earlier. You took profits over $20, right? And right. So that's okay. Tom, what's your Tom? You have a problem too? You have a problem? Crypto is a swift alternative. H-bar is, and the weekend knowledge is power. Yeah. And here goes the S&P again, guys. S&P said, okay, you guys had your dip. Let's pump it again. Risk, you guess you can say that exactly, right? Is that thing still, yeah, it's still not performing, right? So it's still playing games here, right? It's gonna need to move here soon. Otherwise, this thing's done for the rest of the day, right? If that thing breaks below 1650 again, yeah, that's scary. Then it's done. S&P looking good. AMC likes that. AMC likes that little bounce. AMC 1838. So AMC is back to green. AMC is green there, and Nordstrom. Virgo, did you play? You sold Hugh. You sold Nordstrom, right? Your second scalp. You had a stop loss, right? I think you did. I think you did. Pump it. What are we pumping? The S&P. Yeah, the S&P looks good. You sold? Okay, sounds good. Where you played with it as well? Okay, nice. Playing with very small amounts on BABSI, and it's somewhat responding. It is? Okay. Yeah, that thing needs to push. It needs to push for that $10 level, right? Once it clears 10, like it's always nice to just sit at above 10, like psychological reasons, right? You sit above that level, you should be in good hands. If you're buying below, right? That 950 there, and it breaks above 10, then you're just comfortable, right? Just comfortable. Let me see here. Yeah, Audrey, H-bar. There's another one. We know XRP would be an alternative, but they're having legal issues, right? I bet you with all these, if XRP wasn't having legal issues and this was happening, I bet you XRP would be pumping as well, right? But they have issues that they need to solve. So XRP and then H-bar. I feel like there's one more. There's one more. I'm just not. Yeah, I think there's one more. It's having a high day highs. Dan, okay, I'll take a look. No. Let's see here. So that's Nostrum. Let me take a look at T-Tech here. T-Tech. That's actually really nice. Sitting at the highs of the day here. That's really nice, Dan. That's really nice. Interesting. Yeah, that looks good. Did you get back in, Dan? Oh, XLM. Yeah, XLM. Did you get back in? This comfortable. It's comfortable. Uncomfortable. Comfortable. Comfortable. Yeah. There you go. It looks good. Like it looks really good here to me. Let me see here. What does that look like from yesterday? Highs? Yeah, that looks really good there. So 350 would be a next level of resistance, right? 350 would be a next level of resistance for this thing here. But yeah, that looks good. That's a smaller time frame. Smaller time frame here. There you go. In AMC is back to red 3 cents. As the S&P AMC is yeah, when it's at 310, Dan. Okay, nice, good job. Off 110 would be would an awesome play. Yeah, I remember 150 when we played with 150, 145s, 130s, Josh. That thing's back to 110 now. Wow. 110. Oh yeah, the S&P looks good here. Looks really good. That's a really strong day. Looks like this is why I dumped after a good start to the day. BA downgrade, double downgrades. Passive sees multiple reasons for caution. Oh wow. I mean, like who like double downgrade? Are you short the position? Like are they shorted? Oh, what's happening, Pablo? Like double downgrades? Who gives a stock a double downgrade? Wow, impressive. I downgrade you, then I double downgrade you to go to 0. Might come back to Sky H at different levels. Yeah. What is it at now? It's 1650 here. Yeah. It's not performing, is it? With all that excitement earlier, it really isn't performing. $14 here we come. Oh no, $14. Yep. Well, yeah, we'll see. We'll see what it ends up at, right? 20 minutes to power hour here. We'll see what it does. We will see what it does. They love dovish power. Yeah, they do. They really do. Dovish power. There you go. No. Again, guys, reminder, don't forget to smash the like if you haven't already. Hit the like, hit that subscribe if you're new to the channel. And yeah, then go from there. Has found a 110 minus at 100. Volume is picking up on the earnings. Okay, sounds good. Let me take a look. DocuSigns. Docu. Remember when this rubbish crashed here? Wow, interesting. Yeah, I see what you're looking at, Josh. I see what you're looking at there. Not bad at all. I think it's interesting though, the fact that the market actually pumped, like the S&P pushed today and this thing never followed, right? Like the market pushed hard today, right? But most of the market never followed. Even Tesla never followed, so that's really interesting. For me, when like stocks don't follow, it's a sign of it's a sign of like the market not believing that these names are going to keep, that the S&P is going to keep pumping, and that's scary, right? The market is tired of going with the S&P pumping and crashing and pumping and crashing, right? Interesting. 110, 114 here, down $4 for the day here. Interesting. But honestly, Josh, this is not bad at all, right? That $100 would have been perfect. Just for like psychological level, that would have been really nice to get in at 100 here. Were we at 112? Yeah. I like that was sitting above 114 too, just that moving average. That's a really good sign. So interesting. Yeah, I think for like a longer term position, a longer term position, this might be a back. You're back in SPY calls again. Okay. You can say it. What am I saying here? All you can do is ask the lady to dance. She's all right to say no. Yeah, you're talking about Sky H. Yeah, Sky H is 1650. Yeah, it's not ready to dance, is it? Not ready to dance. $1.14, 114, not $1.14, $114. Interesting, Josh. Yeah, I don't mind that at all. Don't mind that. I'll leave it up for now. Again, the AMC loves this. Back up, 10 cents. Up, down, up, down, up, down. Not willing to dance. Oh, let's see here. La, 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 la. 15 minutes to power hour. I know we wanted to call it a day like an hour ago, right? We might. Let's see what the market looks like in 7 minutes, right? See what the market looks like. Then we can take a break. US oil to 110 now. Wow, Josh. Wow. Right. So let's give it seven more minutes or so, and then tired. Oil. Solar stocks plunged on Wednesday after First Solar, the largest US panel maker, said supply chain woes or rising costs will pinch earnings this year. Pablo, okay, yeah. Solar. Bet you that what does charge point look like actually? Let me take a look here. See charge point, CHPT. Interesting. We're sitting at this thing's been very stagnant at $14 here, Josh, which might make it a nice play, right? Gary loves charge point, loves charge point. Anyone got a 10% to end your day well? Yeah, you're looking for a 10% on 10%. Where can you get 10%? 10% at the end of the day, the last hour. That's a lot. That's asking a lot, right? Asking for a lot. You need a penny stock, one of those things that jumps 10 cents and you're up 10%. You need one of those. Yeah, I need one of those. It's a pump. You know what might be really good, Pablo? Let that thing sell off its earnings whenever they are, and then they might actually pull a surprise, right? Or the negativity might be priced in already. Go on, surprise me. I've got faith in you. Just go and surprise me. Surprise me with a 10% move. I am not sure. Not at the end of the day, right? I'm not sure here. IMC is gonna moon after hours. I doubt that, but I would love to see it. Would love to see that. Well, the S&P again still looks fine. 439. Wow, crazy. There you go. You break 10% is for IMPP. There you go. Right. CYRN is pumping. Okay. CY. There you go. See. This might be a 10%. This might be a 10% here. I doubt it, but I think needs $7 still. It's the same level that we've been looking at, right? But it's actually pushing here into the end, which is nice, right? It needs to get back above $7 here. Let me see. What do we have on the scanner here? Scanner. There you go. Not a whole lot that I like. BBIG is at over 260 again, Sthlm. Okay, nice, good. BBIG. Yeah, I think most of you guys are waiting. So yeah, 260, 262 here. Yeah, I think most people are waiting. Again, most of you guys are positioned already, right? Most people are in that are gonna, waiting for $3 here. Need some PR, and hopefully this thing can get us back above $3 and get us pumping again, right? So, again, we're not really watching BBIG a whole lot because we wanted to get back above $3, right? Can't be watching all those investments all the time, right? So some of them you just have to let them go. and come back when they're performing, right? So BBIG is up 8%, which is nice. Musty is celebrating, right? So yeah, this thing needs to get back about $3 here. Put to 11. You're looking for some puts for charge points. I mean, you could do for $11. Take a look at the put situation there, Deadly, and see what the option chain is. Says for $11 puts. If you can buy shares and sell after hours. Looking for AI, Josh? Okay. AI into earnings. There you go, BBIG. Come on. So AI is yeah, that thing's been pumping. It's been pumping, Josh. Since we talked about this stuff earlier, what was it at? 20, just below $22 when we looked at that earnings, the option chain there. This thing was below $22, right? And it's been pumping and pumping and pumping. So, yeah. I think people might be anticipating that these guys, they report some good numbers, or at least that they've sold off from $75 to $20, that they're gonna start bouncing here soon, right? That might be the expectation here. Only use a standard account. Okay, you can do after hours. Yeah. No after hours. Power hour in 10 minutes. 10 minutes. You have been? Wow, you've been stacking AI for a long time, Gary? Wow, Gary loves AI? Interesting. Yeah, we looked at the AI option chain, right? Let me see what that looks like now. Again, probably it's too late now, Josh. That thing's most likely gone on the option chain here. AI. So I think the last we looked at March 18 because that's all they had. Yeah, all those calls are up 10% now. Going into earnings here. Yeah, you'd be looking for something at 35s, right? But that's gamble there. Gamble. You can't stop buying spy calls. I mean, those calls are printing you money, right? So it's not letting you down. Does UPSD ever let you down, Virgo? That's the question. Does it ever let you down? Once you got to the 20s, Gary, okay, yeah. Hopefully those guys report some good numbers. A surprise, right? How about Tesla, Jackie? Wait, what's Tesla at anyways? Tesla TSLA. Ooh, Tesla's yeah, there you go, Tesla. Are you happy now, Tom? Tom is happy with Tesla here now, right? Back to a 872. Yeah, Tesla looks good. Looks good here. Where did we go to? Yeah, Tesla looks good here. Mercy's halted. Ooh, that might be something to watch. Why? Mercury. Okay, it's a 67. Yeah, that's an expensive stonk. I don't know how many people can play this. Right, expensive stonk. It's halted RS. Yeah, you know why it's halted? Education. You just checked. Okay, it's not on your broker. Okay, that's okay. Any love from Washington? No respect? No, absolutely none. Nope. Like Tesla? Too big. Too big. Rumors. Oh, okay, that's why. Okay, that makes sense then. So potential buyout for these guys. Watch them just get halted and not open until those rumors are clarified, right? No love. S&P is actually dipping. Wow, S&P is like really dipping. Yeah, I'm just concerned with like all these gains here today based on I don't know based on what, right? So did you There you go. So let me know if you have any last questions, guys. We can some things to look at as well, and then we can look at some of these names, some of these earnings names, if we're gonna play any in Discord, right? So we can chat about that in stock general. So again, thank you very much for the support. Don't forget to hit the like if you haven't already. Hit that like, hit that subscribe. If you want to come join us in Discord, right? The membership link is right here. But yeah, let me know if you have any last questions. 5% after Bloomberg says take over. I'm takeover. Okay, thank you very much. Thank you very much, Pablo. Thank you. Thank you. Thank you. Oh, that thing is. I think it's going. It's unhalted here. $68. Wow. Yeah, no details to that, right? No details in terms of like, okay, here's the price for the takeover, right? So you want to be careful, but that's really good news for them. Good news. Game still the 15-16, Gary, exactly, right? Exactly. So until the Fed interest rates and whatever, right? So hit the hit the center. Says hit the center. No, there's only 1 hour left. There's no center to the diamond, right? There's only 1 hour left. I just need to take care of something before the market closes, and then just need to call my people and say, my people, hey yo, what's going on? That's the only thing. You entered that at 290 of a C-Tick tail gel. Okay, very nice. Very nice. Yeah, just don't let it. Yeah, Darren says yeah. Just don't let it give up below $3, right? That would be my only advice for you. From US. Yeah. Okay. Interesting. Yeah, that looks okay, right? It's pumping on a on a buyer deal with no numbers, right? So just be careful. Stocks, entertain. Oh, that's why your membership. I think that's why your membership wasn't working. Right? Spending everything I have on Russian stocks, you're gonna be a YOLO a YOLO garg, a YOLO garg. Yeah. Again, we talked about that yesterday on stream, and quite a few of you guys got some Russian banks, right? So be careful with some of those because they're getting liquidated, right? So be careful with some of those names. Just be a little bit cautious, please, and thank you. A YOLO guard, he says. La, la. What's Virgo doing? Virgo never got out? Wow. Wow, Virgo. Let's see where it goes. Yeah. Virgo's been making these 165 million contract. Okay. Yeah, like the thing to education is like once these guys once there's a price target for the buyout, it just sits there, right? If it's $68, it's gonna sit here and just not move at all, right? It's gonna move up a few cents here, 50 cents here and there, which might be nice, but yeah, just want to be careful. Yes, comrades. Yes, comrades. Damn it. You love AMC? Love it. I mean, AMC looks fine. It's holding 18, and that's all we can really focus on for now. These damn glasses hurt my glasses. Let's see here. Yeah, no, the S&P is dipping into the close here. We're sitting at 438 now. We might see a sell-off into the close, which is unless you like losing at the casino, pass me the dice. Roll it and throw it. Right? Roll. Nah. It is Corey? Okay, sounds good. It sounds good. Yeah, I just need to make like some TD calls, and then I'll look at some of these names in Discord, right? So alrighty, guys. Alrighty, so we're gonna leave it here for now. Again, if you have any questions, just ask in Discord. Someone's gonna help you. Robert says this is always business, right? Always business. So again, hit the like. I got you, Virus. Hit the like, hit that subscribe, join us in Discord, and we will see you guys later, right? We'll see if we make any earnings plays. I'm sure Josh is gonna post some of that stuff in Discord. Some of his YOLOs, and his right. So earnings plays. Damn. Thank you very much. Do we have a nice play for the close, Sonny? We're looking at names like ChargePoint, AI, earnings calendar here, right? AI, So ChargePoint AI there. What else reports? I know some of you guys are looking at Victoria's Secret, right? So some of the names to watch. INDL squeeze. Okay, I'll take a look. Virus, thank you very much. Sia. Martin is squeezing. Corey, check out. I'll take a look at Discord. Have an exit plan. There you go. Just have to make some calls before the market says bye bye. Right? Says close. So we will see you guys in Discord. It's halted, Martin. Oh no, I'm gonna have to take a look in Discord. So yeah, again, thank you guys very much. Have a wonderful afternoon. We will see you guys tonight and tomorrow and whatnot. There you go. So thank you, Kurt. Thank you, Virgo. Thank you, Hugh. Thank you, Noir. Work. See you guys. Bye, guys. Bye for now. Bye. Bye all. See you guys later. Ready. Bye.